Check 1, 2. Hopefully I'm live right now. I'm not sure. Let's find out if we're live. Good morning. Stretching walls, what's going on, baby? Let's go right into it this morning. How's everybody doing today? So yeah, I'm gonna have a stream up this morning, although I don't know if I will be here most of it. I'll be here parts of it. But I was asked last night to put a stream up for the inflation reports. Good morning. Hang tight one quick second here. So it's not 8:30 just yet, but I wanted to put the stream up early because I realized that we're getting busier, right? We got a bunch of stuff coming up. Hold on one quick second here. We've got a bunch. Hold on a second here. It's weird. I'm having some issues with. Give me one quick second here. I got some stuff I got to do. I got some good news for you guys. Good morning, everybody. I got some good news for you. So we'll talk about that this morning as well. Morning, everybody. You're all doing well? Jill Natolo, good morning to you. Good to see you. Spyplex, good to see you. One quick second here, guys. Save all this. All right. One quick second here. Good morning, everybody. I got some good news for you guys. Oh boy, do I got some good news. You guys want to see? You guys want to take you want to take for a spin around the block? You guys want to see what's up? Hold on one second here. I got a couple more things I got to do here. I'm reading what you guys are saying, I think. Hold on one second here. So I've been diligently working in the background, all this fluff and stuff and talking, and we're actually ready. We're like right there. So we've got people, we have members right now. We've got admins and moderators that are testing the tool. And we got a bunch of stuff going on in the background that is wild. So we'll take a look at the tool. And the funny part is we've got more work going on with the tool. So we're ready to launch the tool, and then I've got a whole bunch of other stuff that isn't launched with it, but which is awesome, or isn't ready to launch. But once that's ready to launch, it's gonna be awesome. Yeah, baby. You guys want to see it? You want to see the hand? You guys want to see how it reacts? You guys want to watch it really quick? Hold on one quick second here. So what do we got going on with what's going on with today's earnings calendar? I'm looking at the calendar for the next 2 weeks, and I was on the phone with Binky yesterday morning, and I'm like, let's go through all this stuff, and it was like boom, 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 boom. We've got 4 witches. We've got Vixpiration, we've got the Fed. We've got CPI at 8:30. So I'm leaving that up for you right now. And one quick thing I got to take care of here. I got some stuff I got to do here in the background. Give me one quick second here. I got some stuff I got to do here in the background. Give me one quick second here. Get some. See here. Got some light housekeeping stuff I got to take care of here. What do we got here? I don't know. I don't always know what I'm doing here. I'm like, I think I know. Just when I think I know what I'm doing, I don't. Let's see what I got going on here. We have no idea what I'm doing. I don't know what I'm doing here. No, close all that. That's really odd. I've got some weird I don't know what. Like YouTube is like the thing and not the thing. YouTube sometimes is the turn on this. We got the squawker going on in the background here, so we'll listen to the squawker as those numbers come out. Let me see if I can pull up. Nope, I got to do one more thing here. How do I do this off screen? I don't know. Let me take a look. I'm having really weird YouTube right now in the background. I guess I'll have to do that later. You're sitting here in unmoving traffic. Thankfully, today I don't have to bring my kids to and fro school. I got some real wonkiness going on Bookmap.
So in 10 minutes' time now, at the bottom of the hour, do get the US CPI data for the month of August. So this is the headline event for the day and for the week. So US CPI year over year forecast at 3.6% from the prior 3.2%. Range of 3.9% to 3.4% expected. Month over month forecast 0.6%, prior 0.2%. Range of 0.7 to 0.4% expected. Then for the core CPI numbers, year over year, the forecast is 4.3% from the prior 4.7%. The range seen at 4.5% to 4.2%. And for the core CPI month over month, forecast is 0.2% from the prior 0.2%, range of 0.4 to 0.1% expected. So ahead of this, just going to we'll see a quick note from Wells Fargo. So they note that July brought the third consecutive monthly bump in headline CPI, sub 0.2% before the rounding. These softer readings brought 3 months annualized headline pace down to only 1.9%, that being the smallest clip since June 2020. So Wells Fargo notes that muted energy price growth explains a big chunk of July's modesty, given that CPI's survey captured only the very beginning of the recent upturn in gas prices. But even core inflation seems to be pumping the brakes, notching 2 consecutive monthly
All right,
upticks
let's
of
see if I can do this.
0.16%. These core prints amount to a 3-month annualized rate of 3.1% in the month of July, a steady progression down from the 4.1% in June and the 5% in May. So Wells
Morning,
Fargo
Camille.
there,
How are you?
they say they see the forecasted for core CPI gaining 0.18% in August, rounded to 0.2, equating to a 4.3% year-over-year rate for the core CPI reading. If realized, Wells Fargo said that the Fed would achieve its elusive 2% target on a 3-month annualized basis within core commodities and shelter, likely propelled the deceleration.
Good morning to you all
However,
out
Wells
there.
Fargo expects a roughly 10% jump in gas prices to lift the headline rate to 0.6% month over month, which would mark the largest monthly jump in headline CPI in over 1 year, bringing the year-over-year headline rate to 3.6%. So again, those were just some commentary from Wells Fargo ahead of the CPI release, again, at the bottom of the hour.
Oh, yeah, baby. What do we have going on here? What do we have going on here, baby? Ooh, what's that? Ooh, what do we got going on here for CPI? What are we looking at here? So at least on the 1 minute. So on the 30-minute chart, at least it looks like we've got trend going on right here. We're parked on the daily trigger. Hourly trigger is max bearish right now. What do we got here? Daily trigger's on neutral. Weekly's on bullish. You are long right here at the moment. We do have some data coming out. You know what else is fascinating right now, too, is that the weekly trigger has been steadily climbing as time has been passing to the upside. Right? Time has been passing. That's good to see. Can we get some more weakness in on these reports? Likely. It's showing. Daily trigger looks nice and strong, believe it or not. This is actually nice and positive for bulls. Could have some more downside, though. A half hour saying no. 15 saying no. But the hourly is saying could be a little bit more weakness coming up here. Or maybe a bounce higher. We'll take a look at that this morning at the 8:30 hour. One quick second here. Might be a little more. See how negative this gets. Got the ever present JPM caller. Do we make a run for the top into the end of quarter or not? Morning, Joe Donut. How are you doing, brother? Daily trigger, 5-minute trigger, 1-minute trigger, 1-minute chart. Let's go over to the 30-minute chart. Well, let's do the 1-minute chart. Morning, H-Bomb. Good morning, Binky. How are you? Keto Fall Rex. Good morning. How are you? Everybody's doing well out there. See you guys. Oh, yeah, baby. I'm doing teasing right now. Right in there. Three minutes to find out. Oh, good morning, David AMS. How are you all doing out there? Let's get rid of this so we don't have to see that. Looks like everybody wants to know what's going on in the market right now, right? Got a bunch of data coming in this morning. We've got CPI, core CPI, year-over-year CPI, core CPI year-over-year at 8:30. Market seems like it's on a precipice. Yesterday, early afternoon, early morning, I'd gone over the market with Binky, and, you know, it's on a precipice. It really is. So a lot of this data coming out is going to definitely impact the full direction of the market. Yeah, hi, Daddy. You got it. We got the we got the UB. There's no possible way that I would ever do USB without a or a port without having USB-C. I liked how it was spun too. They said Apple forced. I was like, yeah, they were, but it was like, this is bad news. Bad news. I was actually looking at Apple option chains with Binky yesterday as well, and we were talking about, I think the 180, like the I think it was 173 was the implied move on Apple this week. And then I was like, if you go to the next expiry for 180C, once the 180Cs for this week get down to like 10 cents, I'd be looking to pick up next week's 180Cs. You know, we need to see this morning. So this morning we need to see year over year below 3. I mean, that's what we need. If you're a bull, you need to see below 3. The previous, I believe, was 3.2. There's an anticipation that the read is going to be higher. There's an expectation that the reading is going to be high. We're going to have a bump in the road here. That's my bring daughters to the that's my bring daughters to school thing. Yeah, let's look at this on the trigger screen here. So the forecast was 3.6. Oh, 3.7. So we're actually up 0.1. That's pretty bad. 3.7 was the median forecast. Came in at 3.6 was the expectation. We came in at 3.7. And then core CPI was higher as well, I believe. Let's see if I can get these numbers really quick. So pretty bad this morning. So let's switch over to the main screen here and see what the reaction is.
There as well.
Not too bad right now.
Rising after that CPI data too, with the 10-year yield up 7.2 basis points at around 4.336%. Dollar yen ebbing higher as well.
444.32 trading right now. Not as bad as I expected at the moment. I was expecting more blood at this
US
point.
CPI
I guess
August
this looks
reports available on
nastier
the
here,
feed
but
for anyone interested.
slightly hotter reading than the forecast. Not good for bulls. They definitely don't want to see that. Trading 442 or 444.20 right now. This looks like a really bad bar, but it's really not too bad. This is bad news, good news. No, it's pretty bad news. Well, it's not. It depends on how you look at it. As CPI comes down, or excuse me, as inflation comes down, normally you expect 2 bumps in the road, maybe 3, somewhere in there. 2 to 3 bumps in the road. There was we already expected this morning to have 3.6 year over year. Came in at 3.7. So it's hotter than expected, but not crazy. Not crazy hot. Is it bad or is it bullish? No, it's most certainly is not bullish. It most certainly is not, or at least in the short term, it's not. And then in the long term, is it bullish? If we were in the inflation dropping cycle or fighting inflation cycle for where we are, you're probably going to hear people say higher for longer. That's bullish in the medium term if the Fed has more work to do and that kind of stuff.
US short-term interest rate futures down slightly after the August inflation report.
So I'd expect a negative reaction to it. But is it like roll the market down to 3,500? Bad? No. We were talking about that yesterday as well. Binky and I were having a conversation about like when is bad really bad? When we get to 2%, like when we get to 2%, like 2 months before we get to 2%, as soon as the Fed's mandate is fulfilled, I take that as
allows
bearish.
you to actually hear order flow in futures, forex, and stock instruments.
Of course, you guys don't. You guys will see that as bullish. It's a weird thing. You're going to end up seeing like a as we get to that 2% target from the Fed. From my perspective, you're going to see an initial exuberation from that, right? The market will react positively. Good job, Fed. And then we get a blast down, right? It's really to the depths of hell. So it's a hard thing to explain, but it's not actually a hard thing to explain. We can look at it. I can show you all the prior examples of this. But even within that, there's like a 2-month period. There's a 2-month period of front running usually to the downside. So you really are right now. You really are right now. You really are. So if you're a collapse bear, right? If you're a collapse bear out there, you're slightly in my view, you're slightly jumping the gun in looking for that actual roll that you want. And I don't mean down to 430 or 420 or any of those things. Let me see if I can word this properly. We should look at the macro right now so I can show it to you, but there are instances of this in the past. So you look at it from the perspective of the mandate of the Fed is going to be maximum employment, get inflation under 2%, right? Or at least at 2%, something like that. You're not going to have an activist Fed that goes rogue. They're gonna work within that parameter. We know that. That's a known, okay? So saying that, right? Think about this logically. There are going to be banks out there that are trying to front run, knowing when that pause is coming, at least the pause, by about 2 months. So if I'm an analyst, or if I know Jerome, because he already knows the numbers. Excuse me. They're likely going to know when they're pausing. And these banks want to, front run this stuff. So there's going to be a want to jump across the starting line, right? There's a gun and there's a bunch of runners on the track and they all want to run, right? They want to front run that expected pause and then rate cuts. Now, you'll often hear bulls say things like, whenever we cut rates or we pause or cut rates, it's extremely bullish. They leave out a caveat that likely 2 months before, the market was actually front run to the downside. And we're likely at a bottom once those cuts take place. Once you see those cuts, the market's likely burning, right? So what does this reading mean? They can't front run yet the downside to the market, like the bad one, right? The juicy one. It's likely going to be pushed off, or at least the belief is, before you can front run. So if we were under 2% or under 3% this morning, I would expect an exuberant reaction to the upside. And truthfully, you could probably front run the downside move to the market much sooner, because you'd expect that once we get into those twos, that the discussion will turn to we won the war and inflation, and expect a pause sooner than later. So there is some positivity to this for bulls. It's not like the exuberance. It's not the, hey, we're in 2%, we're going to go to the moon. And I don't think the bears will see that, or the sellers will see the significant down move that they're looking for until we break below that 3%. Right now I think we're reading a 3.7, so we'll look at it right now. U.S. short-term interest rate futures down slightly after the August inflation report. CPI energy plus 5%, 5.6 due to gasoline. We kind of knew that was coming, right? We traded oil and gas. We knew that it was going to explode. Gasoline plus 10.6%. New vehicles plus 3%, 0.3%. CPI year-over-year actual was 4.3%. The forecast was 4.3. The previous was 4.7. CPI month-over-month actual was 0.3%. The forecast, that came in pretty fucking hot. Forecast was 0.2%. Previous was 0.2. CPI month-over-month actual 0.6. Forecast is 0.6, so that's in line. Previous 0.2%. CPI year-over-year, 3.7. The forecast was 3.6, so 0.1 higher than previously. Market's recovering right now. Yeah, that's a hard thing to. It's not hard. It's just, I've said this on the show before too. This is a hot topic right now too, because there's some real estate scumbag is out there saying that we need 50% unemployment to teach workers that what their place is in society, something like that. I don't know if you guys saw that, but it's all over Reddit. It's everywhere. I say this on stream, and I should be more sensitive when I say this. I haven't said it recently, but you guys know me for saying this. The Fed wants job destruction, although they're not going to tell you that. Sometimes the Fed will be grilled on this, especially Jerome. Will be grilled in this kind of stuff. Let me see if I can bring you over to this chart. Give me a quick second. We'll take a quick look at this morning. Hold on here. So I can explain this better with some kind of like facts backing me up. Give me one quick second here and I'll show you guys something. Let me see if I can switch over to something kind of cool to show you here. Now, I'm working this morning, so I got to let you guys know that I am working this morning, so you're going to have to bear with me. Let me see, I mute this stuff here. I got to go to a different chart. Hold on. One quick second. PE ratio, all the macro you need. My pearls, Cap, my pearls. Because I don't know what is going on with the 2-year down here, the 10 over the 2. I'm looking at the tens and 2s right now. And what am I missing here? I'm missing one more, and I forget what it is. Effective Fed funds rates, the inflation, rate of inflation, unemployment rate. There's one more that I'm missing here, but it's okay. These are the most important. Here, we have some pretty decent examples of this. Let's look at 2000, 2008 kind of stuff. We got a good one here for you to see. So this is a SPY right here. I guess we could do SPX. Put SPX in probably the best way to look at this. The first one that you're looking at, this orange line up here. This is the effective funds rate. You can actually see, Fed's fund rates. Let's go over a couple things here to give you guys some explanations to some of this stuff. I'll raise some of this up for you. One of the best, truest, this is SPX. This orange line right here is the effective funds rate. So this is the effective funds rate right here. This is the rate of inflation right here. And this is the unemployment right here. Down here's tens and twos. Not as important as you think it is. I know a lot of you out there a lot of you guys are like, it's the tens and twos, or it's the tens and threes. That's what matters right now. And truly, your best across the board. If you had to pick one thing that you're looking for, it's almost always the unemployment rate. Let's be honest about it. And you'll see big rolls in the marketplace when the unemployment rate rises. You can see it right here. It's the most consistent. As a matter of fact, when you see people out there that are on FinTwit and they're using tens and twos and tens and threes and stuff, just always ask them about unemployment. Now, they're going to argue with you. It doesn't matter because we've got, we don't have enough we don't have enough. Everybody's got a third job right now. There's never going to be a high unemployment rates in the future. But the truth is, historically, if we see that unemployment rate rise here, this is a great example right here. You've got the unemployment rate rising, and you've got the pausing of rates. You see that pausing of rates, right? And then, of course, the Fed comes in and starts cutting rates. Too late, right? And it's getting front run to the downside. Markets topping, rolling down, right? You're really looking for that. This is the bear Goldilocks right here, right? So unemployment is the big one for you. It's the most consistent one. Here's another example of unemployment rising. You can see it right here. And the market's rolling over. You can see the pausing of rates. Oops, you've broke something. Let's start cutting, right? And then once they've completed their mission of cutting rates, and you can see inflation coming down right here as well. The most consistent one that I've found historically is always the unemployment rate. So, it's curling up right here. If you look at the unemployment rate, it's got a little curl right here. So we're close, right? We're close. We're not quite to the flattening here yet, but we're getting there. Now we've got a jump here in inflation, but whenever inflation comes down, it's usually a rocky road. So here's inflation, right? There's usually a bumpiness to this as we come down. And the longer they're still trying to fight inflation, right, as we go higher, you're going to expect rates to continue, right? But there is a moment where, so you're going to expect rates to still go higher. And the simple way to think about this is, if the market believes the Fed is doing its job, right, their operations are not done yet, right? But this is working down here, right? Start seeing that come up, starting to see inflation bottom, start to see this flatten, and you're going to expect some kind of roll to take place. And I think everybody expects that roll to take place. It's just a matter of timing it. Like, that is the key, is timing it, and we're still not quite there yet. We're almost there. I would really like to see inflation down at that too, and then the front running of this flattening and this line coming up just a little bit more. So, like, are we there today? No. When we look at stuff like this, does it? Oftentimes, your newspapers, your CNBC, your FinTwitters, they want it to matter today. like it's going to matter today, but it really is not going to matter today. It really isn't. I'll be honest with you. It really is not going to matter today. Is it going to matter in the next 3 months? There's a good chance of it. As time passes, yes, it will matter. Will there be, like, I'm right the first time out of 100 times? Yeah, we know that. I think every market participant knows that is happening. Absolutely. Do I think that every market participant knows that's happening? Absolutely. But is it here right now at this moment? Believe it or not, a better read on inflation would signal yes. A better read on inflation would signal we're closer. So if you're a bear, then you are looking for, believe it or not, I know you're not going to agree with this, but you are actually looking for a better read on inflation. So if you're a bear out there and you're like cheering, yeah, we got a hot read, in my view, you would want that better read, not batter. I'm sounding like a child. You can tell I have children because my I speak like a child right now. But you would if you're like hey, I'm looking for that big roll cap, I'm looking for that retest of 3,500 or retest the trough or any of that kind of stuff. In my view, it's more than likely the better the readings, the closer you are to that happening. And unemployment is almost there. If you look at the rate of unemployment, it's getting there. It's not there yet, but it is getting there. You can see the effects of the Fed's, we won't talk about that, but you can see the effects of the federal fund operations right now. There's a lot of argument that they start those operations already knowing that inflation is going to come down. There are people out, majority of people out there believe the Fed actually impacts inflation. I'm not one of those people. I think they time it to coincide with business cycles so that inflation does come down, natural business cycles in the marketplace. But, you know, if they do have an impact and I end up being wrong, so be it. But you are looking, from my perspective, you're looking for that bottoming of inflation. The adverse effect of that work that's being done would also be unemployment rising at a rapid rate, and we are seeing it. We all know it's there. It's just not today. And if anything, this prolongs, in my view. It pushes off, in my view, that thesis. So if you were a collapsed bear, you are looking for under 3%. You're looking for that kickstart of we're almost near the end. They've likely broken something. We're going to front run where the break has taken place. So just in here, I want to show you something as we come into the market open this morning. This is a 30-minute chart on the SPY. It's not showing yet on hourly trigger that we're done here, that this is bottom. Would not be shocked to see some weakness into today. You are going to be looking for a break this morning. For continuation to the downside below 445.44. Otherwise, for the bulls, I know this is going to be shocking to you, but this event vol is rolling off. So your target for today, right up here, target for today is going to be 448, and then this 450 up here. I know you're not going to want to hear this morning. So we're going to go over to the main screen. And we're going to take a peek right here. So for the bulls today, 448, your first price target, is going to make a lot of bears angry. So here's your first price target today for PT1 right here. And then here's where the shocker is going to be for you. PT2 right here. You're not going to want to hear that. So I'm gonna make this really simple for you today. You got PT1 right here, PT2 for the day. To the upside, if there is a break of trend, there is a break of trend this morning. Give me one quick second here. I'm going to write this right here for you. You're a seller below. You're a seller below right here. But otherwise, the trade today is going to be the upside, and it's going to make sellers pissed this morning. So your trade is going to be to the upside today. Your trade today is going to sound crazy. It's going to be here and here for the bulls. Price target to the upside, 447.88, 449.78 for the bulls. If there's at any point a break below, you are a seller. Break below this line right here, you are a net seller of this market. I do expect us to trade higher today. I know it's going to make you angry out there. I bet you guys are like ripping up all your plans. Like, I have my noise cancellation on and I'm not listening to the Bulls. So I'm going to show this to you again here. So take a quick look here. There's your trigger screen. You see it, right? I'm going to put up the hourly for you and everything else, but let me show it to you right now, okay? Clear as day, right? A little bounce down there. Bam, go up. Woohoo! Right? Bam, bam. Tagged it. Right? Sell it down over here. Sell it down. Get down over here. And boom, tagged it. And so until something else breaks over here, right? Until something we break down over there. We don't stay on trend any longer, right? Don't fight the trend, right? We're going to expect the upside move up here. Now, if we start to move down, get any kind of rejection, any of that kind of stuff, we'll deal with that. We know where it is right now. That's a 30-minute chart. We're going to look at the 1-minute chart right now. Let's take a look at it right now. Positioning right now is long, right? Price is above, and we're trying to break through right now. We have a bullish cross right now. We are along the market right here. You can see it. Whoop. And we're going to check and see if we remain long or not, or if they roll this over and down to the downside, if they switch to a short position. I'm going to show you on the main screen here. You've got a 446.50. This is your hourly trigger. So here's your hourly trigger right here, right? So you have your setup for today. So I'm going to show you your setup right now. And I'm going to show you exactly what you're looking for. If you are a seller, you want to see price get below that line and begin to trade down. You are then a net seller of the market down below here, okay? Net seller on a rejection and a break right here, okay? Become a net seller of the market. If you see the market, regardless of your personal, this is what I think is going to happen, Cap. If you see price break above the hourly trigger here, you will watch the 1 and the 5 come up from underneath. And if that holds, do not be shocked if you see that upside move and that upside move right there, okay? So you're a net buyer above. You're a net buyer above 446.50. I'm going to write that in there for you. So you are a net buyer above 446.50, okay? You are a seller below this 445.28. And you can already see demand coming in right now. See these buyers right here? See these buyers coming in? They're right there. The demand came up and bought this pre-market. So unless you can get underneath here and start getting underneath these sellers or this demand, and we'll write a demand line right here for you. We know they're right there, right? We know that the buyers are right there. They have not left. They're holding this market up. They're probably upsetting a whole bunch of collapse bears for this morning. So we known buyers. We'll write that in there. Pre-market low. Known buyers. Yeah, it was up because of oil and gas. Gas was like 11%. I think oil was 5 or 6, 6.5, something like that. I haven't looked yet, but that's what I think that it was. Yeah, so you're looking for price here. You're looking to find out if price goes higher to take a position, or price breaks lower to take that position right in here, right? Start getting down there. If we break to the downside today, your targets to the downside. Let me take a peek at them. Got that peak demand down there. Price target to the downside is going to be right here. Right down there is going to be your price target. 442.58, or scratch that, 442.38, somewhere down in there. We got S3 down here. Yeah, possibly S3 as well. And you got a little bit of dippage to 435. You got a lot of work to do there. Pivot PT1. All right, so I've got that on right there, that auto set. So I can leave that right there for you. There's PT1. Let me put on this. Let me put this jam on for you guys. Hold on here for a minute. Oh yeah, baby. We've got the daily trigger we're sitting on, right? You know, looking at it from this perspective right now, I'm like, sell the. I'm like, sell the. I'm like, just sell it. When this hourly trigger comes in here, if we can keep price below, you can keep price below this right here, and you can get this. You can get this sell action down here. Like if you can get this hourly trigger to help out with price and start pushing this down, I'd love to be a seller here. Love to be a seller here. Would love, like, there's a nice trap right here, right? Just like nice trap for the bulls. Take them downtown, send them to the depths of hell. So we're gonna see how this reaction lines up right now. It's a little bit of a cross, a 5-minute cross right here. I want you to pay attention to this cross right here. Follow my cursor, as the goat says, as Mr. Yen says, right? So I want you to see this 5-minute right here. So it's setting up right now for a bull cross right here for an explosive move to the upside. We'll see how if they can get above this hourly trigger right here, we should get a pretty violent squeeze. I also want you to remember that if we do get that violent squeeze, we've got a 5-minute bull cross coming up here. Market's also saying to be long. If you look down below on the right-hand side, it's saying to be long right now. You can see it in a little box. But I want to say something to you here. if we do get this squeeze, let's say we squeeze this up, get above, we go whoop all the way up. Remember that this test is going to be important, right? Remember that when we come back down, it's no, we don't buy this. We want to make sure that it comes back up before we jump on it, right? So you get these moving averages coming on up here. So this moving average comes up, right? It fails. Then you need that moving average to come back down and grab it again to send price higher. You want to still wait until we're underneath that EMA, right? So just keep your eyes on that. Yeah, it's tough as a bear right now. It's tough as a bear because I get what they want. I understand what they want. Give me one quick second. I got something I got to do. All right, there we go. Slow that bad boy down a little bit over there. I think it's hot sauce. So we're gonna talk. We're gonna talk about some stuff this morning before the rest of the day happens. So I will not be here with you this morning. The stream will be up for you this morning. If you're a moderator, I expect you to. I'm gonna tell you, if you're a moderator, anyone steps out of line in my stream while I'm not here, instant ban. So if you see anybody in here messing around, it's an instant ban. That's a rule today, or else we won't do these again, right? So we'll go back to not doing them again. So I can't be here this morning. We're trying to launch the website, and we're coming into that down to the crunch time where the entire suite of tools is not ready, but enough is ready for us to launch. And the main tool, basic tool, is ready to go as well for you. We have people actually testing it right now, beta testing it in the background. There's a whole bunch of admins, moderators. They're going to get access to this tool today, I believe. I thought it would be late last night, but I couldn't get to it last night. So I had to check a whole bunch of like invitation stuff and all that kind of crap. But you will get access today if you are one of the known beta testers. You should, if I can get through the workflow of it, you will get some kind of access today and some instructions and all that kind of stuff. We are imminent in launching this website. It is imminent. It is within like days or a week. It's like we're right there. So we're ready to go. It's just a matter of like putting all the pieces together. I was able to beta test the tool yesterday and the day before, and it was amazing. I can't wait for you guys to have access to it. It's going to blow your mind. And I've got more powerful versions of it that will not be released immediately. Those might just be. I don't know if I can release that stuff publicly, but I might be able to just tell you about it as it happens, so that you have an idea of what's gonna, or you're gonna get not an idea, but I'll explain it later. It's hard to explain, but the tool itself is phenomenal. At a baseline, it tells you when to be long and when to be short, and it does a pretty good job of it. All of the rules that we talk about still apply to it, so we want to keep those in mind as you trade with it. If you have access to it right now, but it's imminent. So I'm doing that work in the background right now, and it's consuming all of my time. I'm learning how to be I'm learning how to be a really bad programmer, and it's taking me longer than I expected, but it's to be expected. It's like one big pipe, and then it comes down into a smaller, tiny pipe. You got to break through that little hole, and then it opens back up again, and then you're running off and running again. So expect that stuff to come out in the coming week or so. It should be a blast, dude. You guys are going to have a blast with this thing. It's amazing. It works amazing. It's beaten all of my expectations, so. Yeah, I appreciate that. Appreciate that, guys. You guys are going to love this thing, man. It works so awesome. It works so awesome. It works so awesome. And even the coolest part too is if you guys are ever looking for where to if you guys are like, where do I cut or where do I stay long? Like this thing is just, it's banging right now. When it flips to short, it just basically tells you it's like, you're gonna be about to get run over here. Watch out. We've got some other indicators on this thing that are for trend. Are you long or short for a trend? We've got some bullish, bearish crossovers that tell you if we're bullish on higher time frames. So that's kind of cool too. We got a bunch of cool stuff. And if you guys are looking for what my expectations are for today, again, it's just no different. If we're above this hourly trigger, you are long the market above. Let me see if I can click this right here. Bullish above. We can write that right there so you know. Bullish above and then bearish below. Seller below. Maybe I should write I am a seller below. Maybe that all works for you right there. I am a seller below. I am bullish above right here. Maybe that'll give you the, I don't know if that's clear as day or not. You can actually see this thing will flip right here. This thing will flip positioning from long to short if we get this cross right here. Let me see what you guys are saying in there. How's everybody doing out there? Good to see you all. Let me know in the chat what you think we're going to do today. Think we're going up? Think we're going down? I'm always interested in what you guys think is going to happen. And when I do, I will come back on stream today. We will today talk about the upcoming week, 2-3 weeks that are coming up. The next week, this week, next week. We also know the options market is coming unwound basically today, and it's free to do whatever it wants, up and downside. We also have the JPM target to the upside as a magnet, right? Do we trade there into end of month? Or do we trade to the downside into the end of the month? You think it's a scalp up and down day? Yeah, I wouldn't get caught in this. This is like you want defined. So I want to show you guys something here. So you guys want like defined. We're above the hourly trigger. You want this to happen right here before you even get long. So look at me. If you're a bull, look at me in the face if you're a bull. You need to see this, okay? To get long, you need to see that. Same thing goes for you as a seller. You need to see price get underneath this daily trigger, right? And begin to head down here. That's like not good. Like get down there, right? Get underneath these known buyers. Like you need to get underneath these known buyers, this known support that's down here. Let me unhinge that. You need to get underneath these guys. Like get underneath them. Get the help that you need from this hourly trigger. We gotta be under here. So I want you to remember this right here, right? If we can get price under here, you are a seller down here, right? You are selling the market. and you're going to tee off on this hourly trigger for that to happen. What you don't want to do is get caught in this. Like, this is no-go for bulls and bears. If you're a bull and a bear, you do not want to be in here, okay? This is option kill zone in here. Like, option kill zone. Make sense? So if you're a bull, you're a bear, do not get caught in here. Death zone. This is the finger trap right here. You guys ever know what those are, what finger traps are? It's like a little wooden device or a paper wooden device. It's like that right there. It's got cross weavings across it. All right, don't get caught in there. Whatever you do, do not get caught in there. It's not a pretty place. Yeah, exactly. It's the don't get caught in this right here. You'll get somebody in chat's gonna say, "Oh, I took the right side of that trade." They're wrong. They're wrong 7 out of 10 times. I assure you, they get caught all the time. They get torn up. Yeah, the bamboo weave tube, exactly. So if you are a beta tester, you're going to get access. If you are looking for the tool, it's super cool. Wait until you get access to it. You're going to love it. It's a blast. I traded with it on 2 days ago, and it was beautiful. It was like a perfect thing to watch. It was absolutely perfect. When you're on trend, it tells you it even tells you where the tops are, kind of. So it's kind of cool. Like the expectation of where we're going to go. Hey, maybe we can put this one on the 30-minute chart so you can see it better here. We'll leave it on the 30 so that we're going to leave it right here. This is the way we're going to watch it. We're going to leave it right here because this is going to show you a better view of where we're headed. So I want you to huddle around if you're part of the masses here. I want you to just huddle around right here, okay? See if we can it's the 30-minute chart on SPOOs, okay? And I just want you to watch this trend right here because I'm going to remove this right now, but I want you to just see that trend, okay? And I want you to be honest with yourself here, okay? Be honest with yourself. Look at the captain right now. If we begin to sell down today, right? You begin to break this support right here. You're not trying to get long in here, are you? So do you see that stuff down there? Watch that. That's that pre-market low. Here's the other low down here, and here's the other one, right? So if we begin to break this trend today, we start heading lower, you know what they're going to do, right? They're going to slam you down here, and they're going to slam you down right there. You see what I'm saying? So just be conscious of trend, right? If trend begins to break down, where are we headed? Right down there, right? You got that target down there, 443. To the downside if we start to break down. So are you a seller here? No. You need to break trend. You saw these buyers step in right here like nobody's business. They were like, hey, we're here. Get out of here. This is just the bottom of trend. So if you break above this hourly trigger, what are you doing? You're getting long, right? So if you're a seller here and you see price break above the hourly trigger, see your hourly trigger right here? So if you begin to see price break above the hourly trigger, here's your sellers. They're stepping in. Why are they stepping in, right? They don't want to see price get above. Why is that? Because the move is to the upside, right? See what I'm saying? So pay close attention on this open. don't start a position before 9:30 or like 9:30 bell slams. You're trying to take a position. Don't bother. You're waiting for this market to quote unquote open up. You want to see if the algos take us up here for that move higher, right? You want to see if the algos break us below and start setting us lower before you make a decision on where we're going. Okay, so be very conscious of this morning. Very conscious, okay? No matter what anyone out there tells you, no matter what anybody, I want to be honest with you, no matter what anyone out there tells you on social media, your price action here this morning is going to be key, okay? Key below here. And do not, if you're a bear, you ain't got much to say here if price begins to drive higher, right? You don't want to be like, hey, I'm still short. Hey, I'm still short. Even if we roll and then bounce higher right here, right? Roll down there, bounce higher. You don't want to be caught in this, and then you're cutting your short right here, and then you actually get your roll right there, right? Come right back down for the continuation higher here. So just be careful here if you're a seller or a buyer. You want price action to lead the way for you here because it does matter. So I'm going to leave this right here for you. The main screen that's showing down below, I believe, right here. And you're going to be paying attention to this price action down here. And you can actually see over here if you're long and you're short. See that green box right there? You see that thing flip red? You're short. Yeah, you know what it is, right? So it's fairly easy to see. Let the market digest this on the open this morning. Let's see what you guys are saying right here. Can I zoom in a little? Yeah, I think what you need right here is just see, hold on. I think what you need to see right here is you just need to see if there's any big red bars down here, okay? This is a half-hour bar, so you're not going to miss it. It's going to be the first half hour of open is going to matter. So if you see a big giant red bar, the first half an hour right here, you're going to know it, right? If you see that half-hour bar and you want to be a seller, you're looking for a green bar failure, like right here to get in on right there. If you see that first half-hour bar is up and it's green, you're going to look for a dip buy right there to go higher. Right there. Okay, and you're going to jump right on it right there. Make sense? Fill that one in right there. Fill that one in right there. You're not going to miss it. It's going to pop right up. We'll leave that right there for you so you can see it. All right, so I will be back. I will check in on you throughout the day. If there's a key pivot and I'm watching and if I'm watching and I'm able to let you know, I will. And otherwise, I'm going to leave the stream up all day long. And I'll stop in with you guys throughout the day as things progress. You guys have any questions? Any questions at all this morning? Let me see what you guys are saying. Any questions out there? Dude, why do we have how do I have how does Streamlabs still have a thing running? Let me see. I know the mod's just like roaring in the background. Good morning, Will. How you doing, brother? Good to see you, my man. Everything doing well, my man? Give me one quick, and I got something I got to do here in the background. Give me like a couple seconds here. 9:26. Where do you go? Where do you think we go off the bell? I think we squeeze. I'll be honest with you. I think we squeeze off the bell. You want my opening prediction? You want to see it? I'll show it to you. You want my opening prediction? You're not going to want to see this. Hold on. Actually, yeah, we could probably bring that one down here. Well, let me just do a better one here. Hold on. Opening prediction off the bell. Oh, hold on here. Squeeze it up right there. Straight back down. And somewhere over there. The first one will be right there. I think. I think. Let's see what happens on this opening bell. We'll go back to the 1 minute chart. So somewhere up in here, it's going to get pushed right up here and come right back down for some sellers are going to try to step in for some liquidity up here. So let's see how we open up this morning on the 1 minute chart. If you're a seller looking for liquidity to go down, it's right on that hourly trigger. Squeeze this right up, try to break below this and start taking it to the downside. Got a minute left until the open. Let's see, 30-minute. Let me go to the 30-minute chart really quick here. Oh, yeah, baby. I think we squeeze. It says positioning is short right now, though. It's yelling at me. It's telling me, fuck you, no cap. We're going lower. It's telling you to wait to expect a rejection off the open here. Positioning is short right now. Oh no, that's SPY. I'm on SPX. It's from yesterday. Hold on here. Get all of this here. Positioning is long on SPOOs. Can we get a squeeze higher, or are they going to roll it straight down in cash market? Ding, 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 opening bell. Let's see if they can send it down right now. I'll stay with you here to see if we can find some direction here. Oh, green bars off the open. Oh, boy. See if they can reject this right here. We'll see if they can get some rejection right here off this opening bar this morning. Squeezing higher right there, baby. Trading 446.84 right now. You're all like, slam the call, 0 to 8 buy button off the bell. He thinks it's going up. 446.84 right now. And what's happening on this here is telling so this trigger screen right here told you to be long, right? First point of rejection coming into it right now. You can see it. See that right there? First point of rejection is right here. Boom. Squeezing up to it right now. Tool is telling you to be long, right? Told you to be long before the open this morning. Sorry about that. It's an alert that I have in the background. Squeezing higher right now. Oh, boy, baby. Look at that squeeze higher. What are bulls looking for right now? What are bulls? Pay attention. Bulls looking for that squeeze up and that pullback right now. Looking for a pullback. Hold 446.48. Take it up to 448. And then go higher, right? Look at that big old squeeze right there. Oh, baby. Oh, look at that squeeze. Trading 447.15. There's your PT1 right there. Gotta get out right now, man. Like, take the money and run. Hourly trigger needs to be defended. Remember that. If you're a bull, know that sellers are looking for liquidity here. You want to defend this hourly trigger. If you're able to defend it, you get what's called a what? 4-trigger bull cluster, right? If you're able to defend this, you've got 1, 2, 3, and 4 triggers for an explosive move to the upside. If this holds here, if this holds and it's not just liquidity grab, you know where the target is. If you don't, oh, it's a pretty high. It's 450 basically. So if this holds here, if this confirms the leg higher, 450's on tap. Sorry, I got a bunch of alerts right now on SDAO. I got to turn those off. Oh, boy, right now. Look at that right now. This holding on the hourly trigger right now. Hold on, let's take a look at the trigger screen again. Trigger screen looking a little bullish here, isn't it? This is a 30-minute chart right now. It's looking kind of bullish here, isn't it? Got that sweet rounding here. Little bit of rounding right here. Daily trigger's bullish. Looking kind of bullish to me. I don't know. We'll see if it's going there. We'll see what happens right here. We're getting a good trend day for the bulls, maybe. Well, I gotta stop these alerts, man. This SDAO is just going crazy right now. SDAO wants to rip faces off, and it's being sold to the depths of hell right now. It's pretty upset at itself. All right, let's see what's going on. I like the successful retest. Whoa, hold on one second here. We're going plaid, baby. We're going plaid. We're going plaid right now. Glitch in the matrix. What's going on, Michael? How are you, man? Oh, yeah. Michael, how you doing? Hey, man. Michael, welcome, brother. I appreciate you joining the stream, man. How are you? I appreciate it, man. fake breakdown and rocket up that base on a plan on buying puts. I don't know. So let's look at plan on buying puts. So let's look at the trigger screen and see what puts look like right now. I don't know. I don't know, like, you got this little like thing going on right here. I don't know. I wouldn't be buying puts. I'd be buying puts here. I'd be buying puts down here. Anything like that. I'd be buying puts down there right now. But right now, it's not looking too bearish, is it? It's looking like, like they bought the dip, they bought the dip, they bought the dip. And they're trying to get higher right now. Trying to get back in a trend to the upside. So we'll see if they can do it or if they can't. They're trying right now for a trend day to the upside. So I'd be really careful here if I was a bear. Personally, I would be. See him trying to stop us from getting back in trend right now. So you can see here is trend, right? For all you traditional chartists, there's trend. Feel like a traditional chartist kind of a guy, kind of a girl. You're trying to sell that right now, right? Trying to sell this down right now. But if that holds right there, if we find demand right there, it's going to rip your face off. So we're going to watch it right now. It's sitting at 446.50. So if this holds this hourly trigger, let me see the trigger again. 446.48. That's right down here. Just needs to hold right there. If this holds, if these buyers, known buyers down here, if these buyers come up here, we're going to start running. These known buyers, if they step up right here, we're going to start running. So we'll find out right now. Find out right now if the buyers are in control. Ain't going to take long to find out. As long as this holds, buyers are there. Write that in there for you. If the buyers have moved up, give me one quick second here. I got to turn some of these alerts off. I got alerts galore. I got to turn them off. Hold on a second here. Stop all. Yeah, do I need a quick break from all of my alerts? Yes, I do. Got the alerts just banging in the background. Bullish above, baby. It's pretty gorgeous, right? Nice little bull flag down there. You like that little sexy bull flag, right? Whoop. Don't want to get sold down here, do you? You want to see that break above that flag right there, right? Get above here and start smashing and bashing. 448, 449 up in there. See if we can get a better target for the end of the day today. 448.49. $448.26. Yeah, PT1's way up here. And then your next one is 448.94. Next PT's right there. And you got a big one up here at 450.56. Woof. That's a big bet. I don't think you get up there. I don't think you get up there for that one, but we'll leave it over there just in case. Just in case, we'll leave it up there. But PT1, PT2, PT3. We're going to find out right now if the buyers have moved up. They're testing the hourly trigger as we speak. So you're watching the retest of the hourly trigger right now. If this holds, we're going to find out if the buyers are in charge here or not. If they are in charge, then you are going to see if the buyers are in charge, you are going to see a giant move to the upside, which I think they are in charge, if you want to know. I think they are in charge. So Apple, we'll talk about Apple really quick. So Apple, yesterday I was watching the options chain. There was a huge concentration of calls on 180C. They were 40 cents. Last I looked yesterday, they were 40 cents. And my posit was for the Apple expiry 180Cs, I'd really like to see those go down to 0, like 10 cents, 7 cents, 5 cents, 1 cent, believe it or not. I want to see those calls get burned. And then look to enter 180C for the following or 180C for the following expiry. They're going to murder those options into tomorrow, or excuse me, Friday. I said tomorrow, but it's Friday. I think it's the 15th is the expiry for those 180Cs. So the upside, the weekly expected move on Apple, I don't think we hit the upside target. I believe that was 180. So they murder those, and then if they go up there and tag 180 when they're dead this week, or they go up there and tag that 180 the following week. Yeah, I know all about Elliott. So just so you guys know, I'm quite familiar with Elliott Wave. This system is based on Elliott Wave too. But we all know that Elliott Wavers love to break out erasers as well, right? What do they use? What's the term that they use? Invalidated, right? So if we get to this number, it's invalidated, right? We can move the other way. But I know all about it. I get what you guys are saying. The bear count is legit right now. I am if you want my litmus test of where I am, I'm hyper aware that the bulls are on their last thread, their last song, that they're in a 10-chapter book, they're in the last pages of it, into the end of quarter. I do realize, hyper aware, that there is a bear count. There's an inverse head and shoulders forming. I am aware of all of those things. But, it's like anything. Let's look at something really quick. Let me explain it. Let me explain it better to you. Let me explain it. I don't even have to explain it better to you. Look at this entire year. And how many times did a bear count say we're going to correct or roll over, right? So that counts as invalidated how many times, right? 10, 12 times. I love Elliott Wave. I do. I appreciate it, and I have a lot of respect for it. But it's not an exact science, is it? And we can invalidate shit all over the place. I think that's one of the like you as a trader and investor, you have to be able to adjust. Like you have that in front of you, and you're like, I see it, I got it, I know what to expect if this happens. But if that doesn't happen, what does that mean, right? And so people get caught on that, or their thesis, right? Like I've got a thesis every day, right? I've got a 1-minute thesis, I've got an hourly thesis, I've got a 4-hour thesis, I've got a daily thesis, and I think as a human, we're all inclined to try to make a call, right? We're doing this and we're going to do that. The key point for you is that your internet cred does not matter. At the end of the day, you and I leave the internet and we go live our lives, right? So at the end of the day, you have to pay for your mortgage or your rent or your car payments or your kids or, I don't know, your insurance, you name it, right? You got to buy food for yourself. And the money is really what matters to you. So when you're out there and you're like, hey, there's a bear count to go to the downside, that's great and all. But we know, and you and I both know, that if you get caught in any of those theses and you're like, hey, I'm sticking to this no matter what, you're going to get run over. You're going to lose your money. And your money matters more than anything. Above everything, your money matters the most. So if it goes against your thesis, the price action in the market, adjust to it. Rip that thing up until it becomes validated again. So as a matter of fact, right where we are right now, we start heading higher into the end of this quarter, and you have that bear thesis. You have to adjust and say, you know what, we'll come back to that until we roll back down into that positioning. If we roll though, right, let's say we're going up, right, and then we roll back down into that thesis again, and you want to take that thesis on again, I'm down for it. You want to say it on social media, have fun with it. Keep doing what you do, but the thesis is good as even my theses. They're only as good as long as they're valid. The moment they're invalidated, you take on that other thesis and you run it down. You make the money, because the money is what matters, right? End of the day, that matters more than you're not going to see me in your house laughing at you in the corner and be like, your thesis was wrong. And if anything, I'd rather be in your house with you and I'd show up and be like, hey, you had that thesis of selling and now we're buying. Did you be able to cut your shorts and go long? Or inversely, right? You got that? You have that bullish thesis. You just switch to the seller and switch to it. Then you're right and you're making money. That actually matters, right? That you actually are able to switch around and make some money. Right now, bulls in charge. They are trying to defend right now the hourly trigger. You've got sellers coming in trying to get underneath that hourly trigger. So they're going to try to sell this down right now. And we get this nice cross coming up. You've got a 5-minute bull cross right here. I want you to see it right here. We'll see if they can defend this. The bulls can defend this right here. They will be off and running. We're going to find out right now if these bulls are here or not. If we get a nice positive reaction right here, you see green bars come up off this. It's going to be a nice trade right about here. right about there if it shows itself. Bob is trying, man. I'm sure I wanted to say this the other day and I didn't say it. I wanted to talk about Mike Burry. I was like, I could just see Mike Burry's like at home all week and he's like constructing 2 tweets. He's got some thrash metal playing in the background. He's like, I've got my the shorts still on tweet and I've got my I closed my shorts tweet. He's got his Elliott Wave at home. He's got like a pencil and a crayon out. He's got those triangle crayons that won't roll off the table. He's got some young peon standing outside his office. He's like, I don't know what he's gonna hand me for a tweet for this week to post for him on Twitter. I gotta have to like take it from crayon and put it on a laptop or something for this guy. Coming on down here to check this 5-minute right here. Just watch this white line right here. Positioning still long unless we break below it. Going to find out if the buyers are here or not right now. Are they here? We want to know. Everybody wants to know if the buyers are here or not. If the buyers are not here, where are they? Way down here. Pre-market low, known buyers. Checking to see if buyers are here or not right now. Let me know if you're going to buy this, if you get a nice green candle off after this red candle. It's 9:53. We got 7 minutes left. Sellers trying into the half-hour mark right now, trying to get a new low, not getting a new low. They have 7 minutes to get underneath that white line right there. Trying with all their might right now. It's like Yosemite Sam, like get down into Yosemite Sam does the jumping. Sellers trying their best. Slam, 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 slam. Need to get underneath. Look at these sellers in here, like, stay out of trend. Look at them. They're like, you cannot break back into trend. We do not want you in trend. It's so funny. You got like, Bob's like, I own. Hold on a second here. Here's Bob. Bob's like standing right here. He's like, you will not come back inside of trend. Here's Bob with his stapler. He's got a stapler in his hand. He didn't brush his hair this morning. He's in the basement. He's like, down, 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 stay out of trend. Trying his best right now. $9.55. 5 more minutes for the sellers. See if they're actually here or not. 5 more minutes left for sellers. Coming in, touching it right now. Coming on down here, touching that. 27. Had that nice squeeze on the open. Whoop. Come back down. Make sure we have actual buyers in demand here. Getting a nice green bar off that touch right now. Nice little green bar off that. Come on, baby. Keep on pushing. Now 956 in change. 956.43. Oh. Oh, no. The buyers moved up on the hourly trigger. Sellers right now wondering if they have to bend and ship. Bend and ship. Bend and ship. Sellers panic right now. Guarantee it. Guarantee it. Sellers are worried. Sellers right, I'm telling you, sellers right now panicking. Sellers panic right now. They're like, oh shit, here they are. No immediate bloodbath. That's good to see. All positive for the bulls right here. Remember, watch this chart up here. It says still long, right? Still long right there. Oh. Getting some angry sellers here. Whoa, this isn't looking good for the Bears, man. What are you doing, Bears? Don't flinch. Don't flinch, Bear. Oh, don't flinch. Don't flinch, Bear. Hold fast, Bear. 2 minutes left for sellers. Coming in at 10 a.m. Hold fast, Bears. Bob's about to get pissed here. Bob is going to get angry. Bob is definitely angry right now. You know what happens here, right? Oh, boy. Look at Bob up here fighting. So here's Bob right here. So Bob's right up here, right? He's angry. He's pretty angry. You know what he doesn't want, right? He doesn't want that fat old green bar, red bar down. Start doing this. Start getting on trend up here, right? Bob doesn't want to see that, does he? Oh, boy. Now we've got a new half hour right here, right? You know, if we, you know what happens on this half hour if this half hour gets bought, right? We get this nice fat green bar right here. So we're going to look for buyers to step in right at here. Right here. Oh, wait a minute. Look for a half hour low. Right there. 446.64. 446.64. We want this candle to be green right here to push us up. So you want, if you're a bull, you want to be holding 446.64. 446.64. What you want to be holding as a bull. A little bit lower. It's 446.51, I said. Or I said 64. They want to hold 446.51. Oh, watch out, dude. Bears, watch the fuck out, dude. We'll give you a warning here, okay? Watch out. So when you're watching the triggers here, right? If it says max bearish, you should be getting bullish. If it says max bullish, you should be getting bearish. It's the opposite of what you think. Weekly trigger being bullish is good. It's I'd prefer weekly trigger to be, believe it or not, extreme bearish. Like max bearish on the weekly trigger would hold very well. But weekly trigger at bullish is pretty good. All the other triggers are neutral right now. Positioning is long, though, to the upside, not to the downside. And it'll switch back and forth. When you're supposed to get short, it'll tell you. It'll tell you get short. Right now, it's long. You can see it right here. Positioning. Right there. Right there, you can see positioning. See it right there. Right there is long. Whoop. Positioning is long and not short. Oh, yeah, baby. Oh, all we need is people to believe that target sits up there on the JPM collar. And then it's like flies to a fly trap up there, isn't it? See if they can get it. Yeah, so on triggers, if they're bullish or bearish, neutral means I've got no take on this. I've got no directional take, and you can see it right now, right? So right now we're sitting on the hourly, we're sitting on the daily trigger. They're all neutral. There's no defined, hey, we're going up, hey, we're going down, right? If we begin to go up or down, you'll see those triggers begin to get, if we're going down, they'll begin to get lightly red and then really red, right? If they get really red and they start turning lightly red, then you're gonna see the turn in the market to the upside. Same thing would go for bulls. You'll start to see them turning green, more green, darker green, and then you'll see that it's time to start pulling some longs off the table. You get what I'm saying on that stuff? So sellers still stepping in, revenge trading right now, trying to take out the bulls. Going to move this over so it's not in your way. There's hourly trigger. Find out if the buyers are still here. Leave that over there for you so you can see it. Sellers revenge trading right now. Straight up revenge trading. Sell. Dealers are like, we don't want to chase this. We don't want to chase this. We don't want to chase this upside. Sellers right now trying to take it back. 10:05 right now, 5 minutes into the first half an hour or the second half an hour of the 9:30 to 10:30 hour. Trying to sell this down right now, doing their best that they can. So I want you to pay attention really quick and watch this. If this does roll, I want you to pay attention to this positioning right here. If we become bearish, you're going to see this flip to sell the market. We'll watch this right now and see if we get that roll to the downside. If we do, you'll see this flip to bearish. All right, I'll be back with you guys. It's 10 a.m. I will stop in with you as the day progresses. Please be nice to each other. If you see anybody in the chat messing around, say something in the chat. I'll try to read it. And I'll get involved if I need to. But other than that, have a great morning. I'll see you guys soon. I work hard for money. I work hard for my money. Hold on here. See if we can get this to play in the background.
Experiences are what people love most about travel. With Viator, you can browse and book tours and activities so incredible you'll want to tell your friends. They offer everything from simple tours to extreme adventures and all the niche, interesting stuff in between. Viator has experiences in over 190 countries. There's something for everyone. Plus, Viator's travel experiences have millions of real traveler reviews, so you have the information you need to book the best activities for your trip. Viator lets you keep things flexible. Use Reserve Now and Pay Later to secure the activities you don't want to miss without being locked in. Whether you want to take a backstage tour of the Grand Ole Opry, a Miami Bimini Bahamas day trip by ferry, or a private guided tour of the Grand Canyon, Viator is for you. Download the Viator app now and use Viator 10 for 10% off your first booking. One app, over 300,000 experiences you'll remember. Do more with Viator.
14 grand like recently. Now it's under 7.
Ooh.
So that's kind of the data point that Tom Keene brings to the table.
That's for 2, or you mean per person?
I don't know.
Because I just priced out literally a half hour ago a round trip to Vienna, business class for 1.
Who's going to Vienna?
Well, I would like to.
Why?
And because I've been invited by the CEO of Mercedes.
Oh, you have to go.
To drive the
I'll
new
sign off on
electric
that.
G-Class. I know, I would be the first person pretty much outside of the company in the world
Oh, we got to get
to
that
drive
done.
it along with Hannah Elliott, because I want her to go with me.
Sure.
So
All right,
anyway,
round trip to Vienna.
$11,115. Now, to be fair, it's Vienna. You know, it's not a hub. You know, London, Paris, Munich are going to be cheaper.
Can you go to direct from JFK to Vienna?
Yeah.
Nice.
United has a flight.
All right, we're
directed-
sending you over
direct to
there.
Vienna.
I'll make a note of that.
Now, if I flew economy, it would only
Please.
be $2,300.
But you're 6, what,
I'm
3?
6'3".
Yeah,
you
no
know?
way. You're not flying economy.
And
Please.
almost 50 years old. I don't want to
Yeah.
fly in economy class.
He's a
you know?
player. He's a TV personality.
Yeah, there you go.
All right, so the airline's
International broadcast.
under pressure.
Airlines under pressure. One of the stocks not reacting as strong as maybe anticipated. Citigroup, after laying out plans for job cuts, revamping their top management structure, up 0.7%. Kind of a modest outperformance in what's a relatively flat tape. So a bit of a change there. But as I know we've talked about in the past, IPO season starting to kick off. ARM expected to price after the bell today, so all eyes will be on the SoftBank-backed chip design.
And we expect a full, strong book, right? So to me, it's going to be how this thing trades tomorrow, boy. I'm glad I'm not making the market tomorrow in this thing, because all the pressure in the world is on the trader who's making that market, opening that stock.
It's going to be an interesting one. You got tight float. You've got cornerstone investors.
This thing could rip.
It's gonna. There's a lot of excitement, a lot of though, from the people I talk to.
All right, we'll talk to you about that
By the
tomorrow.
way, you're going to
like
watch. Keep your eye on the car makers, dude, because
Why?
tomorrow's the last day
of
negotiations.
Oh, that's right. Yeah, tomorrow. Midnight.
Tomorrow night, 11:59 p.m. apparently is the deadline. I'm watching close, but Ford and GM, they've been up the last couple of days.
Ford's up today, double upgrade over at UBS.
Oh,
talking up earnings resilience. So
okay. I don't know. That doesn't sound right.
You got to have cojones to upgrade the stock 24 hours before a potential strike.
Yeah, could be big. And it doesn't sound good, right?
Does not sound.
No, it does not
the
sound.
only thing is the president of the United States of America says he doesn't think there's going to be a strike.
Oh, well, there you go.
And he's
Maybe
the
he
leader
knows
of the
something.
free world.
Maybe
so you
he
think
knows
he
something.
knows more than we do. We'll see if he's right.
Okay, very good. All right, Bailey Lipschultz, thanks so much for joining us here. Bailey Lipschultz, he covers the markets for us. All right, some big news out of Citigroup. Our good friends over there at Citigroup, former employer of mine. Big restructuring. There's going to be some headcount reductions. Let's break it down with two people who really know this stuff, and that is Shonali Bosick. She covers all Wall Street for Bloomberg News, and of course, Allison Williams. She is our senior banks analyst at Bloomberg Intelligence. Allison, thanks. You join us Zoom. Shonali's here in studio. Allison, start with you. How big of a deal is this for Citi? You've covered this stock forever.
So I think, I would characterize it as a reorganization, perhaps versus a restructuring, where
that's a good
I
point.
think they're just really trying to, clean up the reporting lines and maybe help management to be a bit more focused. And also, showcase, as an analyst, I'm excited to get cleaner reporting where we can, finally see what's happening with their private bank, with their wealth unit. There was some hints at this over the summer, and even prior, I guess, with some of the hires that they made. And I just think it's, another step in Jane's journey, if you will, in terms of just making this a cleaner, more focused bank, and hopefully getting to the efficiency that investors have long wanted them to get to.
So, Sonali, I mean, is this going to help Jane Fraser boost the stock price? Because that's bottom line, right? And I'm looking at, over the last 5 years, they're down 30%, whereas Goldman's up 63%, Morgan Stanley has more than doubled.
It's certainly a tough story for Citigroup. We have had her first set of restructurings here, if you will, where she let go of certain consumer businesses around the world. And now what is difficult for Jane Fraser and their investors of Citigroup is that there are still a lot of unanswered questions about this reorganization. One being how many jobs will be lost underneath the surface. Our sources say that there could be significant headcount reductions here because what Citigroup is doing is removing layers of management. And this announcement only addresses the top 2 layers. The reality is they're going to be looking across management around the world, across divisions. One of the things they did in this reorg is they got rid of many of their regional divisions here. Okay. So the way you think about Citigroup now is that there's Citigroup North America and there's Citigroup International. And you now have 5 main business lines. It's no longer just the main 2, which is institutional client group, as well as the consumer offerings. Most of that consumer business now is the United States, North America.
Mm-hmm. Okay.
So there was a real reason that they needed to do this. Citigroup today does not look the same as Citigroup 2 decades ago when the initial set of current structure is what you see. In a way, you can see this as the most significant reorganization in 2 decades because this is really getting rid of the groups that we have known for so long at Citigroup.
Well, it strikes me, Allison, as it came out of my mouth, I realized probably Goldman Sachs and Morgan Stanley aren't the best comparison to Citi in terms of stock price performance. Wells Fargo over the last 5 years is also down, only 10%, not 30%, but also down. Bank of America over the last 5 years is only up 8%, so not down 30%, but up 8%. Are those better comparisons for Citi?
I think they are. I think at the end of the day, when we look at all of these banks, the way that investors think about it is, the valuation is going to be tied to returns, as it should be, right? And so someone like Morgan Stanley that you referred to, the comparison that you could make is they've improved their structural returns through moving towards the wealth business. Looking at someone like J.P. Morgan, who's a very different bank, they're actually executing, above all of their peers. Part of that is the scale that helps the profitability across their businesses, and they have leading returns. And so the struggle with Citi, and I think, part of the reason why it's been tough for the stock is they just have not been able to improve the returns. And if you look across the group, their returns are the worst. Wells Fargo, during certain periods of time, with all their big charges, had some weaker returns, but they're sort of on the path to better profitability. And so that's really what Jane needs to deliver on at the end of the day. It is those returns, and I think why this is important is, as you clear the structure, and that's been one of the biggest issues of Citi is all the bureaucracy and really sort of a messy organization. But if you can get that cleaner and you can improve the efficiency of those core businesses, they do have some good businesses to work with, some high-returning, what should be high-returning businesses.
Sonali, what do you think Jane Fraser wants the message to be about Citigroup? And I think of like Morgan Stanley, I think of James Gorman, pivot towards wealth management, so successful. What do you think Jane Fraser would like that view of Citi to be?
On one hand, it's simpler for James Gorman to sit there and say we're an investment bank and we're a wealth and asset manager. Yep. For Jane Fraser, it's a different story. Her goal here is to have all of her managers essentially get one message, which is get leaner. Mm-hmm. They have one of the largest investment banks in the world, but just take the M&A business, for example. The reason I bring up the M&A business is you are sitting they are sitting at number 6 in the league tables. Actually, I just looked at it and got kind of stunned because they're behind Centerview, which is a lot, and that is in terms of deal volumes. And that, a year, 2 years, 3 years ago is just a stunning thing to see this late in the year. And so the share that they need to gain to keep those fees up, as well as squeeze every dollar out of the cost that they have, it's a twofold story. It's one, get competitive and win. Two, be more efficient with every dollar we have to improve profitability. And so, the investment bank is a really good example because in this reorg, one open question among those 5 business leaders is who will run the investment bank over at Citi, the banking business. Currently, they have tapped an interim head, Peter Babet, who is the CEO at the Asia business.
Yep.
You have to consider this. This is one of the top 5 M&A businesses in the world.
Yep.
It is one of the hottest jobs on Wall Street. And guess what? They have a huge IPO business, a huge debt underwriting business. And that person, you can't imagine, wouldn't one day be the successor for Jane Fraser herself. Again, they have a consumer business that's quite large as well, but they have a massive investment bank, and it is a seriously competitive spot.
And my buddy Tyler Dixon, still running the investment bank over there, so he's
under the new banking head.
I know, that's interesting, but Tyler's just one of the smartest guys in the room, every room he's in. Shonali Bassick, thank you so much. We got Allison Williams, thank you so much as well. Let's go to Karen Moscow right now for our Bloomberg Business Flash.
Yeah, Paul and Matt, watch the stocks turn lower, and now they were higher for the open and the start of the morning, but now again they're lower after that mixed inflation report. S&P 500 down 0.2%, down about 8 points. It's at 44.54. The Dow Jones Industrial Average down 0.1% or 36 points at 34,611, and the Nasdaq's down 0.25% or 35 points at 13,738, and the 10-year Treasury up 2/30 seconds, yield 4.27%. That's a Bloomberg Business Flash. Paul and Matt.
All right, Karen Moscow, thank you so much. We appreciate that. Lots going on here today. We want to pivot hard here, and we want to talk pharmaceuticals. And we want to talk drugs and all that kind of stuff, and we can do that.
Well, and one of the biggest winners of the day.
Winners of the day. Stefan Bancel, CEO of Moderna. That is a NASDAQ-traded stock. mRNA is the ticker to put into your Bloomberg terminal. Nobody, I guess when you sit around your Thanksgiving table, everybody likes to just complain about drug prices, right? Everybody does that. It's across the aisle. But I turned it around a couple years ago and said, okay, we can do that, because we always like to complain about drug prices. But these guys in the pharma and the biotech industry, man, did they come through with COVID.
Yeah, I think actually as a society, we were all a little bit relieved.
I'm like, in 12 months, these guys came up with a vaccine? I mean, who does that? But you guys did. Thank you very much. Thank you to the Pfizer folks and all the other pharma and biotech folks out there that, man, did they come through with that vaccine. Appreciate it. Now what do you do with Moderna? Tell us, you guys have your R&D day today. You bring out all your new stuff for your investors, for your stakeholders. What's the big message for your R&D day today?
Is that we're not a COVID company. Thank you for the kind words.
Yes, but man, thank you, though.
An mRNA platform company, and the platform is firing on every cylinders. Today we're announcing positive flu data in phase 3. So if you think about it in terms of vaccines, we are 3 out of 3. COVID working, RSV filed to the FDA, and today positive flu data. In cancer, we have now products showing 44% improvement versus the best drug available to patients today, which is immunotherapy. In melanoma, skin cancer, and we're going to start before the end of the year a phase 3 study in lung cancer. So cancer, we really want to transform as well.
First, is that by the way, because of mRNA technology? And I'll just remind listeners, we are talking with Stefan Bancel right now. He's the Chief Executive Officer of Moderna. And as you said, you're not just a COVID company. You did have an mRNA vaccine for COVID that maybe saved the world a lot more pain than it would have seen. But you also have a flu vaccine that is driving the stock up today 6.5%. And cancer treatments that we all hope, I think, are going to be successful and could drive revenue another $15 billion starting in 2028. So tell us about the mRNA technology that we all kind of learned about a couple of years ago.
Sure. So mRNA, as you learned about, is an information molecule. We basically code in that molecule what protein we want your body to make. That will be your drug, your medicine. And in cancer now, what we have shown is a huge impact on survival and being able to not have recurrence of disease compared to the best drugs available today to patients. And the third chapter for us after infectious disease vaccine and cancer is rare genetic disease. We are now 3 out of 3 rare genetic disease showing positive data in kids with those diseases that have no hope today. Zero hope.
All right, so back to the flu, because we're getting into flu season. What is your flu vaccine? What is new? What is different? Just tell us about what
What's
you guys are
driving the
bringing.
stock today? Why are people so excited about the flu vaccine?
Because first, we're going to be able to participate and provide a very high efficacy flu vaccine. What we've showed in actually other studies is that actually it's as good as the best vaccine on the market for flu. But what people I think are excited about is the idea of combination, meaning we're going to show before the end of the year flu and COVID combined in a single shot. So in the following years, you won't have to go and get a flu shot in one arm and a COVID shot in the other arm. They'll be combined. And then over time, we're going to keep adding more and more respiratory virus like RSV to the combination as well. So that you can have only one shot early in the fall at the pharmacy, and then you have a happy fall, or in winter, you're not sick.
So, but this is for next year. This is not for this current flu season. Okay, got it. Just want to get clear on the timing.
You can still get your flu vaccine for this.
Well, I'm going to go down to LL2 and get my flu vaccine. I mean, who doesn't do that? But so with mRNA technology, what's it 3 to 5 years down the road? What do you expect that technology to tackle next, maybe?
Yeah. So we're announcing today at R&D Day that we should launch 15 new drugs in the next 5 years. 15
new drugs in the next 5 years.
That's kind of incredible across cancer, infectious disease, and genetic disease. We're also working on autoimmune disease. Think arthritis, Crohn's disease, and so on. We believe we're going to bring 50 more drugs on top of 40 we have in development, 50 from the lab into the clinic in the next 5 years. Around 10 new drugs per year moving from the labs into development. So what you see here is a true platform. There has never been a platform in the biotech pharma industry. As you know, most drugs go to the clinic. They fail. 90% of the drugs starting a phase 1 will never get launched. 90%. If you look at Moderna, because of our platform, because mRNA is an information molecule, we are 3 out of 3 in vaccines. We are 3 out of 3 in rare genetic disease. Cancer, incredible improvements, and it's just the beginning.
All right, this is all because of the mRNA technology, and I have a funding question then. What happens if, the COVID vaccine revenues don't meet your expectations? Can you still fund that kind of growth?
Sure. I mean, if you look at it, we say that this year we should be $6 to $8 billion of sales, which is still a very significant number for turnover. We have $14 billion on the balance sheet that we got through the COVID sales over the last 2 years. And so we can fund around, we think, $25 billion of R&D growth by cash generating by the business and the balance sheet. And we will also not be shy to partner if we have to. We are obsessed about getting those drugs to patients, to the finish line. But if you look at, for example, with Vertex, we partnered for cystic fibrosis for an inhaled mRNA, getting to the lung of the kids that have cystic fibrosis by inhalation. We developed that technology. Yet another 4th cylinder for Moderna to develop a new family of drugs. And so that's what we're trying to do, is push the boundary of science, get more and more drugs, and if we have to partner, we'll partner.
But it's expensive to do, and because of recent legislation, the United States, the Biden administration passed, the United States is going to not only negotiate prices with drug makers, but set prices with drug makers. Is that a concern to you?
Very much so. As the rest of the industry has voiced, you cannot set prices because R&D is risky. As we just talked about, 90% of drugs entering the clinic fail. Very, very high failure rate of the industry as a whole. If you start to set price and not look at the value that is bringing by the drugs, you're going to reduce the ability of pharmaceutical and biotech companies to invest in innovation. And that's a big worry.
But they're going to set prices. So how are you going to deal with it?
So we just need to keep innovating and figure out ways to go after, smaller disease type, selling around the world. Because again, the US, of course, is the #1 market in the world. But other markets are also very important, like Europe, Japan. And so we're going to have to grow internationally as well. But it's a big issue. I'm worried about it.
All right. How about, I always joke that in my next life, I want to come back as a healthcare M&A banker, because every Monday we come in and there's another healthcare deal that you or one of your competitors do. Is there something that you need to buy in the next couple of years to get to where you want to go that maybe is not in your pipeline right now?
No, what is cool about mRNA is we are the world leader in mRNA. Even BioNTech, which is a great company, they are doing small molecule, large molecule, a lot of different technologies. We are only doing mRNA. What we're doing through our BD activity is either buying. We bought a company in Japan over the Christmas break that has a cool technology to make our mRNA operating system stronger and bigger so we can do more drugs. We announced on Monday a deal in cancer with a company in Germany that has very cool science and biology that we can code into the mRNA molecule to do new drugs. So this will do to expand the potential of impacting patients.
All right. Excellent to have you in here. Really appreciate it. And I know you're going to go on television in just a moment. So our listeners will be able to watch you with Alex Steele and Guy Johnson on the European close. Just a fascinating discussion, and also a fascinating move in the stock, up 6.7%.
Yeah, about that. Stefan Bancel, thank you so much for joining us. Stefan is the CEO of Moderna. Again, the ticker symbol for you stock jockeys out there, mRNA. We appreciate that. Thank you so much. All right, looking ahead here at this market here, we are pretty much unchanged here. So, we're going to be very interesting to see how this market, but, Moderna, again, that stock, as you mentioned, Matt, up 6% today, down 37% year to date. So a little bit of a hangover there from probably some of those COVID runs back from the last several years. But it was great to get Mr. Bancel in here to talk about that technology, that mRNA technology. I should have paid attention in chemistry class more.
That's the most fascinating market news of the day. Now, other people would probably say, wait, didn't we get CPI in this morning? Weren't we all waiting for CPI? Hasn't everybody been, holding his breath to see what CPI is going to look like? And to me, the market reaction says, what is CPI? Like, who cares about that?
It's a nothing bagel. But for an economist, it's a big deal, and
I would think that for everybody, I'm frankly surprised by the lack of market reaction or the fact that the market's gaining.
Well, we were talking,
we see inflation on its way up.
Auto insurance up 19%. Tom Keenan and I, we immediately thought of Matt Miller because he's got a whole fleet of cars.
I just got an angry text from my wife about some auto insurance policies that she opened up in the mail this morning.
Wait till you get to the Challenger with the Scat Pack. Good luck with that. Yeah. All right, Michael McKee joins us here. He's an economist. So this CPI data.
I can't save Matt, though.
Yeah, exactly. What's your takeaway, Michael McKee, from the CPI data we got today?
It is something of a non-event in the sense that the Fed has already decided what it's going to do pretty much for the month of September. But it does keep in play the idea of another rate increase before the end of the year. So that kind of takes out the mystery of what the Fed would say and whether they'll take out that extra rate move they'd priced into the dot plot. Because there are some concerning signs, shall we say. That core went down, which was good news, but we did see housing go back up again, and we know home prices are rising. Obviously, energy and gasoline prices are rising. Airfares went up 4.9%, and that was not expected, but they do have higher fuel costs, and now they got to pay all these pilot contracts that they agreed to. So there are a number of things out there that could push inflation back up a little bit. Remember, on a year-over-year basis, we deal with base effects, so we're going to see it's not going to look as bad, but it'll be concerning to the Fed to see that month-over-month change.
All right, how do your friends at the Cowboy Bar out in Jackson Hole, how do you think they're going to take this data?
I think it's the $1 million Cowboy
Is it the $1 million Cowboy?
It's called the $1 million because there's every bar in Jackson Hole is a cowboy bar.
Well, we call it the Cowboy.
The Cowboy. Okay, so
if you're from Jackson, you know what that means.
It's the Cowboy, and you were up on the bar stools with your Fed buddies.
The saddle, yeah, with Tom Keene and his bow tie.
Right. So how do you think your Fed buddies from the Cowboy Bar are going to deal with this?
Well, they're not going to like the fact that gasoline prices are up because they're all driving big pickup trucks, which suck down the gasoline.
But also, they only care about the core, right? The Fed only focuses on the core.
Well, the Fed does, yes, but I'm talking about the Cowboys.
I see. Okay, yeah.
The Fed really cares about PCE, and PCE has been moving more slowly down than CPI, so it's still a concern for them, and they have to watch what happens over the next couple of months.
Have you ever done a shot ski, Paul?
No.
So at bars like this, typically, I've done one at the $1 Million Cowboy Bar, as well as some bars in Taos and in the Alps. They take an old ski, and they sort of glue shot glasses to it at various points so that you and your buddies can all do a shot at once by holding the ski
shot
and knocking
ski.
it back.
Now I get it.
Yeah.
I can see you doing that, can't you, Michael?
Yeah.
Yeah, and I can see you, Michael and Tom.
I would do it with McKee.
I have done that. I was just reading about somebody, I'm trying to remember now who just got appointed to some big job and did a shot ski with a glass of water.
That's okay.
That's
not
like,
cool at
why
all.
did you make the effort?
Why did you make the effort? All right, so, I mean, again here, I mean, it feels a little status quo here. I guess that's kind of what the market's telling us here, status quo. You can, this Fed could stay where they are.
We're all waiting for the dots, right? Next week, a week from today.
I'm just thinking that the one thing that may have changed is that there's not going to be, they're going to keep that dot in there, that extra rise, because they want to keep that in their back pocket as a possibility, given that there are some things that weren't great in this report. But we went into the day thinking that the Fed would hold on September 20th and that they would consider raising again November 1st. And I think that's where we still are right now, which is why markets can focus on other things.
All right, Michael McKee, thank you so much. We appreciate that. Michael McKee does all the economics for Bloomberg News, Bloomberg Television, all that kind of good stuff. Shot ski. How come I hadn't heard of that?
I did
that
it
seems like right down my
in
alley.
Taos with my dad and my 4 brothers. So we found a very big ski. I think it was like an Olin Mark II.
Right.
You know, from back in the day.
Remember the long skis we had back in the day?
Yeah,
I mean,
there used to be. When I learned, they were like, you're 6 foot, and change. Like, you need a 215, you know? And now my carving skis are like 175.
I know. And it's just a whole new way of doing it. But anyway, it's funny. When you're sitting on a chairlift and you see people coming down, you can tell people by their age about how they ski. It's just it's changed, but it's still fun. And Michael McKee out there in Jackson Hole with all the big players earlier. Right now, let's get our news, our world and national news in New York City with Michael Barr.
Thank you very much, Paul. Matt, escaped Pennsylvania convict Danilo Cavalcante has been captured by Chester County authorities this morning.
Chester County government and the various other agencies working on the prisoner escape are proud to announce the subject is in custody. Repeating, subject is in custody.
Sound from OpenMHC.com. Aerial video footage showed Cavalcante wearing a gray long-sleeve shirt with law enforcement officers holding both arms. Later, he stood at the back of an armored vehicle while an officer cut the back of the shirt from neck to waist. It ends a nearly 2-week manhunt that spanned most of Chester County as Cavalcante managed to evade authorities. Emergency workers uncovered more than 5,000 bodies in the wreckage of Libya's eastern city of Derna. Floodwaters smashed through dams and washed away neighborhoods. It's feared as many as 10,000 people are missing. Meanwhile, in Morocco, close to 3,000 people have been killed following the nation's most powerful earthquake in a century. Last-ditch search efforts continue to look for survivors after the earthquake struck late last week. Lee is still a major hurricane. Currently, it's a Category 3 system, but it is expected to be downgraded later today. John Cangialosi is a hurricane specialist with the National Hurricane Center. He says folks in New England should keep an eye on the storm and its track.
It will likely take a little wobble to the left. That is what our forecast is and what a lot of the models are showing. The big question mark is how much of a wobble to the left will it take? That still needs to be ironed out. At this point in time, we think that the focus of the impacts will be generally in northern New England and Atlantic Canada.
John Cangialosi with the National Hurricane Center. Global news 24 hours a day, powered by more than 2,700 journalists and analysts over 120 countries. I'm Michael Barr, and this is Bloomberg.
Hi, everyone.
At Morgan Stanley, old school hard work meets bold new thinking to help you see untapped possibilities and relentlessly work with you to make them real.
To learn more, visit morganstanley.com/YUS. Investing involves risk. Morgan Stanley Smith Barney, LLC.
It can be difficult to talk about sexual assault, but when you're ready to talk, we're ready to listen. The Michigan Sexual Assault Hotline is a free, confidential, and anonymous resource for survivors across the state. Trained counselors are available 24/7 to answer your questions and support your healing journey. Your story matters, and we're here to listen. Call 855-VOICES-4. A message from the Michigan Department of Health and Human Services.
When you get your news from Bloomberg, you don't just get the story. you get the story behind the story. How your EV's battery may not be as green as it seems. Why a decrease in global birth rates could send countries scrambling to increase immigration. You get context, and context changes how you see things, how you change things, because context changes everything. Go to Bloomberg.com to get context.
This message is brought to you by Detroit Wayne Integrated Health Network. Kids are struggling more than ever. Addiction is prevalent, and many times young people are medicating to stop the pain. There's no shame in asking for help.
I see what you guys are saying about the broing out on Bloomberg.
Call the Access Helpline, 800-241-4949. D-Win. We are one. A community of care.
Al Roker here. As a guy with his own catchphrase, I appreciate that Smokey's only said,
"Only you can prevent wildfires."
But I'm filling in because there's a lot more to report. Like when there are parched or windy conditions out there, you gotta be extra careful with things like burning yard waste. After all, wildfires can start anywhere, even in your neck of the woods. Go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
News when you want it. Get the latest headlines with Bloomberg News Now.
Big job cuts are coming to the banking sector.
S&P 500 winners were outnumbered.
The top stories from our global team of reporters at the click of a button.
The deepening real estate slump in China.
U.S. officials pushing to help Ukraine.
Get the latest news when you want it with Bloomberg News Now.
One of the biggest public offerings of the year.
Listen on Bloomberg.com, the Bloomberg Business app, and anywhere you get your podcasts. Bloomberg. Context changes everything.
Victor deployed for the first time to Afghanistan in 2003. He sustained a moderate traumatic brain injury. One of the most important elements of caregiving is taking care of yourself.
For many military veteran caregivers, their caregiving journey starts earlier in life and lasts longer. Visit aarp.org/caregiving for a free military veterans guide to navigate your caregiving journey and better care for your loved one and yourself. Brought to you by AARP and the Ad Council.
Bloomberg Television, first in global business news.
The markets matter, and they are moving.
Yields actually lower globally.
From New York to San Francisco.
Headlines involving Twitter.
From London to Hong Kong.
It has been a week of huge gyration.
The world turns to Bloomberg for market-moving headlines.
All eyes are on what's going on in the tech space.
The dollar really taking control here.
Bloomberg Television, the Bloomberg Business app, and Bloomberg.com. Check your local listings for the cable or satellite provider in your area.
No one knows where this market will go. Right now, it feels like a wild ride. But one thing's for certain, there's a way through it. And the experience and guidance of a Merrill advisor can help you get there. Because where there's a bull, there's a way. Find an advisor at ml.com/bullish.
Merrill, a Bank of America company. What would you like the power to do?
Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor. Member SIPC, a wholly owned subsidiary of Bank of America Corp.
These are the sounds of a dinner. A dinner that almost didn't happen. A dinner now served, thanks to people like you. Due to COVID-19, 17 million more Americans may face hunger. Feeding America is helping our neighbors in need. And if you're able, you can too. Donations are being accepted at feedingamerica.org/coronavirus. Brought to you by the Ad Council and Feeding America. 200 food banks strong.
Get instant access to the financial and political news of Europe every business day.
We watch sterling now shooting up.
Wake up with Bloomberg Daybreak Europe Edition.
The European Central Bank's fight to tame inflation isn't over.
Available now on your podcast feed. Each weekday morning by 7 a.m. in London. Get the news you need to start your day in just 15 minutes. Subscribe to Bloomberg Daybreak Europe Edition today on Apple, Spotify, and everywhere you get your podcasts. Bloomberg. Context changes everything.
Financial advisors, are you looking to add or switch custodians? Are you going independent? Interactive Brokers provides lowest cost trading and turnkey custody solutions for all size firms. Trade globally from a single integrated master account with no ticket charges, no custody fees, no minimums, and no tech, platform, or reporting fees. Plus, IBKR has no advisory team or prop trading group to compete with you for your clients. Switch to the custody solutions that work for you at ibkr.com/RIA.
Neil Armstrong waited 6 hours and 39 minutes to step onto the surface of the moon.
Jackie Robinson waited 20 months to play his first game with the Brooklyn Dodgers. And even DiCaprio had to wait 22 years to win an Oscar. You can wait until your destination. Don't text and drive.
Visit StopTextStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
The business news Wall Street depends on.
Under surveillance this morning, China sliding into deflation.
And the insight that only Bloomberg can provide.
The real news this morning is the German 30-year yield.
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
You have to look at the data as it is. It shows strength and it shows higher inflation.
Listen to Bloomberg Surveillance live weekday mornings at 7 Eastern. Or on demand on Apple, Spotify, and wherever you get your podcasts. Bloomberg. Context changes everything. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and stocks are higher following that mixed inflation report. It's reinforcing speculation that the Fed will pause its rate hikes but refrain from calling the end of its tightening cycle. And we check the markets all day long here on Bloomberg. The S&P 500 up 0.2%, up 10 points at 4472. The Dow Jones Industrial Average up 0.1% or 48 points at 34,696. And the Nasdaq up 1/3% or 51 points at 13,826. 10-year Treasury up 1/32, yield 4.27%. The yield on the 2-year at 4.99%. We did get word that crude oil inventories rose 3.96 million barrels, according to the EIA, and NYMEX crude oil is up 0.1% or 11 cents at $88.96 a barrel. COMEX gold little changed at $19.36 an ounce. The euro 1.0741 against the dollar. The yen 147.50. And the so-called core consumer price index, which excludes food and energy costs, advanced 0.3% from July. It was the first acceleration in 6 months, and from a year ago, it increased 4.3%, and that was in line with estimates. While we continue to watch American Airlines, it is down 3.7%. It slashed its third quarter forecast on a jump in jet fuel prices and higher labor costs. And Citigroup is up 1.6% as it prepares for a wave of job cuts as part of a restructuring. And that's a Bloomberg Business Flash. Paul and Matt.
All right, Karen Moscow, thank you so much. We appreciate that. I mean, the inflation print today, inflation's still out there, Matt. It's down dramatically from its peak, but I guess now it's at a spot where people kind of feel like it's sticky around this level. And the next, if you want to knock off on another 100 basis points of inflation, that's going to be harder work. To me, where I see inflation the most day to day is food.
Yeah, I don't really pay attention when I.
All right. When
I go to the grocery store.
Well, here's.
Are you talking restaurants or
both?
Yeah.
Just everything. Everything. Like the New York Strip.
Dude, Bears, what are you doing right now? What are you doing? What are you doing, Bears?
Every once in a while you treat yourself to a steak.
But to be honest, I pay the most attention to egg prices.
Yeah, well, so
which
does
have
Ken Felio.
recovered. Yeah, true. We're probably looking at different eggs. Like I want.
Well, he
to
buys
buy
like
an
1,000
egg
eggs
from
at a
somebody
time.
who gets each chicken its own home.
No.
Yes, I want the chicken to be treated right, and I've seen those prices come down for the highest quality, most pampered chickens. Those eggs were like $8.99 a dozen. I've seen them come down to $6.99 a dozen. But yeah, I see it for the most part. I think 12 or 13 cents higher than we were the same time last year. So, but the bottom line is we got inflation out today. The headline number was more than it was last month. Year over year, we're looking at 3.7%. And as a result, I think Wall Street is seeing this. Tom Keen this morning said it's nothing burger.
Nothing. Well, here's a note from Gina Martin-Adams, who's our equity strategist for Bloomberg Intelligence, and she kind of answers the question, why aren't stocks reacting much to today's CPI, quote-unquote, surprise? As far as the equity market is concerned, the inflation landscape shifted at the start of the year, i.e. it's going lower. And as long as PPI stays above CPI, it's status quo. So I'm going with that. So, all right, let's check in with somebody who kind of does this stuff for a living, you know, managing money. You got to be right more than you're not. Kara Murphy, CIO at Kestra Investment Management, joins us. Kara, what did you take away as a professional investor from today's CPI print?
Well, I think it was a little ho-hum, which is a good thing. You know, we made a call earlier this year that inflation had officially jumped the shark. And, you know, if you think back to when the Fonz on the Brady Bunch actually jumped the shark, people kept watching the Brady Bunch. It was still a good show, but it wasn't as good as it had been. Similarly with inflation, you know, it's just becoming less of an important story than what it has been.
It is true. I think jumping the shark comes from Happy Days, Kara. That's...
Oh, I'm sorry, you're right.
It was the
Brady Bunch
Fonz.
is another classic, though.
It was the Fonz, I believe.
Yes.
It was water skiing.
Yeah, with the leather jacket.
And jump the shark.
Yes, yes.
All right, so what do you do here, Kara? I mean, we've got stocks. If you look at the S&P 500, had a nice turnaround this year. Yes, it wasn't as broad-based as a lot of folks would like. And so some people are suggesting, all right, kind of back away from some of those, you know, high-growth tech names and maybe try to look at some of the names that haven't participated this year. How are you guys thinking about it?
Yeah, I think our view is consistent with that, and that it's been wonderful in that we've had some, you know, really good strength from a narrow number of names. But in order for the market to continue going up, you have to see things broaden out. We saw, you know, hints of that earlier this summer. Then the Big Seven kind of took over again. But we think longer term, it still makes sense to sort of look in areas of the market that are outside that very concentrated area that have led the market in the first half of the year.
So, how much does the Fed play into this? I mean, we're looking at this inflation number from this morning. We don't think it's going to do much. Wall Street doesn't think it's going to mean much to the Fed. But Mike McKee says they may leave that dot in there that represents one more interest rate hike this year. Does that matter?
I think the terminal rate for the Fed funds rate, so whether the Fed hikes another time, 2 more times, I think that is much less important than how long we stay at that terminal rate, right? Because the longer that we stay at this high level, the more loans that come due and the more it starts to eat out of corporate profits or, you know, individuals' pockets. So I think for me, like listening to the Fed at the next meeting, it's going to be more important to think about that longevity of high rates. You know, and what we've seen is that the market has consistently been pushing out the time at which the Fed starts to cut rates. And, you know, now we're looking at about the middle point of next year. And that, the longer it takes, the more and more impact we see in the overall economic growth.
How about small cap stocks here, Kara? It just seems like it's never the time for small caps. How do you guys think about small cap names?
They have really been taking it on the chin. Again, we saw like some small signs that small caps were outperforming relative to, say, the NASDAQ earlier this summer, and then they've retreated again. We do think that, you know, this world of the Big Seven can only last for so long. And what that means is that, you know, mid cap and small cap names start to come back a little bit more in favor. But it's been hard, right? They've been pretty beaten up over the last couple of years.
So, are there any specific sectors in small caps that you like?
So one area that we've been looked at.
So I am here this morning, but I am working in the background. We're trying to get someone was asking on stream, is Cap still here today? So I am still here today. I'm in the background. We're trying to launch this website. We're getting really close. And so I am still here, but I am working in the background if you want to know. Let me see if I can bring this up. Cap's in a meeting, maybe? There we go. Oh baby, here goes the dude. We had a nice successful retest right here of the hourly trigger. Whoop. Ripping higher, looking to trade that PT1 to the upside. Looking to trade 448 and some change, somewhere in there. So we'll see if we can get up there.
As those companies start to see their debts come due, it's going to take a much bigger sort of chunk out of their regular profits.
Yeah, I'm bullish. I'm bullish here, man. I'm bullish to the upside, 100%. If you may be asking why I'm bullish to the upside, I'll show you right now. And the reason why I'm bullish here is due to, you can see right here, this rolling up, starting to roll up right here. Daily trigger is bullish. All bullish. All the velo bullish. Unless we get a roll here, like some major significant roll down here on trend. Trend is to the upside. To the upside, not the downside. Buyers stepping in here right now, trying to break up and above to the upside. Unless we begin to roll down here, not bearish in any way, shape, or form. So, sellers are going to be here, right, trying to step in, trying to stop this from happening. So I need to see this here. I need to see this break down here for me to get bearish.
iPhone bans. Bloomberg's Ed Ludlow has more.
What is really important with this story is that the spokesperson, Mao Ning, went on to say that China has not issued laws and regulations to ban the purchase of Apple or foreign brand phones. And actually, if you look across the media landscape this morning, many outlets leading on that there is not, according to this spokesperson, an outright ban.
Now, that spokesperson did add that the government does attach great importance to security, and all companies operating in China need to abide by its regulations. Shares of Apple right now, they're down about 0.7%. Meanwhile, a government watchdog agency in France has ordered Apple to pull the iPhone 12 from the French market. The National Frequency Agency, it says it emits levels of electromagnetic radiation that are just too high. It's asking Apple to fix the issue. Now, Apple says the device complies with all regulations governing radiation. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Missed your favorite Bloomberg radio show? Bloomberg Business Week, Masters in Business, Bloomberg Intelligence, and more are also available as podcasts. Listen today on Apple, Spotify, and anywhere else you get your podcasts.
At Morgan Stanley, we see the world with the wonder of new eyes, helping you discover untapped possibilities and relentlessly working with you to make them real. Because grit and vision working in lockstep puts you on the path to your full potential. Old school grit, new world ideas. Morgan Stanley.
To learn more, visit morganstanley.com/YUS. Investing involves risk. Morgan Stanley Smith Barney, LLC.
When you get your news from Bloomberg, you don't just get the story. You get the story behind the story. How your EV's battery may not be as green as it seems. Why a decrease in global birth rates could send countries scrambling to increase immigration. You get context, and context changes how you see things, how you change things, because context changes everything. Go to Bloomberg.com to get context.
The New Deal created American infrastructure that unleashed new opportunity. Today, we're doing it again with massive investment in modernizing our infrastructure to build for tomorrow. At Build America Mutual, we protect your municipal bond investments that help make it happen, building a vibrant future for our communities and your portfolio. Invest in the future of America with BAM insured bonds.
It's hard to keep up with breaking global business news.
It was a mixed day here in the States.
Volatility is sky high.
But at Bloomberg, our seasoned reporters and anchors make it look easy.
European stocks hit a fresh record.
Fares have basically been rendered obsolete.
The rate hike dance is playing out in the belly of the curve.
Are you worried about a wage price spiral?
A lot of Wall Street strategists getting more and more cautious here.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg. Context changes everything.
I learned patience from my adoptive dad. All he had to say was,
"Hey, you got this. Just breathe." Hey, we're pretty good.
Yeah.
Might have to start a band.
I got it.
Learn about adopting a teen from foster care. You can't imagine the reward. Visit adoptuskids.org to find out more. This message is brought to you by Adopt US Kids, the U.S. Department of Health and Human Services, and the Ad Council.
I'm Emily Chang, and on my new show, The Circuit, I speak with the big names in tech, culture, and innovation, and ask, what's next? You'll hear from leading tech CEOs and investors, alongside influencers and celebrity entrepreneurs. This is a chance to go deeper, to meet people in their world, and find out what drives them. Watch The Circuit, Thursday nights from Bloomberg Originals. You can catch it at 10 p.m. Eastern on Bloomberg TV, and on the Bloomberg app and Bloomberg.com. And download the Circuit Companion podcast wherever you get your podcasts.
Your clients all have unique financial journeys. So why?
Just a note to you right now. Be careful. There's a couple. If you're a bear, be careful here of the explosive move to the upside.
Visit Commonwealth.com. Commonwealth Financial Network. Member FINRA SIPC. A registered investment advisor.
Sometimes it seems the crises just keep coming for children.
What is going
COVID,
on Streamlabs?
war, drought, and famine. They can seem downright relentless. But you know what? So can our response. When helping children unites us, we are a force to be reckoned with. Where there is help, there is hope. It's why UNICEF won't stop, ever. Learn more at unicefusa.org/we won't stop.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, we had the S&P 500 up 0.25%. NASDAQ about the same there on the back of that CPI print we had this morning, showing a little bit higher inflation in the core inflation data, but markets seem to be taking it in stride. Yields basically unched on the day with the 10-year giving you 4.28%, 5%. I like that number on the 2-year Treasury. We'll keep an eye on that. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Matt, they got him. Pennsylvania State Police say escaped murderer Danilo Cavalcante has been captured after an extensive search. Cavalcante broke out of a prison in Chester County 14 days ago. Pennsylvania Governor Josh Shapiro.
Thank God there were no injuries to law enforcement or to the public. We obviously became deeply concerned after the suspect was able to steal a weapon. He was apprehended this morning with no shots fired.
Former FBI agent Brad Garrett says many recent developments likely help police get the final push they needed to ultimately track him down.
The two things that probably, or three things that got him caught, one is his exhaustion. Two is I think they were really able in the last 24 hours to narrow their search perimeter. And it sounds like that they got a tip. In other words, I just saw him, he just entered my garage, whatever it might be.
A law enforcement official says authorities used thermal imaging from the aircraft to pinpoint and capture Cavalcante. North Korea's Kim Jong-un vowed full and unconditional support for Russia's Vladimir Putin. Two leaders held a summit in Russia that the U.S. warns could lead to a deal to supply ammunition for Moscow's war in Ukraine. A story now about sinus medications that have been on the market for decades. An FDA advisory committee found over-the-counter oral phenylephrine, or PE, does not alleviate nasal congestion because it's processed by the body before it reaches the nasal passages. PE is one of the ingredients in such things as Sudafed PE and Mucinex. Dr. Purvi Parikh is an allergist at NYU Langone.
This ingredient, phenylephrine, is in so many different cold medicines. That's why it is important to kind of educate yourself on what to look for and just avoid that ingredient.
Dr. Parikh says that although the nasal sprays are much better with PE because they work and are considered to be the better option. Global news 24 hours a day, powered by more than 2,700 journalists and analysts over 120 countries. I'm Michael Barr, and this is Bloomberg. Paul Matt.
Hey, Michael Barr, thank you so much. We appreciate that. Bloomberg Business Week out with its rankings of top business schools, MBA programs, and the folks in the MBA world highly anticipate this issue every year. Headline, number 1, Stanford. Number 2, Chicago. And tied for 3rd, Dartmouth. And I think it's a little bit of a surprise, our good friends down at the University of Virginia. Harvard comes in, Harvard Business School at 6. A little surprise there. University of Pennsylvania's Wharton School, number 8. And then my Duke University, 14. And I know the folks down in Durham, North Carolina at Duke are not going to be happy with that because we like to think of ourselves as a solid top 10, maybe top 5. But these are some rankings.
Well, this is exactly. I mean, there are different rankings from different sources. This is Bloomberg Business Week's B School ranking.
I think that's kind of the number 1 in terms of just kind of what people pay attention to out there.
In terms of rankings, Business Week ranks the best ranker.
Well, I just think it's the most notable one, and I'll tell you that it's the folks at these schools they highly anticipate these things because if you're, especially for international students, if you don't know that much about the United States business schools, one of your first places to go is just the rankings, the simple rankings. I'll apply to the top 5, the top 10.
If you click into the rankings, you can see different areas.
Yep.
Do you want to go to a school with the most diversity? Do you want to go to a school that has a focus on entrepreneurship or networking? Do you want to learn more, or do you want to get paid? In terms of compensation, Dartmouth ranks number 1, then Columbia, Chicago, and Virginia.
Yep. So the rankings are out. Bloomberg Business Week magazine, highly anticipated for the folks in that MBA world. This is Bloomberg.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Kaylee Lyons, Bloomberg television host. She's down in Washington, D.C. She's going to join us from the Senate hearing on AI with the top leaders in tech. Let's see how that's playing out. Plus, Encore Crawford, Executive VP and Portfolio Manager at Alger, is going to talk markets with us. And then on the macro view...
Ruh-roh, Bears, watch out, run, Bears, run!
Economy. But let's kick this 11 o'clock hour off with Mr. Charlie Powell.
All right, I thank you very much, Paul. We've got the Dow, the S&P, NASDAQ all pushing higher. Best level of the morning right now on the S&P. CPI Wednesday and right to the numbers. The S&P up 12 now, a gain of 0.3%. The S&P at 44.74. The Dow's up 83, up 0.2%. NASDAQ, the composite index, up 48 points now, higher by 0.3%. 10-year yield, 4.27% with a 2-year, 5.00%. Spot gold down $1 the ounce to $19.12. And right now we have got West Texas Intermediate crude, 89.18 a barrel. WTI up by 0.4%. Brent, the global benchmark, holding above $92 a barrel, up now by about 0.3%. Underlying inflation ran at a faster than expected monthly pace in August, leaving the door open for additional interest rate hikes from the Fed. The so-called core consumer price index, which excludes food and energy, advanced 0.3% from July, marking the first acceleration since February. Reaction to this morning's CPI data from Torsten Slok, chief economist at Apollo Global Management.
We see still a number of areas where inflation is certainly coming down, but most importantly in services, there's still a number of question marks. In particular, you have a number of areas where you still see inflation moving up. Yes, this is so far so good, but all these numbers, which are 3-4%, are still above the Fed's 2% inflation target.
And you can hear more of the conversation with Torsten Slok on the Surveillance podcast. You can download it wherever you get your podcasts. Citigroup is preparing for a wave of job cuts as CEO Jane Fraser restructures the Wall Street giant to operate from 5 main businesses. Citigroup shares are up now by 1.6%. Again, recapping, stocks are higher. The S&P up 10, up 0.2%, 10-year yield 4.28%. I'm Charlie Pellet. Matt and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. So, Matt, apparently some of the big tech CEO mogul types are in Washington, D.C., and they're meeting with a bunch of Congress.
Like an
folks.
AI
yes,
meeting.
Talking AI. I mean, how simplified do they have to make it for these folks? I mean, they're going to have to say
for Washington, yeah. I mean, even for you and me, I think just the broad strokes executive summary would be fine.
Just fine.
But it'll be, I think, fascinating because Elon Musk is apparently there, and the guy from OpenAI is apparently there. So
some heavy hitters.
Yeah.
You know who's also there? Kayleigh Lines from Bloomberg Television. She's down there in D.C., and she joins us now. Kayleigh, I would love to be a fly on the wall in this meeting here. I know Chuck Schumer, the senator from New York, is kind of arranging this thing, I guess is the word.
Is it a closed-door meeting?
I think it's tell us about this meeting, Kayleigh. What's going on?
Well, it is a closed-door meeting, you're right, and there has been a bit of controversy around that. You have senators like Josh Hawley, who was actually just out here near the rotunda speaking to reporters, saying he is boycotting this summit because it is closed-door, and that's on the Republican side. On the Democratic side, you had Senator Elizabeth Warren with a lot of criticism on that as well. She said that this shouldn't be closed-door. They should hold a public hearing so the public can hear what all of these individuals have to say and that senators can ask questions. Now, Senator Amy Klobuchar did tell some of our colleagues here at Bloomberg that senators did have a chance to share questions with Schumer that may be asked in the meeting. But right now, what we know is that there's 22 individuals in there. They range from billionaires, big tech CEOs, to union representatives from the likes of the teachers unions or the AFL-CIO. And they're each giving a few minutes of opening remarks. And then we understand that Schumer is going to moderate a bit of a conversation from there. This current session they're in goes until 1 p.m.
So is the idea here to try and get the folks in Congress to either support the industry with various stimuli or to regulate the industry with various oversight rules?
Well, what the organizers of this, from Chuck Schumer, the, of course, majority leader in the Senate, to the Republican Senator Mike Rounds of South Dakota, who also helped organize this, is that they are just trying to hear from them. They want to hear as much as possible in a very short period of time. Mike Rounds told me yesterday they're going to take what they hear with a grain of salt, but still it's about starting the conversation. And Senator John Cornyn actually just walked out of the room and told reporters that it was pretty much a very general discussion from Musk and Zuckerberg and the others. He said the fact that this meeting occurred might be more important, actually, than what's being said. But we do know from sources in the room that my colleague Anna Edgerton is speaking with that some of them are voicing concern potentially about the regulatory path forward. The CEO of IBM saying that an AI licensing regime would be a serious blow to open innovation and risk creating a form of regulatory capture. So certainly some conversation about what the regulatory regime should look like going forward is being had in there.
So is this a bipartisan meeting today, and I'm wondering who got invited and who didn't, and how that kind of plays out, as you mentioned?
Well, if you are a U.S. Senator, you are invited to this meeting.
Okay.
Again, not everyone is going. Senator Hawley's sitting it out, but there are the majority of senators that have been filtering in and out of the room today. It is bipartisan. It's being co-hosted by both Democratic Senator Chuck Schumer as well as other colleagues on the other side of the aisle. When I spoke with Senator Mike Rounds yesterday, he said the effort is bipartisan. They want to keep it that way. We know there is not a lot of issues here on Capitol Hill that you can get the two sides to agree on, but the idea that you need to do something on AI is one of those few.
What is the feeling in Washington, just broadly speaking, Kayleigh, as it relates to AI? Do the folks have an appreciation for how important this is, how pervasive this technology can be? What's the feeling in D.C.?
I would say the appreciation is there, the understanding maybe not so, and that's part of what today is about, just trying to get more information on this technology that is moving at a far quicker pace than, frankly, anything here in Washington moves. So there is an understanding that there should be guardrails put around this, that this is technology that's going to shape the future, and as a result, Congress has to pay attention. How quickly Congress will actually do anything in that regard to try and shape what the regulatory regime is going forward, what that timeline looks like, that's an entirely different question. Of course, the understanding gap here as well. As we know, there is a certain age of a lot of senators, and they're not the most tech-savvy individuals in the world, which is probably what a lot of the CEOs and others are here to do, is educate first
Just
and
a note
foremost.
here. If you are watching the screen below, let's just take a quick look together here. So if you just take a quick look here, this is trend right here. You can see this trend just going straight up. Now coming into that little bit of resistance right there. If there is a break above where we currently are in price, we should get kind of squeezy. Let's look over on the main screen here. And just so that you can see here, just right up in here, it's just that's actual trend. So you want to be breaking above this trend and start to head higher. You don't want to get thrown down here, anything nonsense like that, grinding higher moves, stuff like that, trying to get above. So just be conscious and aware of it. Sorry, I'm on the stream right now. Hang tight, brother. And I'll let you guys get back to it out there.
Talking about AI. I'd love to be a fly on the wall there. All right, Matt, you know how I love to look at people's educational backgrounds and how they apply them to their jobs. Our next guest, this is great. BS in both mechanical engineering and materials sciences, and engineering. So I'm immediately not talking to that person at the cocktail party. And that's from University of California, Berkeley. So they know what they're doing out there. Then you go get a master's and a PhD in materials science and engineering from Stanford.
They're pretty smart.
They're pretty smart.
Yeah.
So what do you do with that? You go trade stocks. How does that work? I mean, it's just amazing what people do. Ankur Crawford joins us. She's a portfolio manager and executive VP at Alger. Ankur, thank you so much for joining us here in our Bloomberg Interactive Broker Studio. I just love looking at people's, kind of how they kind of came up through the business. So, but you've been at Alger since September 2004. So you've seen some market movements. What are you guys at Alger doing now? Stock market's up double digits this year. We've had a little bit of a bounce back off of an ugly 2022. Now what do we do?
Yeah, I think it's not going to be quite as easy as it has been over the last 9 months.
Okay.
And we're going into choppier waters. And in part because we're just waiting for the economy to respond, and we just don't know the magnitude of how it's going to respond. Is it going to be a soft landing, hard landing, no landing? And I think no landing is coming off the table. I think the expectation is now for soft landing, and there's arguments for hard landing. So I think because of that uncertainty in the market right now, the consumer resilience is starting to taper. The job market is starting to come off a boil. We're going to see a choppier market.
Does landing imply cuts? I mean, in a hard landing, clearly you'd think the Fed's going to cut because that means we're in a bad recession. I don't totally know what soft landing means in terms of a Fed reaction, but do they cut, or I know what a soft landing is like in terms of an airplane. I'm just saying, like, when you come down, right, and just set it down gently, I guess growth doesn't contract, but it's also not expanding at a massive pace. And does the Fed then cut, or do they leave rates higher for longer?
You know what? And that's the risk. They could actually leave rates higher for longer in that scenario. So it's funny because the people that believe that the Fed is going to cut and they're excited about the Fed cuts, I look at them and say, well, you know what? First, the economy has to get really bad if they're going to cut at this pace.
I will warn you that Paul thinks that we're going to have a nice soft landing and the Fed's going to cut.
Yeah, I'm a former equity analyst. I'm very optimistic.
Oh, tell me why.
Yes, exactly.
A former equity analyst with a floating rate mortgage. So
Yes.
he would like to refi,
Maybe that's wishful thinking. Then.
I know. I've been accused of that before. All right. You know, we were just talking to Kaylee Lyons from Bloomberg Television. She's down in D.C. kind of reporting on this AI thing in Congress. How do you guys at Alger view AI? Because you could argue that's been a big driver of the performance this year.
Yeah, we are very, very bullish on AI. We've been bullish on AI, and we think that Gen AI and what we're seeing with these LLM models,
large language models, right?
The large language models that are democratizing.
Using your PhD in engineering.
I like it.
See?
I like it.
That it's basically democratizing technology, and it's going to create a step function up in adoption rates for all kinds of businesses, through healthcare, industrials, tech. So highly bullish on AI. The adoption is going to be, we think, 30 to 40% by the end of this decade, which is in any kind of industrial revolution that we've seen, it's the fastest adoption rate we're going to see.
But will it hit the labor market? I mean, right now we saw unemployment come up to like 3.8%, right?
Yep.
But that was all because more people were coming back in. So it's still a very tight, very strong labor market. That's what we hear. Is AI going to displace a lot of jobs by the end of the decade?
I think it's hard to say, but just on before we move on to AI, on the unemployment and employment, Walmart and Best Buy, both at the conferences this week, indicated that Walmart, we know, is taking down starting wages for jobs.
They're taking down.
They're taking down wages.
Really?
Best Buy indicated that maybe they would do low single digits or worse than low single digits, which would be, we think that means zero.
Right.
So wage growth is now starting to come off a boil, which is the first indication in the economy that employment's starting to turn.
Interesting. So you see the labor market kind of flagging a little bit.
Yeah, so if you look at hours worked is coming off its peaks. It's been declining for a year and a half. Hourly wages, right now it's still rising. I think we start to see a moderation. But that's just on the employment side. So as for Gen AI and what the impact will be, what we're hearing right now is companies that are deploying Gen AI inside of their own businesses today, they're not firing people, but they don't have to hire as many people because productivity is increasing. So does it change the composition of the labor market and the demand for labor? It might. But what it means that we're going to have to retool. We're going to have to retool our economy and our workforce.
Oh boy, that's just what a lot of folks want to hear, right? First they got jammed by people jobs going across seas. Now they have to do this whole worry about AI. All right, when I think of Fred Alger Asset Management, or Alger, I think growth investors. Where are you guys looking? What sectors are kind of interesting to you? We mentioned maybe tech and AI and that type of thing. Where else are you guys looking for opportunities?
I think when people think of AI and investors think of AI, they automatically say NVIDIA or Microsoft. And yes, we are big holders of both Microsoft, NVIDIA, and the common AI platforms. But what they forget is that in order to deploy all of this AI, we also need to we need to build data centers.
Okay.
There are no data centers. Data centers are full. We need electricity.
So data centers are full. Where are the data centers and why are they full?
Well, in part, they're full because there's no electricity going to the data centers. And so there's going to have to be this CapEx cycle that supports the utilities to provide electricity to the data center. And so, there's a lot of interesting names, like Quanta PWR, or, we have an investment in a company called Vertus, which is a cooling company. And so they basically they provide widgets into a data center, and one of those widgets is the new cooling mechanism that you're going to need for these Gen AI servers. So there's
Digital Bridge.
There's different ways
There's
different ways to play this trend in industrials and other parts of the economy that we're also focused on.
That's interesting. We did a big story about Mexico and how difficult it is to be reshoring there because they just don't have the infrastructure.
Is that right? Okay.
Right? Yeah. And I guess the same problem faces generative AI because you need to have a lot more giant server farms set up to run all the NVIDIA chips that are getting ordered.
Well, don't we have a lot of flyover territory that put a big server farm out there?
Yeah, but you got to put it up. I mean, it takes money, right? You need the bulldozers. You need all the CAT equipment.
Yeah, that's what we're talking about.
And you got to put in the computers. So,
are you concerned about valuation in this marketplace? Because a lot of folks say, hey, if you strip out the Magnificent Seven, this market's not so expensive. How do you guys think about valuation?
So we kind of do it as a sum of the parts, and we look at the components. So you look at Microsoft. Microsoft currently trades at, on granted, you have to look out to 2025 when they have a full blossoming of their AI, or at least they're on way to that. It trades at a high teens multiple. You look at Meta. Meta trades at a mid-teens multiple.
Mm-hmm.
Google at a mid to high teens multiple on 2024 numbers. So, there are portions of the market, big portions of the market, that actually don't screen as having necessarily an egregious valuation.
Mm-hmm.
Look, now there's other portions of the market that, one can say, the growthier stuff that has worked this year. Could it pull back? It could.
Okay. Ankur Crawford, thank you so much for joining us. Really appreciate it. Ankur Crawford, she is a portfolio manager and executive vice president at Alger, the asset management folks. Some good folks there. I've known them
and
for
a
a long
doctor
time.
and an engineer.
I know. This is Bloomberg. Let's get some company news right now. Lisa Mateo.
Thanks, Paul. Moderna could be on its way to seek regulatory approval for its flu shot. The company said a reformulated version of its messenger RNA-based influenza vaccine met its primary goals in a final stage trial. And the reformulated vaccine produced a stronger immune response against all 4 strains of the virus than a traditional flu shot. Moderna shares right now, well, they are up about 5%. U.S. health regulators issue warnings about unimproved over-the-counter eye drops. More from Bloomberg's Steve Rappaport.
Lisa, the FDA considers some eye drops sold by CVS, Walgreens, and other companies to be unapproved new drugs that are illegally marketed. The agency in warning letters says those eye drops pose a public health concern because they were manufactured by companies known to have quality control issues related to product sterility. CVS and Walgreens say they've stopped selling the products in question and offered refunds to customers who purchased them.
Shares of CVS right now, they're up about 0.3%. Walgreens shares, they're down about 0.8%. A ride-hailing service wants to improve safety for its customers. Bloomberg's Kimberly Adams has that story.
Lyft is launching a feature that will let women riders request women drivers in response to demand for increased safety protections. The company says 23% of its drivers are women, but account for nearly half of its riders.
Lyft shares right now up about 0.2%. And Amazon delivery drivers will be getting raises. The e-commerce giant plans to invest more than $440 million next year so its delivery service partners can provide higher wages and more benefits. Amazon expects drivers will be earning an average of $20.50 an hour. Shares of Amazon right now up about 2%. Those are the company stories we're following. I'm Lisa Mateo.
Bloomberg Radio is where you are. Get live business news and market headlines from anywhere, 24 hours a day, via your mobile device. Listen on the iHeartRadio app. Tune in, the Bloomberg Business app, and Bloomberg.com. The Bloomberg Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ solidly in the green. NASDAQ 100 index up by 0.5%. NASDAQ up 0.4%, higher right now by 53 points. S&P up 11, a gain there of 0.2%, while the Dow is advancing by 57 points, higher by 0.2%. S&P right now at 44.74. 10-year yield 4.27% with a 2-year at 4.99%. Spot gold $19.12 the ounce, a little change now, down by $1. We have got West Texas Intermediate crude also little changed, $88.90 for a barrel. Right now we have got WTI up by 6 cents. Gold again down 91 cents the ounce to $19.12, a drop there of less than 0.1%. CPI Wednesday. What about the market outlook given the economic backdrop? Ankur Crawford is portfolio manager at Fred Alger Management. She was a guest moments ago right here on Bloomberg Markets.
I think the expectation is now for soft landing, and there's arguments for hard landing. So I think because of that uncertainty in the market right now, the consumer resilience is starting to taper, the job market is starting to come off a boil. We're going to see a choppier market.
And you can hear more of the conversation on the Tape podcast. You can download it wherever you get your podcasts. American Airlines Group has slashed its third quarter earnings outlook on a jump in jet fuel prices and payment of roughly $230 million in retroactive salary under a new contract for its pilots. American Airlines shares, they are lower now by 3.7%. Recapping, stocks higher, S&P up 13, higher by 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Darn right it is. One of the best in the business. All right, so Matt, I'm sitting here. I got a 2-year Treasury at 5%. I'm just parking, the Sweeney
Well,
cash
you do
there,
have
man.
then reinvestment risk, right? Because you can't leave it there forever.
All right. I can just keep rolling it.
I mean, you could, but there's a cost to that, right?
Oh, I see what you're saying. Okay.
So, and I feel like you could get into money markets for the same thing. I mean, my wife is in a Marcus account that
my
pays
daughter's in one of those.
5.3%.
Exactly.
Smart
minds think alike there.
Yeah.
All right, let's talk to somebody who does this stuff for a living. Ron Conzo joins us. He's the CEO of Wealth Alliance. He joins us live here in our Bloomberg Interactive Broker studio. Rob, what are you telling your clients here? I mean, 2022 is such a rough year. Equities brutally down. Fixed income down. This year we're bouncing back a little bit, but what are you telling your clients these days?
It's a mixed bag, and I think, unfortunately, the S&P has given a very skewed vision of what's going on.
Yep.
I think it's really given people with the 60-40 and the 50-50 some pause, and it's a little unfair. S&P up year to date, roughly 17, and most of that comes from 7 stocks, as we all know. But if you pull those out or equally weighted, it's up about 4.5. You look at the 60-50, the 50-50, it looks pretty good. So we're telling people, try not to make the big bets. Watch your fixed income, augment with dividend stocks, with dividend ETFs. I think that's a good play going forward.
We look at, right now, Brent crude is trading for $92, right? NYMEX at 88.89. Is that a sign that, demand is going to be there, the economy is humming along, things are going great, or is it something that's going to break the markets back, energy prices this high?
I think it's one of many signs that's indicating what's going on with the economy, and this is what the Fed is wrestling with. At the end of the day, you're watching labor do its thing. The CPI report just came out, bumped up a little, but core just keeps going down. So just energy is one component. If you look at the core and pull out energy, you know what? Economy going down, inflation going down, and that's what the Fed wants to see. Will they hold interest rates? I think so. Do I see an uptick? No. But it's anyone's game.
But you think higher for longer. You don't think the Fed's going to have to come in and cut next year?
No, I think higher for longer. If they do cut, it'll be well into 2024. But depending on what the data shows, if we still keep getting this downturn in core CPI and also core PCE, 2 big indicators, we'll see. And labor report coming out Friday is a big one.
Yep. Are there when you talk to your clients, do they want to be taking on risk here, or do they want you to be pulling back on risk? Where were they in terms of just thinking about how they feel about things?
Well, we all, not just clients, but we're all those type of people that when you see growth go skyrocketing up year to date, it's up 9%, and value is only up 1%.
Okay.
So what happens? You look in the rearview mirror and say, "Hey, I got to get in on this game."
Yep.
So people have tendency of saying, "How do I get that growth manager who was up 30% or so?" As advisors, and I'm speaking for many, you try to temper that, and you try to say, "Hey, let's get back to basics. Value is up 1%. Time to get in. Time to get a good dividend. Augment your bond portfolio. Don't play that trap and chase the hot dot." That's where we're going.
You're preaching to the choir.
Darn right.
Although you're a momentum guy too, right?
I can be momentum. Yeah.
I mean, the Qs.
I don't have to be smart. I just have to be timely.
The Qs have been on fire this year and over the last 5 years, and as we keep telling people, they outperform every active manager out there. Is that going to continue, that tech growth, run that we've seen for so long?
Well, tech is, the 2 letters that are driving everything right now. AI, right? And you look at companies like Microsoft, NVIDIA, and even some of this Tesla. Tesla's become from a car company to a technology company. So it's hard to say and hard to think that AI won't keep driving tech on some level but it has to. I believe that, and you never want to say 100%, but I think tech is here to stay, and interest rates will obviously affect that. But AI is the next big boom. We'll see where that goes.
How do you use ETFs in kind of your work with your clients?
Yeah, ETFs, we mix ETFs with active managers, different asset classes. Like on the value side, I just said, there's some good ETFs that are doing their thing, giving a 4% dividend. So we're a mixed bag, as many advisors are, trying to mix active management with ETFs. We typically don't play all in one space, and try to get some diversification and play out and ride out these storms and get a good rate of return going forward.
Don't put all your eggs in one basket, Paul.
Yep, I know.
Very new thought.
He's a muni guy.
Yeah.
By the way.
Muni guy.
Yeah, exactly. I mean, do you now we've got rates up where they are? How do you think about just fixed income and credit in general? I mean, again, I'm sure you get phone calls saying, "Hey, just buy 2-year treasuries for me. I can get 5% and sleep like sleep well."
Paul, the 100%. We're asked that every other day. I think the big surprise was the fixed income market for 2022. Everyone was bullish on it, big time. What happened? Interest rates just rose, brought the market values down, and now total return fixed income is flat. But you can't ignore the yield that you're getting on those bonds. So bonds are good. They're giving a great yield. Are you looking for a big, play on total return? Didn't happen this year. Could continue. We'll see if rates moderate or come down.
But in general, you sound pretty conservative. So you're not rushing out there trying to wring out the last basis point of alpha.
No, Matt. No. We're not trying to do that. We're trying to get, I think the name of the game is consistent returns, limit your volatility, and walk away with something that's respectable. And I think the Wealth Alliance does that pretty well.
So I guess the question for a lot of folks is, is that 60-40 portfolio, a lot of people last year are saying, boy, that's got crushed. That's a thing of the past in this modern world. How do you think about that? It feels like you're kind of still there with the diversification
The
play.
60-40 really was an eye-opener last year. Bonds made that happen. Fixed income dropped 13 to 14%. That hurts. So suddenly everyone was down on the 60-40 in 2022. Year to date, the 60-40 is keeping up with an equally weighted S&P and a Dow. Suddenly the 60-40 looks pretty good. So I think it's a strategy that could be augmented, but it's a good strategy.
Are there some sectors of the market that you really like here? I mean, our previous guest at Fred Alger Asset Management, they're growth investors, and they're just all in on this AI thing. Are there some areas of the market that you like here, or some sectors that you like right here you think your clients should really be paying attention to?
Well, more so on the asset side, as I keep saying. I love the value play. I love walking away with a great dividend, and it recently got beat up. So, things like that make me feel pretty good, and I feel very comfortable going into it. Chasing growth right now is scary, incredibly volatile, and that's not something we like to do. So I like the value play. That's where we're going.
On the other hand, Apple is a bet that seems to never go bad, right? I mean, Paul's angry and has been for years that they don't pay a dividend. But they buy back like $100 billion of stock every year.
Look, Apple is, you struck gold if you bought Apple way back when. It's anyone's play. It's a great company, and they're doing their thing. But I would have loved to have Apple back in 1980. It would have been great.
Do you think there's anything out there now is kind of like that you're paying attention to? I mean, is there some name that you guys have, or are you just looking for the kind of the consistency in returns?
No, we're a consistency return shop, but again, hard to ignore the capital outlay that Microsoft, NVIDIA has put into AI. I mean, you have companies that large putting that much money into a play. I got to be honest with you guys, it's hard to turn your back to it.
Yep.
That's why Ankur likes the data servers. The data centers.
Yep, absolutely.
The server farms.
Server farms. I mean, there's a million ways to play
Well, the
that
energy
space.
plays there are also key. Because you got to power those and cool those places down.
I know. It's all good stuff. All right, you can do that through some REITs and things like that. Rob Conzo, thank you so much. Rob is the CEO of Wealth Alliance. Before that, he was at Morgan Stanley and UBS. He escaped from the accounting business early in his career, so kudos on that. Looking at the market right here, S&P 500 up 1/3%. The NASDAQ up about a 0.5%.
Hey, just give me I'm going to check in with you guys for a minute here. I just want to keep your eye on something here. So just where we are right now, right? Do we roll down here? Is this like the grind up kind of a thing, right? Where you kind of like watching that, right? We know this is trend right here. So the trend is here. So pay close attention. Trend is above, right? So getting back into trend is what bulls want, right? To get back in trend. Right now, bulls not in trend still, right? Trying to smash up in a trend, smash up in a trend, smash up in a trend. They want to get above, not below for sellers to step in, right? You don't want to see these sellers keep stepping in and trying to defend this, right? To the downside. They're going to keep trying to plunge this to the depths of hell. But we're going to look at something that's very important. So we're going to go over to the trigger screen here, and we're going to look at Apple specifically. So the Apple 180, so we're at 175.14, 175.25 right now on Apple. Now their intraday, like day trader kind of stuff, it's looking like it wants to rip here, 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 and the daily looks like it wants to rip to the upside. But there is more danger to the downside for Apple. So if you're at home right now, I want you to pay attention to a few things. Like, so number one, the 5-minute trigger is max bearish, hourly trigger, max bearish. That's actually a bullish signal on swing trading for the bulls. If we were to get the daily trigger bearish and the weekly trigger bearish, that would mean that we're flipping to bears on Apple. So we don't have that quite yet, where we're teeing off of the hourly, the daily to the downside on Apple right now. We don't have that volatility on this ticker. So until we get the daily and weekly to turn bearish, okay? So that's this one right here. Until that turns bearish, it's fairly neutral right now on Apple, right? There's no like, hey, we're going to be teeing off this stuff. But I do want you to pay attention to Apple specifically, and I want you to pay attention to some key levels. This 176.07 is a key level right here. This 176.67 or 176.06. This is a key level. And your next key level for Apple is going to be 182.09. So these two levels right here are key levels. As long as price stays below, I'm not a happy guy, because if this daily comes down, if this daily comes down and begins to trade below the weekly, I will actually turn bullish on Apple. Right, so I don't like seeing this. It's not there yet, but I don't like to see. So it's a key level for you. So 182.09, key level. 176.07, key level. It doesn't necessarily need to carry the stock market. All of those 180 Cs for this Friday are near dead. I think they're under 20 cents now. So you are looking for, can we trade that back up, right? The bulls want to see into next week a recovery of some sort at minimum. And truly for the market to get bullish, you want to see Apple's price above 182. So if you're a bull and you're like, hey, I'm bullish on the stock market, or I don't know, I want to see the bearish count thesis on Elliott Wave to be gone, you can likely use 182 on Apple as like a side check, right? If you're like actually like, hey, the seller's thesis is dead. If you're looking for that dead confirmation, it's above 182 on Apple. Okay, it's a key number here for bulls is to trade Apple higher and defend 182, like defend it, right? And start heading higher again. If they start heading higher on 182, I assure you, you are going to see some crazy moves to the upside. So keep your eye on that 182 on Apple. Maybe make an alert at home or something like that. Whether you're a buyer or seller, I don't care. Just if you're in this market, set an alert on 182 and some change. Pay attention to that level, whether you're a bull or a bear. It's going to give you some kind of insight if the bearish down thesis is gone or not. Now, for you sellers out there, you know what you need to do, right? You're already underneath the weekly trigger. Not good to see. You want to be defending this 176 to the downside. And even if you get the squeeze up to 182, you want to be defending that as well. So that 182 is like a key level for sellers. This weekly is a key level as well for sellers. You need to be defending these two numbers. Make sure that you're selling this down, that you are holding the line here. If you get squeezed out, that's your next place to send this market to the depths of hell. So that bear thesis on the market still alive at the moment, or at least Apple's saying it's still alive. Everything here says what this is, how you would interpret this over here is you're neutral on Apple currently, and you are in a short position on Apple currently, unless we do turn up. Though it is leaning towards the bottom for bears right now on this hourly trigger. So there is some kind of an expectation of a squeeze higher here on Apple. But, as long as we stay below this hourly trigger, the weekly trigger, I'm neutral here until we start to roll down. So just pay attention to Apple. Apple's giving some really good signals right now. Just watch this right here. You can even watch this like this. Just at home, make yourself a nice little chart. Make yourself a nice little line going like this, and you can kind of see it going up and down and up and down until this whole thing fails, like you start failing down here. We are bullish right now on the stock market, grinding higher, climbing the wall of worry right now. Hey, thanks, Cowboy Trader. We're going to be releasing the tool here in the coming days. It is imminent. We are imminent on launching here. We are imminent.
Video on YouTube.
Did you?
Kind of my first YouTube post.
Look at you going all social.
About the Aston Martin DBX 707. And I think,
Bulls want to be defending this hard and heavy here. They want to be defending this.
But it's spelled
to
with
break
fours
up
instead
into
of A's.
trend. They want to break
L4ST,
into trend.
C4LL.
Okay.
They want to get up inside that trend. They want to defend this heavily right here. This bar
got the IPO market
wants to be defended. Or Bulls need to be defending that bar right there.
Bailey Lipschultz, he covers all the markets for us. And then Kunjan Sobhani, he leads semiconductor analyst for Bloomberg Intelligence. He's based out there in the beautiful San Francisco office on Pier 3 down there in the Embarcadero. Great stuff out there. He joins us via Zoom. Bailey, I want to start with you. Birkenstock. When I think Birkenstock, I think Matt Miller. And they're going public. Talk to us about this company and what this deal is.
Yeah, the company filed for their IPO yesterday evening, kind of an anticipated. Bloomberg had been all over that, expecting that they will target an initial valuation of about $8 billion. Looking at some of the results that they laid out, though, profitable, growing, the two things that investors are really looking for. They're L. Catterton backed, so interesting deal laying out for this company when you look at kind of where we are talking to some of the analysts and investors. Latest in a string of consumer-facing companies that have filed. So consumer, if you're profitable, if you're growing and you have durability, some insight into where you're going forward, seems to be one of the areas alongside tech that there is interest both from the company and from investors.
All right, so that's nothing that Kunjan cares about.
No.
He's a lead semiconductor analyst. Yep. Maybe you're wearing Birkenstocks, Kunjan, but you're focused, I guess, primarily on ARM, right?
Yeah,
That's right.
Talk to us about this IPO. ARM is tell us what ARM is, and tell us kind of what the pitch is from your perspective.
Yeah, so ARM is a semiconductor design IP company. They don't make chips; they make an IP which other chip makers can use and for creating chips. Historically, they have the largest, entire market when it comes to a smartphone, 99% market share. Wow. So that's what they were historically. Then when SoftBank bought them, the play was that IoT is supposed to be this big thing. So they got into IoT. They have
Internet of Things, right?
Internet of Things, yes, and they're still a dominant player in that market. The pitch right now for the IPO is really on AI, as is for every semiconductor company these days. Right now, they have single-digit market share in data center and AI, but the pitch is that market share will grow, and they are expected to be the fastest growing in that sector.
All right, but Kunjan, you've been around. We hired you away from Deutsche Bank, so major upgrade there. Kunjan, you've seen this stuff come and go. You know what the real deal is. They're asking me at the IPO to buy a phone chip design company, but pay an AI multiple. Is that the gig?
That is almost yes.
Okay. Are you buying it?
So when they came out with the initial target of 60 to 70, we wrote that this seems very ambitious, given exactly one of the reasons what you pointed out. But the pricing that they came out, which is midpoint of 50, we like that as a starting point. We thought that would invite some attractive, positive discussions from the investors, and it seems from the data we have heard that they are numerous times oversubscribed.
I love you, Beartown Sheriff.
But yes, to answer your question, look, this happens. I was also in banking before, so I've done IPOs for semi companies, and this is how usually the conversation goes during IPOs. People are pitching way far out, like what this can be in 5 years. And the theory is, if you believe that thesis, you're buying it today for lower, because once it gets there, once they have a lot of data center revenues, they're going to get a lot more premium for their valuation, and that's where investors can generate their return.
Very good. Hey, Bailey, Birkenstock. What's the pitch here? Is this going to be a lifestyle kind of?
Where are they going to be 5 years out?
Yeah,
the same thing as they were 50 years before. What's changed?
No, they were in the Barbie movie, so that reinvigorated interest with the youths. When you look at their sales, one of the things that stood out in the filing is kind of this push towards direct-to-consumer sales, so trying to cut out the costs of going through a traditional brick-and-mortar or other kind of website. When you look at it, though, $8 billion price, about 18 times forecasted adjusted EBITDA, so in line with a Nikes of the world, though margins are typically higher for Birkenstock.
Here comes Apple right now, trying to fight for the upside move on Apple right now.
Talking to a couple analysts, maybe a Lulu could be really seen as the high end, but
Apple
it's going to be
between 176.99 is bullish to 182.09 for a squeeze.
In terms of consumer-facing company that doesn't have these ambitious kind of pitch in terms of AI or massive hockey stick growth.
But do they have to pull back their pricing ambition the same as we've seen with ARM and others? Is this a down round for
Kamel, my brother? I will look at NVDA. What does it say? Can I look at what? I thought it said, look, can you look at NVDA? Fuck yeah, I can. You guys want me to look at NVDA? You guys want me to look at NVDA for you right now? Let's take a look at it right now, baby. Trigger screen. This is Apple right now. Apple trying to turn around. Apple needs to get above 176.07. Keep an eye on Apple right now. We've got a turnaround right now. If Apple can get above 176.07 and specifically 176.09, if you're an Apple trader, you want to smash up here to the weekly. Get up here above the 30, up to the hourly trigger. Get above 176.99. If you can get above 176.99, you are looking to trade above there. 182.09 on Apple. Let's take a look at NVDA. For a long-time channel supporter out there. Oh, yeah. Uh-oh. Let's take a look at NVDA. Let's look at NVIDIA. So, if you are an NVDA bull, Camille, listen closely here. The positioning is long on NVDA, but I want you to pay close attention here, okay, boss? You are taking the money and running here, believe it or not. Well, depending on what your risk is, they're going to want to sell you down right here. You want to watch me closely here, okay? Here, I'll just draw this. I'll just draw it out permanently. You can snap a picture of this, okay? You can snap a picture here. So NVDA, I would really like to buy that right there, right? So I really like the concept of this right here. I prefer this trade on NVDA, but there is something else to be said here, and that is if NVDA breaks above, right, you're taking that long. So look at it from this perspective, right? Look at it from this perspective. You're long, yeehaw, that was a blast, woohoo! I'm waiting for a dip buy down here, right, at 450.32. Or if it squeezes that little bit up there, you're waiting for a retest of 459.38 to take a long here. Make sense? So right here, you're trying to wrap up your longs, right? And then you're looking for a dip buy here or a dip buy right here. Whenever we get into these resistance zones, yeah, you can be right, but you should be taking this part of the trade, right? So like you take this part of the trade, then you take that part of the trade, or you take that part of the trade. So you're entering here, here, and here. You're exiting as we come up here, right? Does that make sense? Like you're long there, then you're long there, you're long there. You're not getting long right here, are you? Right? That's how you get trapped. They start to burn your calls down, right? You want to enter above, right? You don't want to get trapped down here, even if it breaks higher and then it's up there. Does that make sense? So on NVDA specifically, can we squeeze above? Sure. It's risky. It's always better to take this trade or the trade below. So NVDA, good question on NVDA. Good question on NVDA. Is it bullish? Fuck yeah, it is. The positioning is long. The weekly and the monthly is strong. A little bit neutral right now, but it's going to get bullish if you get above that 459. I also want to tell you something else. If price does break above and it gets a successful retest and the hourly comes up on NVDA and supports it, it's going to get crazy bullish. Crazy bullish. You'll begin to make your way to new highs. So be very careful on NVDA. Very careful. Not your place as a retailer in here. Not your place as a retailer. Good question, NVDA. Good question. Oh, they press play again on this. Look at him, dude. Look at him. Look at these savages in here. Look at these savages. Oh, wait a minute. Stop that. Look at these sellers, man. They're on revenge right now, aren't they? They're on the revenge tour. They do not. Oh, hold on. Whoa. Look at these sellers. Like, right up here, get them down. Right up here, get them down. Get them down. Right up here. Bear's like, no, dude, this is it down here. This is it. This is the bear. The bull trap is right here, bro. That's the bull trap.
redhead on the terminal. This is breaking right now. Still reeling from the Supreme Court's 6-3 ruling on affirmative action.
Bloomberg Sound On with Joe Matthew.
The story has reached the White House briefing room. Should we eliminate the debt limit or reform it somehow?
Listen live weekday afternoons at 1 Eastern or on.
Hey, Kamel, did that help you? Kamel, did that help you, brother? Right on, Kamel. That did make sense. So yeah, man, you've got like a you got that like that like a matter of fact, just on Spoos right here. That same thing, right? They're just buying the dip, trying to grind up. If you get the squeeze above on Nvidia, that's probably where Nvidia is, right? Somewhere up in there, where that squeeze potential comes into place for NVDA. Right on, Kamel, brother. Love you too, man.
Lowering your high blood pressure could save you from a heart attack or stroke. If you've stopped your treatment plan, restart it or talk to your doctor about creating one that works better for you. Start taking the right steps at manageyourbp.org.
Now I'm, trying to get better, stronger than ever.
Brought to you by the American Heart Association, American Medical Association, and the Ad Council.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio here, looking at the markets. Still a little bit of green on there. Not a whole lot of movement. The S&P is up 0.2%. The NASDAQ's up 0.3%, 43 points on the NASDAQ. Yields steady as she goes. 10-year Treasury about 4.28%. And again, the 2-year spot on 5%. Gold a little bit lower here. Brent crude pretty steady at $92 a barrel. Bitcoin getting a little bit of a bid there, up 0.7%. With our news in New York City, here's Michael Barr.
Thank you very much, Paul and Matt. Danilo Cavalcante, you just ran out of time.
He continued to resist, but was forcibly taken into custody.
Pennsylvania State Police Lieutenant Colonel George Bivens says the escaped murderer was taken into custody by Chester County authorities this morning in the nearly 2-week manhunt that spanned most of the surrounding area.
Hey, good morning, Stacy. How are you? Hope everything is well.
8 a.m. hiding in a large pile of logs behind a John Deere store in South Coventry Township, about 30 miles from the prison where he escaped from on August 31st. Bivens says no officers were injured in the arrest, but Cavalcante did sustain some bite wounds from a canine.
One of the Customs and Border Control teams, BORTAC, had a dog with them. They released the dog. Some of our PSP CERT members were also there, had him surrounded. The dog subdued him, and team members from both of those teams immediately moved in.
Bivens says he was attempting to crawl away from police in an underbrush when he was taken into custody, and then he was taken by surprise on top of that. North Korea's Kim Jong-un vowed full and unconditional support for Russia's Vladimir Putin. Two leaders isolated by the West held a summit that the U.S. warns could lead to a deal to supply ammunition for Moscow's war in Ukraine. The meeting lasted over 4 hours at Russia's spaceports in the Far East. House Speaker Kevin McCarthy today defended his order of an impeachment inquiry into President Biden, saying congressional investigations paint a culture of corruption around the Biden family, involving son Hunter Biden's business dealings before his father took office. McCarthy, facing pressure from the hard right, did not directly answer why he changed his position on holding a House vote about an inquiry, but was asked what they're looking for.
We don't have any of the credit card statements from all the credit cards from this shell companies. We don't have the president's bank statements. We don't have Hunter Biden's bank statements. Providing information like that would answer the question.
Speaker is also struggling to pass legislation to avoid a government shutdown at the end of the month. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Matt.
All right, Michael Barr, thank you so much. We appreciate that. Coming up, Brian King, CEO at Lotus Markets. He's going to join us to talk about investing, ETFs, and what Lotus Markets does differently from other investment firms. Will be in studio. All right, here's a story that jumped out at me. Angel City Football Club, one of the most high-profile women's soccer teams in the world, has been exploring strategic options, including raising capital. It's according to people familiar with the matter. It's not clear how much they want to raise or at what valuation, but Angel City did raise money in 2021 at a valuation of more than $100 million. That's according to the good folks at Sportico, ex-Bloomberg News people at Sportico. Some of the investors already in the company, Natalie Portman, Serena Williams, Eva Longoria, Casey Neistat, Jennifer Gardner. So it's one of the flagship teams in the Women's Soccer League. And, you know, that women's soccer's popularity continues to grow there.
I know that, you know, Alexis Ohanian was interviewed by our own Carol Masser.
Nice.
In part about this and why he decided to buy in. He is, of course, Serena's husband.
Yep.
And I believe his daughter, she's like a 5-year-old, also holds a stake in the club. She's one of the youngest professional sports team owners in America. But
perfect.
His point was he looked at the sum of the parts and realized that a lot of the players' brands individually were worth more than the team.
Interesting.
So why not buy?
Interesting. So we'll see what kind of valuation they can get there. But raising capital out there in the marketplace, trying to take advantage of the surge in interest in women's soccer and strong investors' interest in sports more broadly. So good luck to them. This is Bloomberg.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Very disturbing what's happening here in our Bloomberg studios, but we will soldier on. Coming up, we're going to check in with Jeffrey Cleveland. He's the chief economist at Payden & Regal. Get his thoughts on the inflation print that we just saw. Brian King, CEO at Lotus Markets, will talk markets and ETFs, plus tech talk. Ashley Still, Senior Vice President and Creative for Digital Media Lead at Adobe, will discuss the company's generative AI initiative. So why not AI? More AI. Let's do it. But right now, let's kick things off with Charlie Pellet.
Hi, thank you very much, Paul Sweeney. The Dow, the S&P, NASDAQ, they're all advancing right now. S&P again holding close to session highs, up 12 points now, a gain of just about 0.3%, 44.74 on the S&P 500 index at midday in New York. We've got the Dow up 56 now, a gain of 0.2%. The NASDAQ Composite Index up 58, a gain there of about 0.4%. 10-year yield 4.27% with a 2-year 5.00%. Gold down 0.2%, $19.10 the ounce. A mixed inflation report is reinforcing speculation that the Fed will pause its rate hikes but refrain from calling the end of its tightening cycle. Moderna says it expects to add $10 to $15 billion in annual sales by 2028 after the launch of new products in oncology and in rare and latent diseases. It also expects COVID-19 shot sales of $6 to $8 billion this year, depending on U.S. vaccination rates. Moderna CEO Stefan Bancel was a guest this morning on Bloomberg Markets, and he was asked about the outlook for his company's sales.
We say that this year we should be $6 to $8 billion of sales, which is still a very significant number for turnover. We have $14 billion on the balance sheet that we got through the COVID sales over the last 2 years. And so we can fund around, we think, $25 billion of R&D growth by cash generated by the business and the balance sheet. And we will also not be shy to partner if we have to.
And right now, Moderna shares up by 4.8%. By the way, you can hear a lot more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Amazon is making its first foray into support for home ownership, putting up $40 million through nonprofit partners to create affordable housing. Amazon up 1.7%. Again, recapping stocks higher. S&P up 11, a gain there of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Matt Miller and Paul Sweeney live in the Bloomberg Interactive Broker Studio. We're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio or Bloomberg Global News, and that'll get you where you need to go. A little bit of green on the screen as Charlie was just reporting. Let's see what's happening on the stock level. We do that with Emily Grafeo. She covers all the markets for Bloomberg News, and she joins us live here in our Bloomberg Interactive Broker Studio. Emily, what are you looking at?
Well, the airline stocks are getting crushed today. We have American Airlines down about 4%, Delta, United, JetBlue, Spirit Air all lower. And a lot of this news is coming from American because they lowered their profit estimate for the third quarter. The earnings per share is now seen at 20 to 30 cents, and the early.
So just a note here, if you don't know where we are in the market, we're going to look at trigger screen. This is, you're watching a swift turnaround here on NVDA, trying to break and smash above 459.38. A target to the upside on NVDA, 482. You got another target here at 469, so bulls trying to get above 459.63 to trade 469.43, and then 482.62. If you want a situational awareness kind of a moment, so you can breathe here, just so you can see. It's a 30-minute chart here on SPOOs. Trend is up, so that you know that trend is up. Came up here the other day, did all this damage up here, coming down here to come back up here. See it right there, right? Now, until that trend breaks, there's some rejection to the downside, something like that. You are long, right? This is where you get long right here. You get long right here. You get long right here. This is where you put risk on. This is where you don't get long. This is where you don't get long. This is where you don't get long, right? So you can see the buyers stepping in this morning. And you can also see we did a confirmation of the bull plane, just so you can see it right here with me. See that little where it says bull plane right there? So the nice little bull plane. Bam, come back down, and we're told, fuck you, nope, we're going up, right? So you get a little bit of a confirmation of the bullish, confirmation of the bull plane, right? Going on right now. So we'll see what that leads to, but this looks bullish to me at this point. So I want you to get a real close bird's eye view here. You also have price above the daily trigger, price above the half hour, the hour, the 5 minutes, and the 1 minute. You know, if there's a place for you to think we're getting bullish, yeah, this is kind of it, isn't it? Even if it fails, this is the place you're looking for. You know, if you're like asking me, hey, Cap, are you bullish? And we were looking at, you know, like any day of the week, you know, this is kind of the place, right? Let's look at it closer here for a minute. So it's just hear me out here. So even if it were to fail, doesn't really matter. The real question is, you know, are you putting risk on as a bull? Are you putting risk on here? Fuck no. You're taking the money and running, right? Putting risk on there? Fuck no. Where are you putting risk on? Down here, right? Risk. They sold it, came back down to test, and they're back up again. The expectation is that you're up there. Are you buying dips if we begin to get red bars down here? Let me ask you a serious question. You get a closing red bar here, and all of this stuff rolls down on you. Are you trying to buy a dip here? Fuck no. The answer is no. You're trying to sell the market down here, right? So where are you putting risk is a big question. Are you putting risk down here, or are you putting risk up here? It's always down here until it rolls So right now, just waiting here for the explosive move to the upside. You got a couple targets up there just so you can see them. Your first target to the upside is going to be just below here, 448.21. And then, of course, you've got, if we were to get crazy about it, maybe tomorrow at some point. Here's the 15th down here. There's the 15th right there, 4 p.m. Where would your upside target be? Oh, baby. Where would your upside target be up there for tomorrow? It would be, what is that up there? What is that price right there? And we've got, oh, baby, 452.04. 452.04. I'm going to assure you of something, okay? These sellers do not want to see this break up in here. This is not what they want to see. They don't want to see this break and this trade higher into tomorrow at 452. So if you're a seller or a bear, you don't want to see that, do you? And you know what else you don't want to see? I'll show you what else you don't want to see. You don't want to see, what a seller doesn't want to see is some kind of move like this up into Wednesday. And even if it pulls back down here, for that to be defended. So just up in here, right? You slam up here, come back down, you slam this on Wednesday. And if we hold this 448, right, it's not what a bear wants to see, right? You know where that leads to. It's 459, 460. And this 452 is kind of a big thing. You don't want to get caught in here as a bull with this consolidation. You want to get above this 452 and start going back after that 459 and that 460. And that's JPM collar for end of quarter. Not a lot of time left for that to happen, right? Bulls on their last quarterly attempt to get up into that JPM collar into end of month. If we do start heading up there, and if we do head up there and you're a seller, be really careful. It'll run you right over. You don't want to get maintenance calls and have them turn into, closing only calls and stuff like that, and then margin calls. It gets kind of crazy. So just be aware of this if you're a seller. And then, of course, as a buyer, you know exactly where to sell this shit if it starts going down. It's right down here. Right down in there. Let me clear all this stuff out so you can just get a nice clean look at as to where we are. Just look at them up here. Pissed off right now. Pissed off sellers. They want to get this thing, dude. They want to throw this back down. They want to get it down there and start throwing this down, man. They gotta get below here, man. If you're a seller, by the way, your key targets to sell, if you want to get bearish at any point, right now your key targets to sell are you want to be short under 446.60, and then you want to be short under 445.76. So 446.56 and 445.73 key levels for bears. Matter of fact, I'll let them know on Twitter. I'll let them know right now. Let me let them know on Twitter real quick so that they don't get stinky. 446.60. Hold on here. Oh, hold on 1 second here. Let me go back to the main screen. 446.60. And what's the other one here? 445.76. There we go. I think I got that. Good. Okay, so post that. I'll be back with you guys later. All right. Hold on a second here. Coming back here. Give me just 1 second. Give me just 1 second here. I didn't realize that the Bloomberg wasn't still on. Okay, so we're going to go to the trigger screen. So we're just in a pause here, just so you can watch closely here. Just waiting for Vela to kick up. We got the initial push up with these two right here. Bam, bam, push it up. Now just waiting on the hourly to catch back up. So just pay attention to that hourly wherever it's at. And we know that it's right here in this 446. So this 446, you want to see this hold. So 446.60, as long as this holds, we are gearing up for a move higher. Watching, let's get this up here. Watching this nice turn of the hourly to the upside, just coming back down here, just confirm it for a move higher. So consolidation on 446.60. As long as that 446.60 doesn't break, you're just in a pause and waiting for velocity to get to 0 and start to push higher into 25. So you're just defending this right now on SPOOs. You're going to go to this main screen right here. It says 446.60. It's parked right here. Just right here. It's moved up. It's now at 60. Time is passing as well. And as long as bulls hold this hourly trigger right here, it's just a matter of time, just trying to squeeze up, and trying to get higher. Now remember these two down here, just in case you have a little oopsie-doops, and then it comes back up to still pick this up. Trade still alive to the upside. So just hang tight here. It's kind of more like a holding pattern than it is bearish or anything like that. Just wait, just biding time now, just waiting for that move higher. Everything looks bullish still to this point. So if you're looking to make some kind of an entry, if you haven't made an entry to an upside trade yet, you know on this trigger screen right here that you are looking for buying dips anywhere down in here. You can kind of see it, right? Buy that dip, buy that dip, buy that dip, buy that dip. So just somewhere down in here, unless we begin to roll down and underneath. It's just a matter of buying dips and pushing higher, until that fails, right? That buying dips and heading higher. You are long. You are looking for, if you are a bear, you're looking to get underneath that 446, slam it down into the 445.76, consolidate in here, right? Have that trend come down, break below 445.76. Your next trade is below that number, 445.76. So until that happens, you really don't have a trade as a bear. You got no trade here as a bear. You want to see that break, okay? So if you were a bear here, you are looking to get underneath. For the first part of your trade is right here. You would enter that short below this 446.45. And then you also want to get underneath 445.76, which is right in here. The second part of your trade is right here. So you are looking to enter this one right here. So if you're a seller, you need to be below this area right here, not above. Where we are right now is no place for a bear. It's just a matter of buyers stepping in right now. And until they lose the will to go higher, this is a buyer's market right now today. So they're here just buying, sending it up, sending it up, sending it up. Make sense? Kind of cool for you? Good question. So positioning is, if you look down here, You are long the market, believe it or not. Long the market. You see that switch to short the market, and you start shorting the market. Long or short, or buy puts is short. So if it says shorts, you can be in puts. You can do whatever you want to own all that, to own puts or to sell the underlying if you like. Good question. Love you too. Oh, yeah, dude, we got it. We got we got when are you long, when are you short now. You guys wanted it. It's there. Tells you long or short. Are we long or are we short? You guys got it, dudes. Love all you guys, too. You guys are going to get that tool, tell you if you should be long or short. And you wait until you see it. You're going to sit there and go, holy shit, this thing works. And you're going to freak out when you see that. You can't see it right now on Twitch. Hold on a second. I'm at max resolution right now. Does that work for you? Does that help you see it now? Is that better for you? Is that maxed out for you enough? Can you see it now? Do you see how it's green? See how it's green? So when this thing turns red, see that arrow right there? When that thing right there turns red, be short, do not be long. See that arrow right there? See that green where my cursor is down below there? Look at the bottom of your screen in the middle. See my cursor? If that turns red, you know what to do. Oh, yeah, doggy. Oh, yeah. Does that help? Does that help you guys? Yeah, it's not. You're gonna actually get that. You're gonna get it in your indicator, so you're not gonna need to look at Twitch.
With Bloomberg, you get the story behind the story.
Solid
The story
10-year
behind
sale,
the global
which
birth
stopped
rate,
on the
behind
screws.
your EV battery's environmental impact, behind sand.
So event risk
yeah,
with CPI has
sand.
now
You get
passed, allowing a
context,
smoother
and
setup
context
for the
changes
auction.
everything.
Although
Go to
ahead is
Bloomberg.com
PPI and
to get
retail sales
context.
on Thursday, and industrial
T-Mobile
production
says it
and
will
the
be able
Michigan
to
sentiment
expand
on
more
Friday
service
as well.
to parts of Orlando,
So making
New York
note of the
City,
latest
Kansas City,
CFTC
Missouri,
positioning
and other
data,
cities.
which shows that
Now that it's buying
speculators are
some
net short
airwaves from Comcast.
198,000
The band
classic
of
bond
airwaves
futures
involved can
and
cover
net short
larger territories and pass through
378,000
walls and
ultra bond
windows
futures,
more easily
seen as a possible
than
source
higher
of covering demand.
frequencies.
Shares of
Also
T-Mobile
noting
right
the
now, they're
primary
up
dealers'
about
positions
1%.
in coupons maturing
China
in
is
more than
finally
11 years.
acknowledging reports
They were
about
net
iPhone bans. Bloomberg's Ed Ludlow has more.
What is really important with this story is that the spokesperson Mao Ning went on to say that China has not issued laws and regulations to ban the purchase of Apple or foreign brand phones. And actually, if you look across the media landscape this morning, many outlets leading on that there is not, according to this spokesperson, an outright ban.
Now, that spokesperson also added that the government does attach great importance to security, and all companies operating in China need to abide by its regulations. Shares of Apple right now, they're down about 0.5%.
Here, hold on a second. You guys want to do this differently this morning? Hold on a second. Here. Hold on a second.
The iPhone 12 from the French market. The National Frequency Agency, it says it emits levels of electromagnetic radiation that are just too high. It's asking Apple to fix the issue. Otherwise, the tech giant will have to recall phones that were already sold. Apple says its device complies with the regulations governing radiation. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
Missed your favorite Bloomberg radio show? Bloomberg Business Week, Masters in Business, Bloomberg Intelligence, and more are also available as podcasts. Listen today on Apple, Spotify, and anywhere else you get your podcasts.
Does that help you out?
Chain out.
When you get your news from Bloomberg, you don't just get the story. You get the
Does
story
that help you guys
behind the
better?
story. How your EV's battery may not be as green as it seems. Why a decrease in global birth rates could send countries scrambling to increase immigration. you get context.
So you're finding that that's gooder? Okay. You guys want me to leave this one up for you so you can see what's up? We can do that. Here, hold on a second here. Ready? So you've got an attempt here to tag right here. Hold on a second here. We can do that. Let's try it for today. Give me one quick second here. We'll do it for today. Hold on a second here. Does that help you guys? You guys want to see the big one? Does that work better for you guys out there? Let me know if that works better for you. And then the downside chart. Give me one quick second here. Give me one quick second. Was that better for you guys right there? Does that work better? Let me know if you guys think that works better for you. Come on, baby. Give me that squeeze. Is that better? Let me know if that's better for you. Was that better, maybe? That's good? All right, cool. Well, we're going to work on this. You guys are going to get this tool, so maybe that helps. We'll try that for today. It's a new tool on TradingView that we have. It's a 30-minute chart, by the way.
Lieutenant Colonel George Bivens with State Police says Cavalcante was found in a pile of logs behind a John Deere store and tried to crawl away from police.
One of the Customs and Border Control teams, BORTAC, had a dog with them. They released the dog. Some of our PSP CERT members were also there, had him surrounded. The dog subdued him, and team members from both of those teams immediately moved in.
Bevins says no officers were injured in the arrest, but Cavalcante did sustain some bite wounds from the dog. Back from the G20 and a focus on geopolitics, President Biden plans to turn his attention to his re-election and a fundraising blitz for the rest of the month. We get more from Bloomberg Government's Jonathan Tamari in Washington.
There's been a lot of concern from Democrats recently about polls showing a really tight race again in 2024, and is he up for the job? And I think this is a way of them trying to say, look how strong he is, both politically in terms of fundraising and maybe just in terms of his ability to be active and out on the campaign trail as well.
Again, Bloomberg Government's Jonathan Tamari. The death toll is now more than 5,000 from the massive flooding in eastern Libya. Thousands more are still missing. Bloomberg's Tariq El-Tablawi is following this from Cairo.
I think the biggest challenge for Libya, and according to the Prime Minister in the West, Prime Minister Dabiba, is that they don't necessarily need food or medicine. What they need are skilled personnel that can actually help dig through the rubble and try to minimize what's obviously a devastating death toll and poised to rise further.
Bloomberg's El-Tablawi says the hardest hit areas suffered from years of infrastructure neglect. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Matt.
All right, Nancy, thank you so much. We appreciate that. Well, here's a story that got my attention as a former media and cable television analyst. Charter Communications, that's the second largest cable company out there. The chief financial officer, Jessica Fisher, described the recent contract renewal with Walt Disney Company as a victory for pay TV providers. Under the agreement announced on September 11th, Charter will offer the Disney Plus and ESPN Plus streaming services at no additional cost to subscribers. Charter will pay Disney a wholesale rate for Disney Plus and get ESPN Plus for free. The nation's second largest cable TV provider also will drop a number of Disney channels it didn't want to pay for, including Freeform and Disney Junior. In exchange, Disney gets higher fees for channels such as ABC and FX and a commitment by Charter to provide ESPN to at least 85% of its customers. Fisher, speaking at an investor conference in New York on Wednesday, said the two companies, quote, pulled together a package that we think can stabilize
so I just got the question.
We can offer packages to consumers that both fit their...
Hold on a second here. So I just got to ask the question of... question I just got was, how much does the tool cost? We're in a tough place with the price right now. It was supposed to be fairly cheap if it was on the website. We were going to offer this version of the tool on a much higher price target. And so the idea here was we're going to put the tool on the website, and it should be cheap and easy to use. But this version of the tool that we are launching before the cheap version, the original ask for it was very high, and I think you're going to get a deal because we don't have the in website tool for you, and we're just going to launch with the higher end tool. I think you guys are going to get a steal. What would normally cost somewhere around, well, I don't know, $600-700 or something insane, $300, $600 depending upon the data. If you pay for the real-time data on TradingView, having it in your hands anywhere you want to go, you're going to get a fucking screaming deal here. So it's to your benefit, not to mine. It's dirt cheap. Dirt cheap. And there's going to be an introductory price, and there's going to be a bunch of beta testing going on. So, and then we'll have some deals when we launch it, and then we'll also have some deals heading down the road as well. So you're actually going to benefit off of, you're going to get something that was going to be reserved for a very small group of people. So you should be stoked. Oh yeah, it'll make you money right away. I tested this the past 2 days. You're going to make stupid money. That's why we're going to charge, because you have it yourself. You're not going to need anybody. It basically tells you long, short, how long, where to take the money and run everything. Yeah, we're going to launch it on a website here in the coming week. We got like a bunch of guys working in the background. It's like a mad dash to the end right now. So it's going to be insane. It was originally, so if you want to know the truth, I don't know if I should say this or not. like this version of it, we have better versions too. Like we have some sick versions, but I can't release those publicly. This specific version was going to cost, I think $150 or something. It's now down to like, it's like 2/3 less, if not more or less. And it's because we don't have the version for the website. So you're going to get a screaming deal on this thing. Screaming. Yeah, we're going to do the lifetime thing. We're going to do the, I got some, if you guys have been here since the beginning, I got some stuff for you. So don't worry, I'm going to take care of you guys. I got you guys covered. Will it run on Webull? No. But I have something good for you. It will run on a free account on TradingView. You don't need to actually sign up for anything but a free account. So I did make sure that this would work for you on a free account. Although I do recommend paying for a real-time data. I think it's like, doesn't cost a ton, but if you're a day trader, I would pay for. Now, if any of you guys do sign up for a TradingView account, I have a coupon somewhere kicking around my email, and I'll get it to you for like a half off or something, or 50 or 60% off TradingView, and I'll find that coupon and send it via an email to you, so that you have you get like you get a discount across the board. This isn't an affiliate thing; it's it's just a discount for TradingView that I have. A bunch of people have them, but I've got one, so I will send it to you guys. I will send it to you guys before you sign up. You got a bunch of shit from me. I think I don't think you need to pay for the real-time data add-on for TradingView. I don't think you need to pay for that. Here's the deal. So if you use the free account, I think your data, tell me if I'm wrong on this. If you sign up for a free account right now in TradingView, you get a 15-minute delay on everything, I think. I think when you sign up for any of their programs, you get like real time on most stuff, delayed on some other stuff. But most of the cash market stuff I think is real time. But they don't take reports from every what the fuck are they called? Lit market. So every market that comes out of Chicago, New York, overseas, you won't get all of that data unless you sign up for the $5 shit. But that $5 real-time data, I never found it to be useful on TradingView, I'll be honest with you. Whatever data comes with the paid package has been fine for me. Like I haven't paid, I think one time I used to pay for like the extra $5 or 3 months a month or something for that data, that extra thing they try to add on. And it never made a difference for me. Whatever the regular packages that does come with whatever real-time data they have has worked fine for me. Yeah, so what I have never liked the when you so here you've got if you sign up for TradingView, right, and pay, they try to offer you another data feed to pay for. Never pay for that data feed. Never. In my experience, do not pay for it. Their data sucks across the board, even when you pay for it. Even when you pay for when you sign up, let's say you sign up and pay $30 a month. They give you real-time data. It's not that good, but it's enough. It really is enough for what you need. They're going to offer you hey, sign up for this for $3 or $5. Never sign up for that shit. And I did sign up for all of those extra data plans, and their data still sucked. So the best free data I've ever found is on Webull. I have run that data against paid shit that I pay for, like feeds that I pay for, and it's the closest, cheapest max data that you're ever going to get. So to each his own with that. But I agree with what N7 Lead Farmer is saying. When you actually pay for TradingView data, specifically I'm buying data, I don't expect much out of it. It's dog shit. I am 100% with you on that one, brother. Yeah, if you run Webull data against, like I used to pay for light speed, I used to pay for the full data suite or 2 data feeds from I shouldn't be swearing, but Bookmap, and it was so close to tick. And I still see the ghost prints on Webull. I don't know how they pay for that data. They must be paying out of their asses for that shit. And then speed of those ticks on a 1-minute chart, they're slightly slower, but not that you would ever notice or care about. What up, Poke the Juice Box? Yeah, let me look right now. It's a good question. Give me one good question. So, that's a good question. Let me look at their tiers. So, what is it? Get started, news, markets, get started. How do you? So there, I think from my experience, right? If you're not day trading, listen closely here. If you're not day trading, all you need is the free trading view. From my experience, if you sign up for the essential, that's $15 a month. And I can get you a discount on that to like $7 or $8 a month. From what I remember, that data that's included with that package is real time enough. Now, there's a few tickers you won't get it on in real time, but generally speaking, it's going to give you what you need. You don't need the essential. That's the essential plan, by the way. You don't need the essential plus or premium plan, though, to use this suite on TradingView. The only consequence would be you'd have a delay if you use the free package. On plus and premium, unless you're using a bunch of indicators, like 30 indicators, 10 indicators in a chart, you don't fucking need it. Like plus and premium is for you to build shit and do that kind of stuff. And let me get you guys that discount code, and I'll send it via email to you so that you can first sign up. I'll give you step-by-step instructions via email so that you know what you need. Yeah, it'll be half off. It's not an affiliate, so it's not like I make any money off of the half off or any of that kind of crap. Yeah, I like Webull. I think it's something that it's like I try everything out at least once. Like if something new comes on market, I'll try it out. And I feel like I have a litter box full of like, oh, I really like Thinkorswim for this. So I use Thinkorswim. Like Thinkorswim's volume and market profile shit is banging. Thinkorswim is a pain in the ass because they trap you in having to know Thinkorswim to use it, right? Thinkorswim, like a feature built into Thinkorswim is, hey, spend all of your time with us because it's a big learning curve and it's very powerful, but you have to be in their system, right? So I still keep Thinkorswim. I still keep Tasty, even though I'm fucking moving money out of Tasty. I still keep money in there. Still use Tasty. I like Tasty has some of the best customer service out there. I still like Bookmap. So it's like none of these brokerages, none of these charting services, none of this stuff is all perfect. Like you're going to find, I really like this for that, and I really like that for this, and I really like this for that. And I don't know if you find that, but even Robinhood. I don't trade on Robinhood, but of course I'm getting alerts from Robinhood every day saying, hey, we got some IPO stuff coming out. You can buy this crap now. And I check back on their option stuff. I want to see if they're going to trade futures with actual futures. I want to see if Robinhood will ever become what it's potentially could become. So, I do pick up these things and hold on to them over time. Yeah, I've got a private Twitter handle. That's for subscribers. I've been giving out levels for 3 years for free. You guys dude, I got some cool shit coming your way. I got a whole new level thing coming for you so you can get your favorite tickers levels every morning. It's pretty fucking badass. So you guys got some cool shit coming your way here in the next week. Some really, really cool shit coming your way. Yeah, I've got that. So I've got a code for that 60% off sale. And it worked. I used it recently. Just so you know, I've got more than one professional trading view thing going on, and so I pay for multiple trading view accounts, and I've been able to use that code even recently. Yeah, I got you guys covered. I'll get that code for you. You guys are getting it all this week. We're doing a big rollover to trade the trigger. Yeah, everybody's getting rolled in a trade the trigger. We're doing it all on the back end. All right, I'll see you guys soon. Demo, thanks for joining us, brother. I appreciate it. Don't forget, we've got the U.S. federal budget at 2 p.m. Note that on your calendar for today.
Senator said it. I'll be curious to have you respond.
They have no clue of what this policy is. They just wanted to change it to let the American people know, hey, we can do what we want to, and I'm not going to allow them to do it. Now, if they continue to do it, we're going to have the same people in place as admirals and generals. Again, there's no readiness problem. We got people in place that are doing their jobs.
His point is that if this continues, and by the way, we're at 9 months or something at this point, military families in temporary housing, waiting for confirmations, we don't know when. But he says, hey, we've already got good generals and officers in place. What's the difference if they hang on a little longer? How does this impact readiness in your view, or doesn't it?
I think it impacts not only readiness, but morale and leadership within the Department of Defense and within the military broadly. And it's actually really ironic that the party who wraps itself in the flag and in the military is the one that is harming military families and the U.S. military's readiness at a time when our adversaries are challenging our leadership in the world. Mm-hmm. You know, one of the first areas that gets cut is training, and that goes directly to readiness. We don't let our pilots, fly. They don't use live ammunitions in training. Those are ways in which the military can reduce its spending, and it goes right to the readiness piece. But on the leadership piece, the Joint Chief of Staff, he has a deadline where he cannot continue to serve. Right. And so we're going to let our military go without a military leader because one senator wants to be obstructionist?
We're going to speak a little bit later in the broadcast with Michael McCall, one of your former Republican colleagues, chairs the House Foreign Affairs Committee. He called this paralyzing to our military. Is it going to take more Republicans like Michael McCall to bring this to an end? What's the off-ramp here for Tommy Tuberville?
I think the Senate Republicans own this one, and Mike's a great guy, and I'm glad to hear him using his voice. He's reasonable. He understands the debilitating nature of what is happening, and he cares about the military and the families, and so I'm glad to hear him speaking out. But Senate Republicans need to make life very uncomfortable for the senator who's holding up all of these confirmations.
Mm-hmm. Should the White House or should the administration
I appreciate it, Demo. I appreciate it, my brother.
We should weaponize government because you're just really punishing people who live in Alabama if you were to threaten that. But, you know, his Senate colleagues need to put pressure on him, find out what it is that he needs and give him half of that, half of the loaf, and then move on. But this is playing with our national security, and it's hurting the very people who have stepped up and decided to serve this country.
Well, one thing we know is he's not getting Space Command in Alabama. Maybe that's the beginning of the pressure, right? I'm so glad you could come to see us. Whenever you're in Washington, I hope you will do that very thing. Stephanie Murphy, thanks for talking with us, as always.
Great to be
here
with
on
you.
Bloomberg Radio. And on YouTube, I'm Joe Matthew in Washington. Thanks again to the former Congresswoman in a fascinating conversation that we'll bring to our panel next. Rick Davis and Gidi Shanzano, only here on Sound On. This is Bloomberg.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Daybreak U.S. Edition podcast, we talked with Republican Senator Tommy Tuberville of Alabama on his blockade of military promotions.
I truly believe in our national defense. If we don't have a great national defense, we don't have anything. So that being said, on the Armed Services Committee, I got a briefing about a year ago what they were going to do with the new abortion policy. We didn't need one. It worked perfect. They never had one complaint. We've had one since 1984. Joe Biden and the Democrats voted a policy in that had the 3 exceptions, and it had worked perfectly, but they just decided to change it. Now, they voted it through Congress in 84, but in 2023, they want to change it with a memo from the White House. We're not a communist country. Everything that's made policy and law goes through Congress. And I told them that. If you change it, I'm going to block your admirals and generals. Well, at that time, there was 1 or 2. Now we're up to 300. I think they're starting to believe me that I meant what I said. And again, they could be clearing these nominations one at a time, 2 hours each. They don't want to do that. Democrats have not been told no since they've been up here for 2.5, almost 3 years since President Biden was elected. And now they can't handle it. But we're not going to have any movement on my side unless they change this back, and let's vote on it. Let's just vote on it, and if it passes, it doesn't, it doesn't.
So just to be clear, Senator, you want Chuck Schumer to bring legislation ending the Pentagon's policy to the floor, or do you want to see the nominees brought to the floor? How do you see across the valley on this?
Well, if you want to get them all done at one time, all they have to do is put the policy back the way it was voted on here in the Senate.
Hear the full conversation on the latest Bloomberg Daybreak U.S. Edition podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. The best of...
When you get your news from Bloomberg, you don't just get the story. You get the story behind the story. How your EV's battery may not be as green as it seems. Why a decrease in global birth rates could send countries scrambling to increase immigration. You get context. And context.
What up, Jim K? All right, so we're going to switch over here for a minute. I want to talk to you guys about something. Okay, just give me one quick second here. Oh, yeah, baby. So let's take a look at the... So everything's wonky for me right now. It's a little bit abnormal here. So what are we looking for here? We are looking for, if you're a bull, what are you looking for here? If you're a bull, you're looking to squeeze this up, right? And hold and go higher, right? So if you're a bull, this is what you're looking for. Now I'm going to make a note to you right here. So you want to get up here and then make your way higher, right? Even if there's a little bit of slowback, this comes down and grabs you right here. Makes sense? Now I do want to make a comment to you here. And that would be that we're coming into the 2 o'clock where we get the U.S. budget. So there could be, you think we're going up here to squeeze. You come in at 2 p.m. and they slam you down, right, to the hourly trigger right here. So if you're trying to be a buyer, down here at this 446.75 or so, 446.75, that's where you want to be getting long. You don't want to be getting long here. But if you're already long from down here, like from this morning, that's your target above to the upside on SPUs, right? Trying to get up there right now. Just be conscious of the time. We'll do Tesla next. Someone was asking what my thoughts were on Tesla. So, Tesla, baby. Let's take a look at Tesla here. Tesla already had its push up. It tagged. Tesla already tagged up here. It's coming down into its bottom of its channel in the 30-minute, right? Trading sideways. You want to see this get picked up and sent higher, right? So you can get your second tag to the upside. Your second target is 290.33. Let's get a closer bead on it. So currently right now, if you are a Tesla bull, as long as price stays above 269, the target is still 269 and change. Your target is to get above 277.94 and then trade that 290.33. I'm going to tell you something. If you're a bull, if we start heading up here, they're going to sell you at 289 or 288. They're going to take you out before you ever get there. If you're trading Tesla, you know how this goes, right? You come into like 290 or 300, and they step in early and slam you down. Now, if you aren't long from Tesla from way down here, and you're looking for a buy-in, and you're like, I'm too afraid here, Cap, I'm going to tell you two things here, okay? So this green box right here is a nice little place to buy in. That's 266.93. There's always another buy-in lower. That's at 250.47. So make a note at home. Be like 250 and change. Even if you don't believe it, just make an alert at home on your own little thing. Be like, okay, I'm going to get an alert at 250. Make another alert down here at 266.63-ish. Okay? And then if we break above and hold above 277.94, that's your last alert. You can take that one long to 290. Come up here, something like that. Whoop. I might set it at 274 or something after a squeeze higher and look for that next dip buy right there. Kind of see it right there. As long as that hourly trend stays alive, I'm bullish here. On Tesla to 290. So keep your eyes on Tesla. So you got this tag down below here, 266.33. You got 250.47. If you are long here already, you are looking to get above that 277.94 so that you can trade that 290.33 to the upside on Tesla. Hold on one second here.
On the right flank and try to
be
get some
aware
work
of a
done,
hedge coming on the
in the
market
House of
into 2
Representatives
p.m.
with everybody else. I doubt if he's got that sophisticated of a strategy.
Be aware of the market being hedged around 2 p.m. for that report.
About legislating or, doing work of government. They care about, their number of Twitter hits and how many clicks they get. And that's why you have these kinds of outbursts. They're non-productive. And Kevin McCarthy is just sort of giving them something to chew on for a couple of days. We got to constantly remind ourselves inside the Beltway here, the vast majority of people in this country pay absolutely no attention to this because they see it for what it is. It's as Stephanie Murphy said, we are now watching the height of hypocrisy enter the House of Representatives. I mean, and she knows something about that, the time that she spent there. And I don't think Kevin McCarthy has done himself any good. He hasn't moved the ball forward. He isn't going to get anywhere on this impeachment. He's got over 30 House members who won't even vote for ultimately an impeachment, and we know it won't go anywhere.
Hey, you guys want to see something cool? So, yeah, this is one of the new tools. So, you guys want to see something cool? You want to see the day trader? Watch how everything changes. So this is the 1 minute day trader chart. Watch how everything changes, right? You get the 1 minute day trader chart right here. And then I've got changes on the 30. It auto changes to the 30. See how that changes? And then you're ready for the macro trader. And the macro trader changes as well. You actually have macro, swing, and day trader views, all automatic, ready to rock. You don't have to do any work in the background, nothing. You don't have to do shit. You don't have to do anything for that. So let's watch this day trader view. So right now this is day trader, right? It's a 1 minute day trader view for SPUs. You can see right here on the day trader. This is trend, right? So if you're trading zero dates, calls or puts, doesn't matter. There's one entry, there's two entries, there's three entries. Here's your next entry. If it breaks below, right, you look for the next dip to buy. This is a 1 minute day trader. See, I haven't shown you guys anything yet. You guys haven't seen shit. You wait until you see it. So like right here, pretend you were day trading on this tool right now. If you were day trading this tool from this morning, right, you would be doing what here? Like, forget this white line. Look at this red line up here, right? Look at where trend is. You buy that dip, you sell it, right? You buy that dip, you sell it. You buy that dip, you sell it. You're going to buy that dip again, right, until we break trend. See that trend right there? Whoop. Till you break that trend. And then what do you do there? Buy some puts, right? New trend starts. We start heading down. Keys back up over here. Buy some more puts. Yeah, dude, wait till you guys see this shit. It's going to be insano. Insano. And the other cool part about this is you can leave up the 30-minute swing trader and then day trade with this chart on a different screener. It is stupid. It is straight stupid. Oh, dude, it's so badass. It's so, dude, I got shit that's not on here that's even more insane. Like, I got some crazy, insano shit here. Look at that. Buy the dip, win. Buy the dip, win. Buy the dip, win. Ayo! Look at that squeeze again down there. Look at that. Woo! So we're back to that 30-minute chart right there for you. Over here. So it's insane. Trust me. It's stupid. It's effing stupid. It's effing stupid. Yeah, if you can't handle the swing or like the swing trading is like a 1 month call. Like what weekly calls, 1 month call, any of that stuff, like 3 month calls, 3 month puts, 1 month put, doesn't matter. Shows you where to sell on a 3-month mark. Like it's baller, dude. Wait till when you guys get this, it is gonna change your life. I'm probably gonna get in trouble. You're gonna get like FINRA or something, or the banks will be like, "Go fuck yourself." So we'll see what's up here, and yeah, baby, we got this right now. We got this. Give me that sweet. Give me like 4. Give me like that upper range 448.15 and shit. Give me that upper range. Give me that 448.12. How about that? I'll take 448.12. I'll take this one right here. Give me that 448.12, please. Give me that one right there. Give me that target right there. Give me that fucking squeeze right there. See it down there? Give me that fucking squeeze. Come on, baby, take a ride with me.
With Bloomberg, you get the story behind the story behind the global birth rate, behind your EV battery's environmental impact, behind sand. Yeah, sand. You get context, and context changes everything. Go to Bloomberg.com to get context.
Scan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
The Bloomberg Talks podcast. Today's top interviews from around Bloomberg News.
An exclusive interview with the chair of the SEC.
Yeah, you guys aren't going to get access to this stuff unless you've got the tool. Like, we're pulling this down probably today. You guys are only going to be seeing this. I'm going to be drawing boxes for you, and that's about it publicly. So we're going to switch back soon. But this is like a tease for you.
When you get your news from Bloomberg, you don't just get the story. You get the story behind the story. How your EV's battery may not be as green as it seems. Why a decrease in global birth rates could send countries scrambling to increase immigration. You get context. And context changes how you see things, how you change things. Because context changes everything. Go to Bloomberg.com to get context.
Lingo.
Jelly. Jelly adjective. Jelly is a shorter, better way to say jealous. As in, Chloe, I am like so jelly of your unicorn phone case.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org, brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Get the news you need to start your day in just 15 minutes.
We begin with the G20 summit in India.
Apple's looking to stave off a crisis in China.
Wake up with Bloomberg Daybreak, U.S. edition.
A potential government shutdown looming over the coming weeks.
Opening night in the NFL and an upset.
Available now on your podcast feed. Each weekday morning at 6 a.m. Eastern.
Hurricane Lee barreling through open waters.
Subscribe to Bloomberg Daybreak, U.S. edition today on Apple, Spotify, and everywhere you get your podcasts. Bloomberg. Context changes everything.
No company wants to be involved in an international dispute. But when disagreements arise, you need expertise at your side. Take a closer look at ICDR, the International Center for Dispute Resolution. Backed by the longevity and strength of the American Arbitration Association, the ICDR is the world's leading provider of cross-border dispute resolution services, handling more cases than any other institution. Find out why global expertise matters. Visit ICDR.org.
If I could be you.
And you could be me for just 1 hour.
If you could find a way.
To get inside each other's mind.
Walk a mile in my shoes.
Walk a mile in my shoes.
Walk a mile in my shoes.
We've all felt left out. And for some, that feeling lasts more than a moment. We can change that. Learn how at belongingbeginswithus.org. Brought to you by the Ad Council.
Walk a mile in my shoes.
The Big Take, a daily podcast from Bloomberg and iHeartRadio, highlighting the best reporting by Bloomberg News from around the globe.
This trend you're seeing is very much at the top of the firm.
They're printing money like never before.
Each weekday, we dig into one important story and tell you why it matters.
Given the climate crisis, gas isn't clean enough.
AI is transforming our political reality.
Listen to The Big Take on the iHeartRadio app, Apple Podcasts, or wherever you listen. Bloomberg. Context changes everything.
No one knows where this market will go. Right now, it feels like a wild ride. But one thing's for certain, there's a way through it. And the experience and guidance of a Merrill advisor can help you get there. Because where there's a bull, there's a way. Find an advisor at ml.com/bullish.
Merrill, a Bank of America company. What would you like the power to do?
Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor. Member SIPC, a wholly owned subsidiary of Bank of America Corp.
And what you doing with your phone? Taking pictures?
No, I'm asking it questions.
Like what?
Hey, Bobo, do flowers have best friends?
I'm sorry. I'm afraid I don't know that. Hey, follow me. I want to show you something. Look, flowers do have best friends.
Whoa.
Some answers can only be found in nature. Discover the unsearchable. Visit discovertheforest.org to find a trail near you. Brought to you by the United States Forest Service and the Ad Council.
I'm Emily Chang, and on my new show, The Circuit, I speak with the big names in tech, culture, and innovation and ask, what's next? You'll hear from leading tech CEOs and investors alongside influencers and celebrity entrepreneurs. This is a chance to go deeper, to meet people in their world and find out what drives them. Watch The Circuit Thursday nights from Bloomberg Originals. You can catch it at 10 p.m. Eastern on Bloomberg TV and on the Bloomberg app and Bloomberg.com. And download the Circuit Companion podcast wherever you get your podcasts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do tell you to check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ in the green. We've got the S&P up by 15 points right now, just about higher by 0.4%. Wall Street taking today's CPI numbers in stride. The Dow's up 31 points, up by 0.1%. NASDAQ up 88 now. That is a gain of 0.6%. 10-year yield, 4.24%, with a 2-year at 4.96%. Gold down $2 the ounce, little change, $19.10 the ounce. Bitcoin is up 0.3%, 26,158 on Bitcoin. And West Texas Intermediate crude is down 0.5%, 88.39 right now for a barrel of WTI. A mixed inflation report is reinforcing speculation that the Federal Reserve will be pausing its rate hikes, but refrain from calling the end of its tightening cycle. And with more on this morning's CPI report, here's Bloomberg's Vinny Del Giudice.
Core consumer prices topped Wall Street estimates in August, leaving the door open to more Federal Reserve interest rate hikes this year. Fed officials meet next week. They've been growing optimistic inflation can be tamed without causing a recession. The Fed's benchmark interest rate has gone from near zero last year to more than 5%. Vinny Del Giudice, Bloomberg Radio.
Again, a move lower for crude, down 0.5% now, 88.41 a barrel. Talking about West Texas Intermediate crude. Oil hovering near its highs of the year as the International Energy Agency adds to a drumbeat of forecast that the market will tip into a significant deficit in the second half of this year. Oil stocks, they are lower right now. Case in point, ExxonMobil down 0.9%. ADRs of BP down by 0.3%. Chevron lower now by 0.5%. Recapping, stocks are higher. S&P up 16, up by about 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
I'm used to listeners and viewers telling me how to do my job, but the White House is a different level. A memo out to U.S. news media organizations in the wake of Speaker McCarthy's announcement that he is launching an impeachment inquiry into President Joe Biden. The subject line: it's time for the media to do more to scrutinize House Republicans' demonstrably false claims that they're basing impeachment stunt on. Let's reassemble our panel. Rick Davis and Jeannie Shanzano join Bloomberg Politics contributors as we consider the reaction from the White House. Rick, I don't know your thoughts on this. The memo goes down to the first series of bullets here refers to Representative Ken Buck, the Republican from Colorado, has been doing a lot of work for the White House last couple of days on cable news. He talked about it again on CNN, said he sees no evidence. This is a familiar refrain from Ken Buck. But should the White House be digging in like this or laughing it off right now?
Well, it's obvious this is a reaction to the coverage from the last couple of days, where I think they've got a chip on their shoulder, and they think that people like Marjorie Taylor Greene and Matt Gaetz are getting way too much attention in the mainstream media because all they're talking about is a process argument. They're not answering any questions about what the real issue is here, and that the media is giving them more attention than the people who in the Republican caucus are actually saying they don't see the connection between Biden and these charges. So, and I kind of get that. I actually do think that the media has been chasing sort of the crazy end of the caucus, a lot more than it does everybody else. I mean, I think the bigger story is there are probably over 30 Republicans who don't support the speaker on this, which is why he had to unilaterally open up a probe. So I think they're a little bit taken aback that the media isn't doing their job for them. And this memo basically says, hey, you should be embarrassed by the fact that you're really not giving these guys more attention. The irony is they're using quotes in the media to make the case to the media that the media isn't doing enough. And so I think if I'm a reporter who are writing on these things, I'd think that they were kind of overinflating this.
Well, if the memo is just going to get leaked by the media, White House telling the media how to be better at the media, Jeannie, is there a point in sending it?
I think this is something that could backfire on the White House. I think putting out the facts is one thing. Putting out their position is one thing. But trying to tell the media how to do their job, we all know no White House likes the media. But the reality is, if the media starts to exhibit some criticism of the Republicans and what they're doing in terms of impeachment, you're going to hear right back, oh, this is just the media doing the bidding, the liberal media doing the bidding of the White House. So I'm not sure how this helps the White House at all. I think more important is to keep focused on, number one, doing the business of the American people. Number two, putting out the facts. And let the craziness in the House play out. It speaks for itself. I don't know why they are trying to get in front of it, if you will, and make themselves the story.
Well, Rick, the craziness in the House, I guess, extends to the craziness in Washington as we have a breaking headline here that reminds us of the world that we're in. Mitt Romney is just now announcing in a Twitter video that he will not seek re-election in the Senate. I wonder your reaction to that news.
It's kind of expected. Mitt is never really been a feature of the Senate. He's had a stellar career as both governor and presidential candidate. I think he was looking at the sort of future trajectory of the Republican Party. And, I think he's kind of the outlier, right? He's more in the McCain wing of the Republican Party than he is in the Trump or whatnot wing, and he's pretty isolated in the caucus because of that. That being said, I think he's enjoyed being the senator, but politics at home also is very difficult. He'd have to run a probably very competitive primary, spend a lot of money, raise a lot of money, and those kinds of things, they take you away from your family and the work of the Senate, which is what he really enjoys. So I'm not surprised, but disappointed. You really hate to see a competitive seat like this, thrown open to whatever sort of, is lurking around Utah. But he's served his country well, and I'm sure he has big plans for his life after the Senate.
Yeah, I do wonder what they'll include. But Jeannie, Democrats love moments like these. This is when you're supposed to tell me that the party has moved away from Mitt Romney, not the other way around, right?
Yeah, except I think it's a loss for all of us. I mean, Mitt Romney is one of the grown-ups, so to speak, in the room. We need more people at this point like Mitt Romney in Washington. Hard to believe. I didn't think several years ago I'd be saying that, but he does come with, telling it like it is and speaking truth to the powers that be in the Republican Party today. So I think it's a loss for all of us, not just for the Republican Party, but for sure Democrats are happy with what has transpired and they would like to have a shot at that seat.
He's not going to run for president again, I'm assuming, Rick, although that story seems to crop up every 4 years. What is in store for someone like Mitt Romney? Where could he be of service?
You know, look, I mean, I think that obviously he has a point of view on democracy. He has been crisscrossing the country, talking about how important it is that our democratic institutions, elections and whatnot, are reinforced and really fortified against the attacks that the Trump administration and campaign waged against them. So I wouldn't be surprised that he devotes more of his time to really trying to cement our democratic institutions around the country and crisscross the country talking about how important that is. He was generous enough with his time to come to the McCain Institute Sedona conference and gave a similar speech and was very passionate. It's probably one of the best speeches I'd ever seen Mitt Romney give. And believe me, I've seen a lot of Mitt Romney speeches over the years. And this is an area I think he's very passionate about.
This is from the video just posted on
the
Twitter.
Next generation of leaders must take America to the next stage of global leadership. While I'm not running for re-election, I'm not retiring from the fight. I'll be your United States Senator until January of 2025.
Mitt Romney announcing today he is not seeking re-election. Some final thoughts ahead from our great panel, Rick Davis and Jeannie Shanzano, as we try to get our arms around AI today in Washington, the big meeting of the minds.
Just a note, coming into the 2 o'clock hour, we have some news coming into the market, so you should see a hedge come into the market as we head into the next 10 minutes.
When you get your news from Bloomberg, you don't just get the story. You get the story behind the story. How your EV's battery may not be as green as it seems. Why a decrease in global birth rates could send countries scrambling to increase immigration. You get context, and context changes how you see things, how you change things, because context changes everything. Go to Bloomberg.com to get context. In stocks, we've got yields backing off.
Just search Bloomberg Global News on YouTube.
Lots of undercurrents in terms of eco data.
Listen every business day right here on Bloomberg Radio. Or watch us live weekdays 10 a.m. to 6 p.m. Eastern on YouTube. Search Bloomberg Global News. Bloomberg. Context changes everything.
Walking into the building for the first time after the shooting, it was crippling, but it had to be preserved.
In response to the Pulse nightclub shooting that affected the LGBTQ community, Barbara Poma, owner of Pulse, founded the One Pulse Foundation to honor Pulse victims and survivors.
If you're an ally of this community, speak out. There are more of us together than apart. It is the power of love in its rawest form.
Join the fight for LGBTQ acceptance. Learn how at lovehasnolabels.com. Brought to you by Love Has No Labels and the Ad Council.
Breaking political news from the team that knows D.C.
A breaking story. Greg Storer, Bloomberg Supreme Court reporter with us.
Bloomberg Washington correspondent Joe Matthew, along with D.C.'s most respected news team.
Jack Fitzpatrick on Capitol Hill. Brian Teekbeck with Bloomberg national political reporter. Nick Wadham's the head of Bloomberg's national security team.
Bloomberg Sound On with Joe Matthew.
More breaking news today from the Supreme Court.
Listen live weekday afternoons at 1 Eastern or on demand wherever you get your podcasts.
The New Deal created American infrastructure that unleashed new opportunity. Today, we're doing it again with massive investment in modernizing our infrastructure to build for tomorrow. At Build America Mutual, we protect your municipal bond investments that help make it happen, building a vibrant future for our communities and your portfolio. Invest in the future of America with BAM insured bonds.
Use when you want it. Get the latest headlines with Bloomberg News Now.
Big job cuts are coming to the banking sector.
S&P 500 winners were outnumbered.
The top stories from our global team of reporters at the click of a button.
The deepening real estate slump in China.
U.S. officials pushing to help Ukraine.
Get the latest news when you want it with Bloomberg News Now.
One of the biggest public offerings of the year.
Listen on Bloomberg.com, the Bloomberg Business app, and anywhere you get your podcasts. Bloomberg. Context changes everything. Bloomberg Radio is where you are. Get live business news and market headlines from anywhere, 24 hours a day, via your mobile device. Listen on the iHeartRadio app. Tune in, the Bloomberg Business app, and Bloomberg.com. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Citigroup is preparing for a wave of job cuts as CEO Jane Fraser restructures the Wall Street giant to operate from 5 main businesses. Citigroup shares are up now by 2%. Amazon has unveiled a new push to get people into homes. Bloomberg's Steve Rappaport explains.
Charlie, Amazon.com is making its first foray into support for home ownership, putting up $40 million through nonprofit partners to create affordable housing. The move comes after the e-commerce giant has provided some $1.27 billion to create or preserve affordable rental units as part of a $2 billion initiative launched 2 years ago. The home ownership program will back projects near the company's 2 headquarters sites in Seattle and Arlington, Virginia, as well as Nashville, a hub for Amazon's logistics group. The National Housing Trust, a nonprofit, will use Amazon's cash to acquire or build affordable homes in partnership with local organizations. Charlie?
And that's Steve Rappaport reporting. Amazon shares are up now by 2.1%. American Airlines Group has slashed its third quarter earnings outlook on a jump in jet fuel prices and payment of roughly $230 million in retroactive salary under a new contract for its pilots. Today, for the most part, we are looking at airline stocks that are trading lower. American down by 5.5%. Most mega caps are gaining, with the chiefs of 5 of the 10 biggest U.S. companies appearing at a closed-door Senate meeting to shape how AI is regulated. More on that topic coming up on Sound On. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington. We're coming up in the next hour. We'll be joined by Congressman Michael McCaul, the chair of the House Foreign Affairs Committee, with news now just breaking from Capitol Hill. Members of the Republican Conference, hardline Republicans in the House, have blocked debate today on a bill to fund the military. So the talk is growing ever louder about a possible government shutdown. Let's bring you up to date on things now. World and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. With an auto workers strike possible without a deal by midnight tomorrow, UAW President Shawn Fain plans to detail the union's strategy later this afternoon. Any potential strike in Detroit could have political ripple effects beyond Michigan, and not just for the self-described most pro-union president ever. Bloomberg's Nathan Hager has more from Washington.
Democratic Senator Sherrod Brown of Ohio has a lot riding on the United Auto Workers reaching a deal with the Detroit Three. Brown is a strong backer of the union, and he's already in for a tough re-election fight in a state that former President Donald Trump carried twice. Ohio is home to a General Motors battery factory. Brown has led dozens of Democrats in pushing the automakers to include battery workers in their next contract. In Washington, I'm Nathan Hager, Bloomberg Radio.
Republican Senator Mitt Romney of Utah says on X today it's time for a new generation of leadership. While he says he's not running for re-election, he's not retiring from the fight. He says he'll be their U.S. Senator until January of 2025. We're learning more about what was discussed behind closed doors today when senators hosted tech leaders from Tesla, Meta, Alphabet, and Microsoft. They talked about artificial intelligence, and Elon Musk warned it's a double-edged sword, being a source for good, but also a risk to civilization. It took nearly 2 weeks, but Pennsylvania authorities say they've recaptured Danilo Cavalcante. Pennsylvania State Police Lieutenant George Bivens says Cavalcante's heat signature was picked up by an aircraft last night, and they moved in this morning.
Shortly after 8 a.m., tactical teams converged on the area where the heat source was. They were able to move in very quietly. They had the element of surprise. Cavalcante did not realize he was surrounded until that had occurred.
Bivens says Cavalcante suffered a bite wound from a police canine. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Joe.
All right, Nancy, thank you. You think a night out to the theater might be a nice thing here as we get back to reality after Labor Day. It was not the case for Congresswoman Lauren Boebert, who was kicked out of a Beetlejuice show in Denver on the eve of her return to Washington. They went out Sunday night, ahead of the big week, get a little theater, maybe some dinner. The theater did not name Boebert, but the video is clear as you show them being escorted. Having refused to leave, initially the police had to come after guests complained that Miss Boebert and her guest, a gentleman she was with, were vaping, singing, using phones, and causing a disturbance during Beetlejuice. So in other words, it was a regular State of the Union. As we reassemble our panel for some final thoughts on this, Rick Davis and Jeannie Shanzano. Jeannie, I don't know, maybe it's good for business. Can Lauren Boebert raise money on this?
Hey, she can raise money on anything. And I love the thing she said when she was departing, when all the stars say this when they're in trouble. Do you know who I am? I'm going to call the mayor, is what she was apparently saying to them as they escorted her out.
Yes.
Never a good sign, but she admitted it on her social media, and I think she'll try to raise money off it. So nothing new.
Do you know who I am, Rick Davis? Never seems to end well in the police blotter or in the media. Do we still have Rick? Rick, you might be muted. I can't hear you. I bet he's saying something good, too.
At least it's good news for the theater industry that she enjoyed herself so much she sang too loud.
Yeah, I guess that's the truth. Long live the musical theater. Rick, thank you. Jeannie Shanzano, thanks for humoring us as always. You can get the latest news whenever you want it with Bloomberg News Now, something we want you to know about. Top stories from our global team of reporters with just a click. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, anywhere you get your podcasts.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? Is the economy stupid? Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the eight ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
AI has its big day in Washington. Welcome to Hour 2 of Sound On, as the titans of tech gather on Capitol Hill for a special closed-door meeting with the entire U.S. Senate, as lawmakers try to get their arms around a fast-moving technology in the slowest-moving legislative body here. We're going to get an update from the Hill in just a moment from Bloomberg's Kayleigh Lyons, who's been rubbing elbows with the likes of Elon Musk and Mark Zuckerberg for the balance of the day. Must have been something I said for the music there. Hardline Republicans, meantime, blocked the House from even debating a bill to fund the military. This just emerged, and it's something that we're going to talk about with new questions about a possible government shutdown with Congressman Michael McCall, who chairs the House Foreign Affairs Committee, a conversation that Bloomberg's Anne-Marie Hordern will be joining, so you don't want to miss that. Right now, it's Wall Street. Let's get an update on trading from Charlie Pellet. Hey, Charlie.
Thank you very much, Joe Matthew. Higher across the board. Do want to begin, though, with a headline from the Bloomberg Professional Service. In fact, a story out of Washington. The U.S. Treasury logged a rare surplus for the month of August as the department accounted for revenue from student loan payments, reflecting the Supreme Court's invalidation of the Biden administration's move to forgive the debt. The federal government had an $89.2 billion surplus for August, as officials added $319 billion to revenues because of July's Supreme Court ruling. Stocks do remain higher across the board. CPI Wednesday, we got the report this morning, and the S&P right now, muted gains up by 0.3%, up 14 points at 44.75. The Dow up 15 points, a little change now, up by less than 1/10%. NASDAQ, the composite index, up 80 points, higher by 0.6%. 10-year yield 4.23%, with a 2-year yielding 4.95%. Gold, little change, down 0.2%, $19.10 the ounce, lower by $3.36. West Texas Intermediate crude down 0.4%, $88.45 for a barrel of WTI. Well, as for the overall market backdrop, Darryl Cronk is Chief Investment Officer for Wealth and Investment at Wells Fargo Bank.
We're stuck between this 4,300 and 4,600. All we've done is bounce back and forth between it. At this point, you need something to change in the baseline to really accelerate beyond the 4,600. Equity risk premiums are at a 19-year low. I'm not getting paid to take equity risk today.
And right now, again, the S&P at 4476. And by the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Again, recapping, stocks are advancing. S&P up 14, now up by 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to Hour 2 of Bloomberg Sound On. It's not every day you see Elon Musk, Mark Zuckerberg, Bill Gates, Sundar Pichai, and the others all in one room, never mind here in Washington with the entire Senate. That's asking a lot. It actually happened starting early this morning. You should have seen the line outside the Russell Senate office building as they all got out of their black SUVs and went indoors for a closed meeting, not to be confused with a congressional hearing in which people would be sworn in to testify. But that's why Bloomberg's Kayleigh Lyons went down to Capitol Hill first thing today to witness all of this, and she joins us right now, as she typically does at this time, just from a very different place in town. Kayleigh, you've been rubbing elbows, as I mentioned, with Elon Musk and Mark Zuckerberg and the rest. This is a day-long meeting, I guess is the word we're using, and it's not over yet. What's happening?
Yeah, it's not over yet. They just had the lunch break, Joe, and then they're going to start the second afternoon session, though not all the CEOs that were here this morning are going to take part in that session that's ongoing now. Elon Musk has left the building, as has Mark Zuckerberg and Sundar Pichai. They have stand-ins, other executives from their companies that are going to join this second session. Also, I would note, most people did arrive in black SUVs. Elon Musk, though, did arrive in a Tesla. Now, as for what Elon Musk and the others told lawmakers, we understand that there was a lot of just high-level conversation, though when Senator Chuck Schumer, who of course really is the one who was leading this summit, asked for a show of hands about whether or not any of these participants thought the federal government had a role to play in AI regulation, almost everybody did raise their hand. And when Senator Chuck Schumer emerged from the meeting, talked to reporters at the microphones, he said that it was a robust discussion. He comes out of the room exhilarated, and clearly there is a role for the federal government to play. Elon Musk, though, when he was leaving Capitol Hill, did talk to reporters, was asked what he would like lawmakers to do from here. This is what he had to say about that.
The sequence of events will not be jumping at the deep end and making rules, but it starts with an insight. In fact, this is actually how all of the regulatory bodies have been formed, I believe, is you start with a group formed to create insight, to understand the situation. Then you have proposed rulemaking. You'll get some objections from industry or whatever. And then ultimately you get sort of a consensus on rulemaking. That rulemaking then becomes law or regulation.
And Joe, I would add that he was also asked if AI was going to kill us all, but he said he doesn't think so. He hopes not. There is a non-zero chance, but he thinks it's pretty low.
Okay, interesting. He tackled the issue that we all want to tackle as well, it seems, Kayleigh. And that, of course, is, are the robots going to kill us all? Let's listen to what he said, and we'll have you respond to where this came from.
I hope not. You should think of the future as a series of probabilities as opposed to certainties. There is some chance that above zero that AI will kill us all. I think it's low, but there's some chance. I think we should also consider the fragility of human civilization. And if you study history, I think you realize that there's a rise and fall to every civilization. Every civilization has sort of a lifespan. So we want ours to last as long as possible.
All right, Kayleigh Lyons, is that the tenor of the conversation we think was being had in there, or was it just reporters trying to get abstract with Elon Musk?
Watching a little bit of a roll late afternoon, right around 2 o'clock in the afternoon. We're going to see if the Bears can take this down. How deep can they take it down? Can they get underneath? Got a little bit of a bear plane right here. Can they come? Wait a minute. Can they take it down, baby? Right down in there. Hopefully you can see it on the bottom of your screen down here, bottom left-hand side of your screen. See if the Bears can get down here, slam this down below the hourly trigger, and see if they can get down to the daily trigger. Keep your eyes on that daily. Let's see where that 446.70. Move that over there for you so you can see it. On this one right here, you do not want to see any kind of a break below this hourly trigger. If you see it, we will blast down to 445.76 down there. So make sure this trend just stays going, moving up to the upside.
Bloomberg Washington senior editor joins us at the table. And up on Capitol Hill today, Billy House, Bloomberg congressional reporter. It's great to have both of you with us here. Wendy, I'll start with you. The significance of this, I think, is really important. You know, people are asking, well, what are the deliverables? Where's the legislation? But what actually happened today is there was a gathering so important that it got everyone's attention on an issue that we wouldn't otherwise be talking about. We'd be hung up on the news of the day of the impeachment inquiry or whatnot. Did Chuck Schumer succeed in at least getting our eyes on the ball?
Yes, I think if by that measure, absolutely. You've got 20 or more of the most powerful tech executives in the world, the people who are actually trying to exploit this, control it, somewhere in between. And at least the U.S. Senate is at least heard some expertise on it, heard the challenges in controlling it or regulating it, which I think would be very, very difficult. Yeah. On the other hand, this is the same Congress who, like I think it was about a year ago, they had a Google executive and a Twitter executive in a hearing, and the members of Congress were asking the Twitter CEO about things on Google that couldn't work on his phone and things like that. Yeah. And so Congress has a long way to go into just the beginnings of understanding this, and this was a baby step.
Well, okay, sure. So, Billy House, was this a briefing? Was this the beginning of lawmakers learning more about this? Or was it to get all of our attention on a critical issue? Maybe you have a different way of seeing it.
Well, there's been legislation to regulate, put guardrails on AI research and developments, but at the same time, it's an area that Congress does realize is very competitive, is fast moving. So exactly how many guardrails or what kind you want to put on this is something they are only now beginning to understand. And I think some of that discussion took place today, and also in the context of everything, including creative rights, which is timely now, and the impact on, for instance, screenwriting, that sort of thing. I know Pelosi over here in the House was very concerned about that. So, I mean, we don't know exactly what and the parameters of the discussions today, but certainly it took in some of those areas.
You know, you mentioned tech executives being dragged up for hearings. Wendy, they're usually torn to shreds in these things because they're usually antitrust related or consumer focused. Today, they're the captains of industry, and we need your brains now to figure this out. But was this also getting everybody in the room kind of calling out all of these executives? Your companies are on notice. You know, we actually have our eyes on you here. We know that this is important.
Yes, absolutely. I think that's true, and I think some of the questioning reflected that. You know, and this whole notion of the vast power with AI that is now in the hands basically of these 20, 25 people, and just what they control. And Congress, of course, seeing someone else in control of something, wants to get in on the game.
How about that?
And but it will be a while before they're able to figure out, as Billy and others said, even how to regulate this.
Well, I've got to ask Billy about what's happening elsewhere on Capitol Hill because it's been quite a 24-hour period. Billy, every video I've seen of Speaker McCarthy walking out of his office includes you standing next to him with your phone. So I think you're probably the closest thing to the sun that we have right now. We just learned, before I ask you about impeachment, or maybe I should ask you about a shutdown, that I guess there are members of the Republican conference who today blocked debate from even happening over a military funding bill. Does that make a shutdown more likely?
Oh, I think it does, and I think it showed this was just a one bill out of the 11 still left to be passed in the House. That the uphill climb that the Speaker and the House has in addressing government spending before a end of month deadline to at least do a temporary stopgap measure. They couldn't even get a rule, which is basically a vote on how to proceed on this military-related bill passed, or at least McCarthy worried it would not pass. There was no agreement. And so he took it off the floor. So that's certainly not a good sign, and it's kind of left people back on their backpedaling on some of their claims that this can get done, and they're downstairs now trying to figure out what kind of pieces to pick up, not much less whether those pieces will all, develop into some kind of, advancing of a bill by the end of the month.
Speaking of backpedaling, Kevin McCarthy answering questions now and having to defend his decision to do an impeachment inquiry without a vote. We've all been thrown back to 2019 after what he said today. Basically, it's Nancy Pelosi's fault. This is how he put it.
Nancy Pelosi changed the president of this House. This doesn't preclude from a... Nancy Pelosi changed the president of this House on September 24th. It was withheld and good enough for every single Democrat here. It was good enough for the judge. Why would it have to be different today?
Let's go back to September 24th, that very day he's referring to. Listen to then Kevin McCarthy.
Our job is to legislate, not to continue to investigate something in the back when you cannot find any reason to impeach this president. She cannot unilaterally decide we're in an impeachment inquiry.
Okay, beyond this is why people hate Washington, how long can he keep a straight face on that?
Oh, he can keep a straight face on this through the Senate vote to acquit Joe Biden. And I'm only saying that because the Senate is a Democratic.
Is this a new precedent, though? We're going to do this every time there's a new president, just impeach him. It won't mean anything.
It's shocking. I mean, in the history of our republic, there was one impeachment, Andrew Johnson. Yeah. Nixon resigned before he could be impeached, and then
now it's an annual.
Now it's like an annual event, exactly. Every time you don't agree with the president or you think you can score political points, one party or the other seems to impeach, which, the way we went to school and learned it, impeachment is literally a nuclear option. You should save that for when there's no other way to remove a dangerous president, or things like that. So, yeah, but yes, Nancy Pelosi did start it without a vote. I think 5 weeks or 5 months into it, there was a vote. And she did it for the exact same reasons Kevin McCarthy is skipping the vote. It's not going to pass. And so even though he said back then his job is to legislate, he's going ahead with this impeachment inquiry because he's afraid he'll lose his job if he doesn't.
We've heard motion to vacate. Well, we heard it on the floor, Billy, from Matt Gaetz yesterday. Not convinced. Chip Roy not convinced by this. They're not signing on to a continuing resolution, apparently. How would you describe Kevin McCarthy's station in the universe right now when it comes to his tenure, when it comes to the gavel?
Well, it's basically where it's been. McCarthy likes to say he wakes up every Monday morning eager for the challenges ahead, that the media says he can't solve them, and then by Thursday they're asking him how he solved them. But this is far more complicated. On the impeachment, in fact, he did not hold a vote, in part because a good chunk of his conference, especially freshman members in districts Biden won in 2020, didn't want to go on record as voting on anything on impeachment. And so this sort of unilateral order to hold a hearing, an impeachment inquiry, was his way to insulate them from having to cast a vote. With regard to Pelosi, she did eventually hold a vote, and that vote actually prompted public hearings. So McCarthy isn't saying we're not going to have public hearings, though, before a vote. And in fact, he is planning, and the committee chairman involved are planning to hold public hearings. So there are differences even with what Pelosi did. And there's no time frame. So it's quite possible there never will be an impeachment vote on the House floor, but there will be a lot of investigation of a Democratic president by a lot of allies of a potential Republican president. Again.
Well, you know what hearing we are going to have, and apparently it's going to be this month, the first hearing of the impeachment inquiry. Congressman James Comer, who chairs the Oversight Committee, spoke about that in a briefing earlier today.
We plan on having a hearing in September that will kind of evaluate some of the things that we believe have happened from the Biden family that are in violation with our laws. So what I said in January holds true to today. We are following the money, and we will see where that leads us.
Well, so we're still not sure, I guess, where we are. If we still need to see where this leads us, Wendy. I thought there was evidence to prompt an inquiry.
If you've seen the evidence, there's a lot of people saying they believe this happened, they think this happened. There is still no hard evidence, and unlike the attempt to impeach Donald Trump over Ukraine, there was at least that phone call that the so-called, what Donald Trump calls the perfect phone call, but when he asked, the Ukrainian officials to investigate or to not help Biden. But yes, there was at least something there. Here we have a lot of smoke, no hard evidence, and I think the impeachment inquiry is to find some evidence.
Yeah, and it could lead anywhere, as they say. Billy, what's going to happen in that hearing in September? Do we have any idea?
Well, there's a very good chance that the administration or members of the administration will try to block some of the testimony or documents being sought between now and then for that hearing. And so that's kind of that's one of the rubs with what McCarthy has done. On one hand, he likes to say that an impeachment inquiry, quote unquote, elevates the power of the House to obtain documents to demand testimony. At the same time, there's been no actual vote on the House floor, and therefore can easily be argued or will be argued in court that there's no actual formal impeachment inquiry. So he wants it both ways. There's also possibly the fact that the possibility he doesn't really want any resolution. He's just trying to, as you've mentioned, not be ousted by the conservatives demanding he do something, at the same time not putting his moderates in jeopardy by making them vote on anything.
Yeah, wow. This is going to be quite a month.
It is going to be quite a month.
As we juggle
ending with a government shutdown.
The start of an impeachment inquiry and potentially the start of a shutdown, although the conventional wisdom just a couple of days ago was that a stopgap was in the cards. Are we moving on from that?
Apparently, after this business with the defense bill today, it doesn't look like a stopgap is going to be accepted by the hard right conservatives.
Yeah.
They actually have said they want to shut down the government so that they get their way. At least they're threatening that.
An
so they get
impeachment
their
inquiry
way.
makes it difficult for Kevin McCarthy to count on Democratic votes to keep the government open. So
Absolutely.
Here we are. This is not getting easier.
It's getting a lot harder. I'm hoping he still wakes up Monday morning feeling so optimistic.
Well, I'm glad someone is. Wendy, thank you. Wendy Benjaminson, it's always a great pleasure to have you with us. Bloomberg Washington senior editor. And Billy in the house, Bloomberg congressional reporter. Billy, always love talking to you. Billy House, great reporting. If you'll see a picture of Kevin McCarthy anywhere, look for Billy. We'll get you his autograph. As we prepare to bring in Congressman Michael McCaul in an important conversation that we've been looking forward to here on Bloomberg Sound On, I'm joined by my partner on Balance of Power. Bloomberg's Anne-Marie Hordern is with us here in the studio in Washington, D.C. For the conversation that we're about to have with the congressman who chairs the Foreign Affairs Committee. It's great to see you, Anne-Marie. Thanks for coming over to talk to us on the radio. I feel like I finally got through to your agent. This is huge. So we have pretty
We actually sit next to each other.
Well, actually, out there we do, yeah. It's all different rules in the studio. See, this is kind of like, the Avengers. We're coming together from different shows and comic books to make one great program here.
Exactly.
Thanks for coming over. Now,
Thanks
we
for
have
having me.
breaking news from the House today. Around this time, we're talking about yesterday an impeachment inquiry. Today, as we were discussing with Wendy and Billy, an attempt to even debate military funding was blocked in the House. So we're wondering if this is already over.
Well, it certainly feels that way, doesn't it? Or is it just such that it's the beginning of all these negotiations, that everyone is coming in fully with their walls up and they're not willing to make any concessions so early on because they say, in Congress time, 18, 17, 16 days, that's actually quite a long time.
Well, I suppose that's right. What do we have, 17 days to a potential shutdown? With that said, though, the idea of the House and Senate getting together is quaint when the
Over
House
$100
can't
billion.
get itself together.
It doesn't seem like it'll happen in this lifetime, as that's how it feels right now.
Sure.
But at some point, they have to fund the government.
That's true. That's coming at the end of this month. We could have a lot of things happen between now and then, and we'll talk about that in just a moment with Michael McCall. But there are a lot of different things that we're looking at. If it's an impeachment inquiry hearing this month, that's going to take a lot of time, potentially away from negotiations that Democrats may not be very friendly in now because of the impeachment maneuver. So it's
well,
hard
exactly.
to tell
This
how
is
that
where I
goes.
think it's very difficult for McCarthy. Not just him, he's dealing with his own caucus, but because he decided to go for this probe, any Democratic votes he needed, the Democrats to vote for a continuing resolution, has he now just negated them? They're not going to sign up for his plan.
Right.
Because of this impeachment inquiry. It does feel like he's more reliant on Republican votes, or the Democrats say we're going to take the high road, we want to keep the government open.
All great questions here.
But it's going to be a difficult maze for him to navigate.
That is for sure. As we find the headline on the terminal, GOP hardliners stall military funding, raising shutdown risk. And we add the voice now of Michael McCall, the congressman from Texas who chairs the House Foreign Affairs Committee. Congressman, it's great to have you with us on Bloomberg. Thanks for coming back. And now that we're getting back into the swing of things here in Washington, indeed, we'd like to ask you about a few issues. But with regard to this latest development here, did that make a government shutdown more likely?
Well, as I understand it, the rule has been postponed. I think they're working out details with the defense appropriations bill. So I would not try to read too much into that. I'm still hopeful that we will have, a rule vote this evening and move forward with the defense appropriations bill, possibly as early as tomorrow. So I don't see that shutdown as imminent as maybe you're indicating. Frankly, I'm not a big fan of shutdowns. I've never seen a shutdown work very well, especially for my party. Republicans always tend to lose when the government's shut down. So I think the American people want us to govern, and they want us to get things done. I think the speaker is trying to do that, and it's, as you noted, very difficult under the circumstances. But he's always been underestimated every time, and he seems to be able to pull, a rabbit out of a hat, in prior legislation that we've had. So I still remain optimistic.
Congressman, what we're talking about here is that hardline House Republicans didn't even vote to allow defense spending to be debated. This is in the House. In the Senate, we still have Senator Tommy Tuberville holding up more than 300 military nominations. What do you say to American people who look at both the House and the Senate and say the Republican Party is potentially hurting the U.S. preparedness, military preparedness, and it can cause national security concerns?
I share those concerns, and I voice those on CNN, State of the Union on Sunday. But I think it's important to put it into context. The Biden administration, for the first time, used taxpayer dollars to fund abortions within the military. That's never been done on the National Defense Authorization. In fact, we cured that in the House with our NDAA bill that will be conferenced with the Senate. So my whole point was that I don't think one senator blocking all these nominations is really the more productive route. I think the best route is to deal with this in the conference committee, that we will have House and Senate to ensure that taxpayer dollars not being used for abortions in the military. I think holding up these nominations, I've talked to a lot of, brass at the Pentagon, and what I just worry about is that it will impact our national security. There's a debate about that, but I don't see how you can have all these openings unfilled without having some impact on the ability of the military to be ready.
We were actually joined around this time yesterday by Senator Tommy Tuberville himself. He made the case to us that this does not impact readiness, that the rank and file will be just fine, and we have too many generals anyway You've called this paralyzing to the military, Congressman. What message does it send to China?
Well, if we don't have top key positions in the Pentagon filled, I think it's a sign of weakness. I think it projects weakness, and that's always very dangerous. It invites aggression. I know that Schumer does have the ability to put these nominees forward, and I would hope they can come to a consensus over there. But just holding up these nominations ad infinitum, I think is dangerous. It's well-intentioned. I think he and I both agree, that being Senator Tuberville and I both agree, that taxpayer dollars should not be used for abortions in the military. We fixed that in the House. We're going to conference with the Senate, and I feel very confident that that will be not be a part of the final package. But, you know, it's all about the method and how you want to achieve the same goal. And I think holding up these nominees in key positions at the Pentagon does not send a very good message.
When you look at China, we have to ask you what you make of Huawei coming out with this phone that looks like they use technology, the exact technology that there are export controls on China and Chinese companies, CSMIC and also Huawei, both on the entities list, to make sure that China actually doesn't have these capabilities, yet a phone arrives. Do you think the export controls that are on China right now are working?
They're not being enforced. SMIC has American component parts. This 7-nanometer chip is a very advanced chip, and it's now in Huawei's 5G smartphone. This is very disturbing and a major violation of our export control laws. I sent a letter today to Secretary Raimondo, and I have jurisdiction over BIS, which is the Bureau of Industry and Security, in charge of export control, because this was not enforced. And now they've got this very advanced technology, 7-nanometer chip. You know, when you look at the hypersonic program, that was built on the backbone of American technology. When it comes to the 7-nanometer chip, and you look at things like AI and the future of warfare, which will involve this kind of semiconductor chip, that is what is most disturbing to me, is that now China, they're very good. They don't really invent things. They're very good at stealing our technology. And this is another good example. And you know, the timing, Anne-Marie, this was announced the day that Secretary Raimondo left Beijing, with a real slap in the face that, hey, now we got your technology. We got your most advanced semiconductor chip. We got to stop doing this. We got to stop selling to China our most advanced technology that they then that will turn and use against us if, God forbid, we have a conflict in the Pacific.
Well, so then, Congressman, is your committee working up sanctions on SMIC, or should we be talking about a total severing, a total cutoff of our technological relationship with China at this point?
You know, we can't cut all trade, but I would argue that with respect to certain sectors, like the advanced semiconductor chips, like AI, like quantum computing, this is something I've talked to the Commerce Department about, making it more rather than company specific, because China will change the name of the companies. But if you make it sector specific, to me, that's a better way to handle this. That way, all exports regarding AI cannot be exported to China. All exports regarding quantum and advanced semiconductor chips. And that way you deal with it in a very, I think, a broader blanket that I think would apply. We're going to have commerce with China. They're a big market for the United States, and we buy a lot from them. But when it comes to national security supply chain, like semiconductors, like critical minerals, rare earth minerals, and medical, we need to start pulling that supply chain out. The reason I introduced the Chips for America Act and got it passed was Secretary Pompeo came to me and said, we got to pull supply chain out of Taiwan because TSMC controls 90% of the advanced semiconductor manufacturing for the world. So imagine a scenario where China invades Taiwan with a blockade and cutting the sea cable. Then they either own or will break 90% of the world's advanced semiconductor chip manufacturing.
When you look at what happened this week, we saw Kim Jong-un make his way to Russia to meet with President Putin. The individual who could probably put the pressure on both those two leaders, those dictators, would be Xi Jinping. Do you think it's wise the administration still seeks a meeting with Xi Jinping to try to make sure at least they're putting pressure on Beijing to then put more of a pressure on both its neighbors in Russia and in North Korea?
Look, I think it's always good to have meetings and have conversations, but you don't concede certain things. I think, we saw like certain export controls were pulled back prior to these meetings.
Just want to break in for a moment. Just keep your eyes on SPX. I just took a look at the gamma for SPX, and we've got a gamma pin at 4465 on SPX. So if you want to open up your own chart to SPX, there is some kind of a pinning action going on right around there. So slightly lower from where we are. Just keep your eyes on that into the close. Yeah, so what I try to do is I try to put the Bloomberg on for anyone that wants it. If you don't want the Bloomberg news on, you just mute the channel. But some people do like listening to it, so I prefer the quiet myself too. Do you guys all prefer the quiet? Yeah, there's a there's a gamma pin on 4465. The gamma flip to positive on SPX is 4477. So just so you know, that's where the gamma flip is. Let me see if I can check the delta flows real quick. Holy shit, dude. Woof. Watching the call and put. It's pretty even, Steven, right around that 4460. So, like, dealers don't really need to do shit right now on weeklies. We're kind of right in the center here. Well, I'm looking at the inflows for puts and calls on the week. 4450 is the majors on the put side to the downside. And then on the upside for calls, you're looking for 450. There's a whole ton of calls at 450 into the end of the week. Looks like we kind of tagged. We've printed most of the stuff to the downside already for the week. Let me look at some other stuff here. We'll look at NDX next. Damn, lot of like bullish NASDAQ, man. Bullish as fuck. You got too many bulls out there on NASDAQ. You fucking bulls just buy on NASDAQ, don't you? Like, can you even read NASDAQ? Is it even matter of reading NASDAQ gamma? I don't know. Like, NASDAQ is just stupid, man. You can just check NASDAQ gamma for like, like you could just check net gamma on NASDAQ and you'd probably be able to know if we're risk on or risk off. Fucking bulls, man. They never stop buying tech. So right now we're just sitting on, I parked on this hourly trigger. You can see down here that it's being defended. So if you're just watching right here, all these buyers, they're still here right now. You can see them. They're there. They're over here. They're stepping back in again. So no, at this point, there's no there's no loss of demand here, right? So 446.70 still demand. If you're a bear, you need to get underneath. If you're a seller or anything like that, you need to see this demand disappear up here. If you stop seeing buyers coming in, you can take that trade down to this level right here. And then you're going to also then be looking lower for your next target. To the downside, you can see we had buyers right there. Yeah, buyers, known buyers right there. 445.08, 444.20. But so far, the demand is still here, right? This is where the demand came in. You can't see all this. Hold on. So you can see where all this demand came in here, right? This morning, bam, came in, bought it. Bam, came in, bought it. And they've been aggressively buying this all day, right? They're just stepping in, trying to get that squeeze up and over to keep us in trend to the upside. Until buyers lose that, there's not a lot to say for selling here. So let me see if I can. I don't know if I can switch this over, but you're basically looking for, if you're a seller, you're looking for that down move right here. If you follow my screen or to the bottom left hand side, and then you're really looking for this right here, right? You're looking for demand to leave. You're looking for demand to leave right here, and to get some selling to that downside down below. So until that happens, it's 2:40 in the afternoon. Let's do a little talk about what to expect tomorrow. We'll try to let me see if I can come on to a 30-minute chart here. Give me a quick second here. Let me delete all this crap here. Let me see if I can do this on remove 11 drawings. Give me one quick second here. I'm going to switch over to the trigger screen. So just into tomorrow, it looks like the weeklies were tagged. I guess you could call it tagged at 8:30 this morning. There were a bunch of puts out on SPUs for 445. They were in the money briefly this morning. You could say they were in the money right down here. The dealers love this shit right here. The dealers want to be here into Friday. So any kind of deviation below, you're not going to trigger sellers unless you're down here, right? You're not going to trigger a bunch of put buying unless we break this trend. And we haven't hit the upside target into Friday. And the bulls are in charge right now, at least on the intra-week. Well, I know that you're not going to believe that. I know you're going to tell me it's triple witching. I know all the shit that's coming out this week. We can take a look at the. Let me see if I can open this up here. We have we got a busy week, right? We've got Vixpiration next week. We've got CPI today. We've got claims tomorrow, PPI tomorrow on Thursday. We've got end of month stuff coming up, right? We got a bunch of contracts ending and stuff like that. We had the contract roll in futures. We got news. We got the Fed coming out. So on the 19th and 20th. So it's very busy into the end of this week. And then, Vixpiration's not this week, right? It's next week, I think. So that whole thing is pushed off into next week. So I'm going to warn you of something here. I'm going to tell you guys something. I know I want you to be fully clear with you. I want to be fully clear here that I realize that there are a lot of hopes pinned on all of this vol coming down the pike for us. And what you want, even if you were to get it, might not be until after all of that stuff is out of the way. Does that make sense? So dealers pin as much as they can. And then if the full basket of bad news means something, maybe you see that move after all of these events are over and not before, right? So there's a little bit of front running here by sellers, right? Trying to sell into that bad news, hoping there's that bad news. I was on the phone last night with Binky, and he said, what would you do into, he asked me what I would do into CPI and all of these things we have coming up. And the best response that I had, or that I had two responses. I said, if you're long this market, let's say you own the underlying, you can buy 5 and 15 cent puts. They expire on the 21st of the month. They're dirt cheap. So if I own 100 shares of SPY, let's say, and I can buy some cheap puts. If we go up $3, I'm going to make $300 or something, and I can buy $300 worth of 0 to 8 puts and hedge. If you're just trying to trade all of this with nothing on the line, right? You're trying to hey, I'm a seller, or hey, Cap, I want to be a buyer, whatever that is. Probably heading into today. This is a conversation yesterday. I was heading into today and heading into all of this volatility that we are coming into. The best trade is likely some kind of a put-back ratio spread. I fucking love that trade. If you are, if you're that guy and you're like, hey, I want to take that, I want to hedge myself to that downside. I want to be able to put something on that I don't get wrecked in if it goes against me. Or if it doesn't happen until after the end of month, let's say it's the first week or second week. Let's say they pin us into the first of the month of October. Maybe you're looking at that ratio spread, right? That bearish ratio spread. Maybe you're putting a couple weeks extra on it into October. And the best part of that trade is if you've got that bearish viewpoint, and number one, if they pin you here and you don't get that drop until after the first, you're going to make money, right? And you go down to that 430, 420. You want that 400, whatever it is that you want. But the scary part here would be is that you're short and they line up all these events and they're like, we're doing this, but then they squeeze you up every time, right? They squeeze you up every time, and they just put the pain trade on you, right? And if any of that news goes the wrong way for you, if that news ends up being bullish, however it's interpreted, if it's interpreted bullish, you're not off sides with the putback spread, with the bearish ratio spread. If we actually begin to head higher, I got to tell you guys something. I'm going to warn you right now if you're a seller of this market. You need to, it's okay for you to be short here for this market, but I want to ask you a serious question. If you were short here and we start like laser eyeing the pin on JPM collar into end of quarter, and if we run up to 460 on SPY or 472 on SPY for the 466.5 pin on SPX, what are you going to do? Or does your short, can you afford that maintenance? Can you afford that pin into end of quarter? That's the big question. I don't think you can afford it if you're just short. So maybe if you're a futures trader and your bias really is that bearish, I would most certainly say fuck futures, put on the bear ratio spread. You're going to win, right? If you're right and your thesis is right, and if you're, the Elliott wave 5 down bear count or whatever is right, you're going to get paid. If you're wrong, you're not going to be licking your wounds, right? So tell me in the chat if you understand what I'm saying here, because you'll at least break even on the trade. You can jump on long if it does squeeze. If it goes up enough, you're going to be able to pay for that trade and collect some money, 5-10% of that trade. So if you don't know what I'm talking about, get off my fucking stream and go look up putback spreads on YouTube and get down the rabbit hole on Options Industry Council. You have no business trading if you don't know that stuff. And that's no offense to you out there either, but it's a very simple concept. They're very easy to set up. They're not complicated trades, but you can easily get it explained to you on how to take that trade. So leading up into all of this event vol, I'm going to warn you, man. Nobody cares about your money. I got to tell you that. Nobody cares about you being right. Nobody cares about you being wrong. Nobody cares about your internet points. At the end of the day, it's your money, right? So your money you have to preserve. If you are not long or short this market, you just sit out this kind of stuff, right? If you want to, if you're like, oh, there's all this volatility and stuff like that. Another thing for you, if you're know that all this vol is coming, is you just look for those dips to buy. You see a vol event come in, the vol crush comes in, you can buy those dips all the way up unless it's nightmare fueled type stuff. So just heading into all this week and into next week, I'm telling you, man, if you want to be short this, you don't have to just be like, I'm short the market. Because if this shit rips to the upside at the end of the month, you are I don't know, maybe you've got an endless supply of money for maintenance fees and stuff and margin and all that kind of stuff. Maybe you can just keep adding to your short until it works for you. Most people and retailers won't do that. They'll get squeezed out, and that's it. They're done. They're pissed off and all that kind of stuff. So no brainer here for you if you are looking for that short down to the depths of hell. If you're drinking the Kool-Aid on the market crash, if you think the market moment of weakness and all that other bullshit, but if we climb that wall of worry and at the end of the month, dude, that pain is going to hurt bad. It is not going to feel good. Yeah, putback spreads are great, man. I fucking love them. They're phenomenal, especially right now where we are. Right now where we are and what's coming up, it just stinks to high heaven. Like, if you know and I know, like, I got to tell you, like, quietly, I'm going to tell you something that I don't tell a lot of people. I don't like to talk about stuff. If you and I fucking know the market's going to roll over, it sometimes does. But if all of you guys are hedging this market into this shit and they pin this shit until after all that vol passes, you're going to get smoked, right? If you're thinking that, if I'm thinking that, if all of us are thinking that at the same time, it's pretty fucking simple, right? It's kind of hard to think that it will happen in our time frame. So I would, if you are that bearish, I'd be like, put some time on that shit. Put a month extra on that stuff. Now, put a month and a half if you need to. Put a put spread on that's just a basic put spread, right? And put some extra time on it. Because if they pin it, you're gonna get fucked, right? I've done this. I've actually hedged, and they burn my hedges. Like, they just torch them. We keep going up. They torch my hedge. We go up again. They torch my hedge. So I've been there. It's not like I'm not there. It's not like I'm not burning money as I hedge these things. So the putback spread is probably your best bet. You get caught in there, and it's not going to be pretty. So you're going to be looking at this into next week. Got a little bit of a roll coming in right now. Into tomorrow, you want to see the daily trigger hold. That's 445.76. You want to see the hourly trigger hold. That's 446.70. So we're going to take a look at what to expect the rest of the week. Bulls need to hold that if at any point the price closes with half an hour bars below 445.76 and the hourly trigger can roll down over it. We'll be looking for new downside targets. You have them from me right now. Those targets. I thought I drew them on here. I thought I did. Your downside expectation below 445.76 is going to be. Hold on a second. I can't seem to get this on here. There you go. Your downside targets below 445.76 are going to be 445.11, 444.21, and then, of course, trying to get, there should actually be some pretty decent support right here. 443.74, 442.21, and the new low to the downside. In all honesty, if you break the daily trigger, you are going to be looking for a new low below 442.76. So if you see this break down here, you see a nice break down here like this, right? You break down below that daily trigger, you get the hourly on top of you, and you will be targeting a new low, breaking actually below and likely slamming into 440 flight. Probably just take that whole thing out right there. Take that nice 440 out and get that nice new low on the market, just so you can see it right there. Bam. And then you'd get a nice rejection above at this 442 and then head on down to 430. So watch this closely. I'm going to chart this out for you right now on Webull for the rest of the week, and we're going to have a look-see here on what to expect coming in the rest of this week. So we're sitting on the Webull chart now. We're going to look at the 5-minute right here. You can see it right here, right? 5-minute chart, hourly or daily trigger, hourly trigger right here. There. Here's your hourly trigger. Right? We got the 14th and the 15th. We got the 18th right there. Give me a line right here. So here's Friday. Here's your Friday into end of week. Staying on trend so far, right? 1, 2, 3. Down here, bam. Down here, bam. Saved us. Woohoo! Coming right back down to that same place. There's your daily trigger right here. Oh, yeah. Nice, dude. Fuck yeah. Look at that move down there. Look at that tag, baby. Look at that tag. Bam. Down underneath. Bam. Right down to hourly trigger. As long as you stay on trend and daily trigger. Look at that, baby. You're a seller below, right? Any kind of below daily trigger, you become a seller. So right down in here. Whoop. That's your daily trigger. Going to line this up for you. And where's your bullish above, baby? And where's the DT sign right here? Let's see the DT sign right here. Hold on one second. HT, hourly trigger. Oh, right in there. Nice little smash down end of the day. If you get below for this daily trigger right here, right where this DT is, the selling will commence by tomorrow. So keep your eyes on this chart. I want to show you this into Friday here. There's Friday, right? If at any point there are closing bars below this daily trigger, this hourly trigger will come down and amplify a move to the downside, right? And we will start blasting down price targets to the downside. If there is a break with confirmation to the downside, price targets for Friday include this 440 right here, 440. Closing this gap to the downside into Friday. But you need to get underneath with the hourly, get down here, slam into 442, then get down here and slam into 440. 442, 440 to the downside. Target if we can hold underneath the daily trigger. As of right now, bulls are in charge of the market. They're trading it up, and they are buying the dips all along the way as we go. Another one right there, another one right there. We'll see if the bulls show up. If they fail and we get underneath, we'll start trading it down to that 440. If the bulls show up, price target into Friday. It's going to make your head spin when you see this. Price target into Friday, 450.59. Price target into Thursday, 448. 448.81 or something like that. Right up in there. So you're going to be waiting and watching here for the dip buyers to come in, slam down here, and then slam that right there. Get underneath here and start to head lower to 440. If you are a bull, this is your place to buy a dip. Do not get caught underneath this line. Do you see this right here? I am a seller below here. I am bullish above here. Bullish, bearish below. Does that help you guys out there? I hope it does. Let me see. main screen. Nope, wrong one right there. Must have send that back. This one right here. So there is your market expectation into Friday. That should be plenty, right? Look at that nice clean bounce down there. Look at that sexy little bounce right there. If you want to know the next trade for you, if you're a bear, you are looking for that bounce up here, bounce down there, and bounce right there. Woo, look at that squeeze. Woohoo. That's almost perfect right there. Do you see that? It's like almost fucking perfect. See that right there? It's almost fucking perfect. Yeah, JBJ, did you see that did you see that trigger did you see this right here flip short? Did you see this right here flip short right here? It's pretty badass, wasn't it? Pretty badass, isn't it, brother? I saw that flip short. Good eyes, JBJ. It's fucking awesome, wasn't it? It was awesome. Did you see that? Did you see that, dude? That thing is badass, isn't it? Like, tells you. And what's crazy about, let me describe this to you really quick. So, I want you to be aware of something here, right? So even though you're short right here, right? So even though you're short down here, you still want to, on pivots, take the money and run. So be aware you still want to take pivots even though you're still bearish here, right? So what you're looking for is that rejection for the next move. You still have to take your money. So whether you're bullish or bearish, you still need to take the money. I have to be clear on that, okay? So make sure that you're taking the money. Does that make sense? So let me describe it better to you. So right up here, so this whole long positioning monitoring, right? This long short positioning monitoring, this goes for bulls and bears, doesn't matter. Right? We're bearish here, but even though we are, you like take the money, boom, thank you very much. Come down here, take the money, thank you very much. Right? And if this resolves to the upside, you will see the switch to go long. So if you're short from up here, right? And let's say it flips long, you still made all this money in here. You made all that bank in there. Make sense? I think some of you guys will get this after like a week or two. You guys will watch this for like a week or two and you'll be like, yeah, I get it now. Nice. Good job, Froton Alpine. Good job. Good job. Pretty sweet, right? Tell me that shit ain't sweet. It's pretty sweet. It's trust. I traded this last 2 days, and it was insanely good. Not even the last. So on you guys want to hear some craziness? On Sunday night futures, I traded this on Sunday night futures, and I made a lot of money. I made a fuck ton of money in overnight. This thing works gangster on futures. Like if you're buying and selling market, like actually buying and selling and not trading options, this thing is baller. Pure baller. Pure baller. Like baller. Baller. And I got a better one too. I got a better one. I got one for all you investors out there. I got a killer one for investors. Yeah, I know. Sunday night. Don't tempt me with a good time. So so I'm going to get back off now. I got some crap to do in the background. I will be back with you guys. If you're an investor, I've got some stuff coming for you that you're going to love. Oh. I got one other thing for you out there. If you are a seller, now this is for bulls too, but if you're a seller, dude, I've got one part of this. I've got something for you where it's going to give you alerts for like someone was saying, what, 2-3 Sigma moves? I was like, how about going down for an entire year? And short something for like 6 months, 3 months, 6 months, 9 months, 12 months. I got some shit coming for sellers here that's going to blow your face off. So if you're a seller, dude, this is some crazy shit too. Like, it's badass. Paper being worked on, videos being worked on. So we're working on videos, papers, and you guys are going to get a whole like educational system. You're going to get a whole entire like video series on what to do, that kind of stuff in each situation. Yeah, you're welcome. No worries. You guys are going to love this, dude. It's going to be banging. Banging, banging, banging. Where's SPX right now? Is SPX trying to pin that fucking close? Look at that, dude. We're trading 44.65 right on the pin on SPX. Right on the gamma pin right now. You got dealers selling into you right now. It's not even the market. It's just dealers pinning you here. Dealers are not your friend right now. They don't love you. They ain't got no love for you. They ain't got no love for you today. That's all your dealer love right there. Dealers like pinning SPX right now into the close. Oop. Well, let's close all that out because it's on your screener there. Show that to you right there. So I'm going to bring that over closer for you. I got love for the money. Let me know in the chat if you're gonna long this close or not. I'll tell you one more thing. We'll talk about one more thing. If you're a bull and you want to buy this close, you are waiting for this cross right here. Let me show you what you're waiting for here. So I don't know if you can see it right here. You are waiting for a turn to the upside. You're waiting for price. Let me see if I can head over to that Webull full chart. If you're trying to buy this dip down here, you're like, oh, Cap, I want to buy a dip here. You're like you said, this is the place to get bullish. You are waiting for price. Whoop. You're waiting for price to get back above the 1 and 5 right here. So you're waiting for this move here. And you're waiting for this move here. And personally, I always like to be above this one right here for that move higher. I always like taking that second trade right there. Sketchy down here. But you are waiting for price to get above. Otherwise, you ain't got no trade as a bull dart, do you? You got to get above that EMA right there so that you can begin to take that long. Otherwise, don't mess around with it. Hard for the money.
With Bloomberg, you get the story behind the story behind the global birth rate, behind your EV battery's environmental impact, behind sand. Yeah, sand. You get context, and context changes everything. Go to Bloomberg.com to get context.
In the market, in that forecasters, economists are much closer in the ballpark of what they are predicting for inflation versus sort of those days when no one had a clue in the aftermath of the pandemic. And that's what really led to the really volatile whiplash reactions in markets. So I think, Tim, that's kind of my main takeaway for tonight.
Yeah, but Mike, how do you play this then if you're the Fed? Because I feel like November is all important. Will they or won't they is sort of the question here, and there's no halfway. How do they signal maybe something that kind of fills both buckets? Yes, the economy is slowing to a degree. No, we still want to proclaim our hawkishness.
Yeah, Simone, I think it goes back to this whole notion that the Fed will repeat over and over again. Chair Powell's repeated a bunch of times, and that the effects of policy tightening can take a while. They can have a long lag. And I think what the market's trying to suss out right now is what effects are still in the pipeline from all the tightening we've seen. I'll give you an example. If you look at the worst performing stock in the S&P 500 today, it's CBRE, the big office real estate company, out at the Barclays conference today, saying that the worst isn't over for them. They expect earnings per share to fall in the high teens percentage range in the current period. CFO saying the recovery clearly has been pushed back. And the other thing I look at is these regional banks. A lot of them also presenting at the Barclays conference today. And hey, that KBW regional bank index, it's stabilized, but we're still talking about regional banks off about 30% from their peak earlier in the year. So it's kind of this interesting disconnect between sort of the meat and potatoes, middle market lenders like that are still obviously struggling. And, this rip-roaring market led by tech that we saw earlier in the year. So, I think if I'm the Fed, I'm looking at, okay, what more in the pipeline of this long and variable lags in monetary policy has yet to make its way through the pipeline and still going to cool off the economy. And, if you look at some of these issues that I've been talking about, there's a case to be made to say, okay, maybe we do pause for the next few months and digest this, see what it looks like, say, in the new year. So,
well, speaking of seeing what it looks like, Stuart Paul, come on back in here and talk about this note that you have out that about the NBER recession indicators are about to flash red, because this is a little concerning, at least my takeaways.
Yeah, so we have to be thinking about what's coming down the road now that CPI is behind us. So starting tomorrow, we're going to be thinking primarily about retail sales and a host of other indicators that the NBER looks at. They have 6 primary indicators that they look at for timing business cycles. Industrial production has already stagnated. Real retail and wholesale trade sales has already stagnated. And we're expecting to see a severely negative real retail sales print tomorrow, not just because of today's inflation of 60 basis points, as we saw in the CPI report, but we're expecting to see even a negative nominal number of 20 basis points. So it's going to be a pretty rough one. Add into that the potential for a UAW strike, which would strip out any sort of bright spot that's existed in those 6 indicators, one of which has been payroll reports, the other which has been total employment as measured by the household sector, and things are looking a bit rough. Given the fact that we've also seen slowing wage growth, you would expect that personal income less transfer payments, another one of the 6 indicators, is also going to start showing a bit of weakness. And the final one, real PCE spending, given what we're anticipating for real retail sales in tomorrow's number, is going to get a bit rough.
So what's the big takeaway here?
The big takeaway is that everybody has this soft landing optimism, but the cumulative effects of rate tightening is really starting to show up in a bunch of different ways, particularly in the 6 indicators that the NBER looks at. Now, it does take about a year for the NBER to come around to what the data are saying. They're academics who are meeting in Washington.
I believe Bloomberg News described them as eggheads.
Leave that to the news folks on the econ side. I'm going to say respectfully that they're very intelligent and wise people making prudent decisions.
I said that in a respectful way, but thank you.
So a year from now, they could be getting together and saying, you know what? It's that retail sales report that came out in mid-September covering the August data that showed that this might have been the turning point. Now, we at Bloomberg Economics are anticipating a mild recession beginning at year end. And a big part of it is because when we think about the indicators that are so critical for the NBER and timing business cycles, we see where the puck is going, and it doesn't look that pretty.
I might just quickly here, because we only have a few seconds left. You know, if we see that negative retail print, the markets, are they positioned to rip higher?
Yeah, I think, Simone, there's a good chance they'll think of that as the bad news is good news type of scenario, that the rate hikes are definitely done and that a cut is the next thing on the agenda. I think that's a good call. That's probably true.
All right, a big thank you to both of you for joining us. Stuart Paul is Bloomberg Economics U.S. economist, and Bloomberg Markets senior editor Mike Regan. This is Bloomberg Business Week.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the TAPE podcast, a conversation with Stefan Bancel, CEO at Moderna.
If you think about it in terms of vaccines, we are 3 out of 3. COVID working, RSV filed to the FDA, and today positive flu data. In cancer, we have now products showing 44% improvement versus the best drug available to patients today, which is immunotherapy. In melanoma, skin cancer, and we're going to start before the end of the year a phase 3 study in lung cancer. So cancer, we really want to transform as well.
Tell us about the mRNA technology that we all kind of learned about a couple of years ago.
Sure. So mRNA, as you learned about, is an information molecule. We basically code in that molecule what protein we want your body to make. That will be your drug, your medicine. And in cancer now, what we have shown is a huge impact on survival and being able to not have recurrence of disease compared to the best drugs available today to patients. And the third chapter for us after infectious disease vaccine and cancer is rare genetic disease. We are now 3 out of 3 rare genetic disease showing positive data in kids with those diseases that have no hope today.
What is your flu vaccine? What is new? What is different? Just tell us about what you guys are bringing.
What's driving the stock
today? Why are people so excited about the flu vaccine?
Because first, we're going to be able to participate and provide a very high efficacy flu vaccine. What we've showed in actually other studies is that actually it's as good as the best vaccine on the market for flu. But what people I think are excited about is the idea of combination. Meaning we're going to show before the end of the year flu and COVID combined in a single shot.
Hear the full conversation on the latest edition of the TAPE podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. The Bloomberg.
When you get your news from Bloomberg, you don't just get the story. You get the story behind the story. How your EV's battery may not be as green as it seems. Why a decrease in global birth rates could send countries scrambling to increase immigration. You get context, and context changes how you see things, how you change things, because context changes everything. Go to Bloomberg.com to get context.
Business of Sports podcast, where the money is flowing inside sports around the globe.
To drop some knowledge on the sports agency business.
The latest on the PGA Live Golf Tour.
Who is the next U.S. emerging rugby star?
Michael Barr, Scarlett Fu, and Damian Sassower take you inside the decisions that power this multi-billion-dollar industry.
The balance of power in F1 might be shifting.
Bloomberg Business of Sports. Subscribe today on Apple, Spotify, and everywhere you get your podcasts.
No one knows where this market will go. Right now, it feels like a wild ride. But one thing's for certain, there's a way through it. And the experience and guidance of a Merrill advisor can help you get there. Because where there's a bull, there's a way. Find an advisor at ml.com/bullish.
Merrill, a Bank of America company. What would you like the power to do?
Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor. Member SIPC, a wholly owned subsidiary of Bank of America Corp.
These are the sounds of a dinner that almost didn't happen. A dinner now served, thanks to people like you. Due to COVID-19, 17 million more Americans may face hunger. Feeding America is helping our neighbors in need. And if you're able, you can too. Donations are being accepted at feedingamerica.org/coronavirus. Brought to you by the Ad Council and Feeding America. 200 food banks strong.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Hey, it's 3:21 on Wall Street. We do check markets all day long at Bloomberg. The S&P 500 index is fluctuating, the Dow lower, NASDAQ higher, and this update is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. S&P 500 index down now by 2 points, a decline there of 0.1%. We've got the Dow down 122, a decline of 0.3%. NASDAQ higher by 16 points, up now by 0.1%. A mixed inflation report this morning is reinforcing speculation that the Federal Reserve will pause its rate hikes but refrain from calling the end of its tightening cycle. 10-year yield at 4.24% with a 2-year yielding 4.97%. Spot gold down $5 the ounce now to $19.08. That is a drop of just about 0.2%. And West Texas Intermediate crude down 0.3%. 88.62 for a barrel of WTI. American Airlines Group has slashed its third quarter earnings outlook on a jump in jet fuel prices and payment of roughly $230 million in retroactive salary under a new contract for its pilots. But energy is certainly a source of concern for markets. What about those higher costs as a potential for bringing down prices? Regina Mayer is Global Head of Clients and Markets at KPMG.
Right now we're saying there's roughly a 3 million barrel per day supply versus demand gap because demand continues to go up. And we think OPEC's purposely keeping about 1.8 million barrels per day off the market. And there's no global relief valve in this environment. We can't rely on the SPR. There's no other source where we can turn on a tap and oil will flood back into the market.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Oil stocks are trading lower. ExxonMobil down 1.1%. BP, its ADR is down 0.1%. Chevron down 0.5%. EOG Resources down 1.3%. And Pioneer Natural down by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks, Charlie. Really appreciate it. And I love how you set it up talking about those oil stocks because we are going deep on oil right now. As we know, the world isn't getting off oil anytime soon, no matter how many EVs are produced or solar and wind farms are built. So to hit its net zero targets, the world is relying on a controversial technology pioneered by the fossil fuel industry. It's going to cost $4.5 trillion just this decade. We're talking about carbon capture and storage. It's also known as CCS. It's one of the most contentious solutions in the drive to cut greenhouse gas emissions. According to Bloomberg NEF data, just in the last 3 decades, governments and corporations have poured in over $83 billion into projects. But last year, the tech captured just 0.1% of global emissions. It is the subject of today's Big Take. It dives into technology's make or break moment. Steven Stepchinsky wrote the story. Joining us now is Mark Gongloff. He's an editor at Bloomberg Opinion, where he writes all about climate change. You can read this story and more from Bloomberg, The Big Take, at Bloomberg.com, and of course at Bloomberg on the Bloomberg terminal. Mark, good as always to have you with us. First of all, carbon capture technology. I mean, it sounds pretty sweet, right? You take the carbon that is, the produced, you capture it and you sequester it. How does it work, and does it work?
Well, it does work in theory, and in practice, in theory, it is a very simple thing. You take, you pump the pollution out of like a factory, say a steel plant or a coal plant or something like that, pump it into one tank, combine it with some chemicals that holds onto the CO2, pump that into another tank where you heat it up and you strip the CO2 out of it, and then dump it into a third tank where you like turn it into liquid, and then you put it on a ship or in some pipes or a truck or whatever you want and send it to a well and lock it underground. So it all sounds extremely simple, and it's been around for a long time because it is so simple, but it's not as easy in practice to turn it into like a big scalable thing that we need.
So wait, does it work? It works then on a small scale.
Yeah.
But has anyone been able to do it on a big enough scale that gives some confidence that this could be a big thing?
Yeah, I mean, it depends on how you define big enough. I mean, we're, as Tim mentioned, the numbers, we're pulling like 40 million tons of carbon out of the air right now with this technology. So that sounds like a lot, but we're pumping 40 billion into the air as we speak. And so, per year, that is. And so you've got some, there's like a thing in Norway that's pumping like 1 million tons under the sea. That's been doing that for like 20 years. This technology has been around a while. They're doing that. They've been doing that for 20 years to avoid a carbon tax. So with enough financial incentive, they have been trying to ramp up this technology, but nobody has done it at the massive scale we need. And we're going to need like 800 million tons a year almost by 2030 if we're going to have any hope of this thing like magically solving our climate change problems.
Why are companies spending so much money on it right now? Is it a result of governments pushing them to do so?
That's part of it. They're not pushing them like with a stick. They're luring them with a carrot. And so like the IRA, the big climate bill that we passed last year, you can get $85, I think, per ton or something for the carbon that you store, which all of a sudden that makes the technology like economic for a lot of these oil companies. And they're looking ahead and they're seeing, okay, Europe has a carbon market, and they've put a pretty substantial price on carbon. The U.S. is giving you a tax credit, and so you can take this carbon, stuff it underground, and then say, hey, you person, Tim, you're burning millions of tons of carbon. You pay me money for as a credit for the carbon that I'm storing underground, and all of a sudden you take an oil company that's like it's watching its primary product get vilified, and people are trying to avoid using it. All of a sudden it can take its sort of core competency, which is drilling into the ground and making holes in the ground, and turn that into a new revenue line, which is like carbon credits, storing carbon for other people that everybody wants to do right now.
Is there anything dangerous about putting carbon?
I was just going to add
under the ground?
I was thinking the same thing as Mark describes this. It's like getting sent in under the ocean, which sounds okay, kind of.
Well, in theory, until it doesn't work, or something like that.
Well, that's the thing. In theory, it makes perfect sense because all the carbon that we've sucked out of the ground for the past 100 years was underground for millions of years before that. So you can theoretically take this stuff and put it underground forever. But it's easier said than done. They've had problems. This story that's in Bloomberg today, which I really recommend. It's really interesting. Chevron has spent tons of money on this project in Australia, and they keep having problems with getting enough carbon underground. And so they made these promises. They got tax breaks to put the carbon underground. They said, we'll save this much carbon for you if you give us this much tax breaks. And then they haven't been able to put that much carbon underground. So they've had to go out and find other ways, buy carbon offsets and stuff. And so that's one thing. The danger of it, though, is in sort of the process that goes on beyond, because when I'm talking about moving carbon into different tanks and you're using chemicals and stuff, that also releases chemicals. You have chemicals that you gas off when you're like isolating carbon. The other thing is you have to think about these massive plants take a lot of energy. So in some cases you're burning more energy to capture carbon than you are actually capturing the carbon. So it's kind of like, what are we doing here? Why don't we just build more EVs or something? I mean, that's what the environmentalists say, and I have to say personally, kind of, there's a little bit of, I think we have to keep experimenting with it, but as it is right now, it kind of feels like maybe we should be doing something else with all this money. I don't know.
Well, that's a perfect segue to my next question, which is, you write a lot about climate change, you write a lot about energy, and you write a lot about the solutions to the crisis that we're facing. In your opinion, you write for Bloomberg Opinion, where does carbon capture fall on these list of solutions?
I think it could be very high. There's this carbon capture, and then there's also direct air capture, where you just stick a fan or a filter in the air and suck carbon directly out of the air. That also has a lot of promise. Taking carbon, planting trees, planting swamps, all that stuff, anything you can do to absorb carbon and put it underground, to me, is good, because at the rate we're going, we are not really stopping the use of fossil fuels fast enough to avoid more catastrophic climate change and warming happening in the future.
Meaning beyond net zero.
Yeah, exactly. We're not going to meet net zero by 2050 at the rate we're going. That's why that's one reason why some environmentalists do want the carbon capture, because, look, it is kind of a magic solution if it works. And so I'm all for continuing to experiment with it, and we need to do everything we can. So I wouldn't rule it out. But right now it needs to find some sort of they need to find some sort of magic solution for the magic solution to get it to actually be all that magical.
Well, but should governments be pouring the $83 billion that they've poured for the last 30 years into supporting, subsidizing, whatever these projects, if they don't work? I think the one in Australia was supposed to capture 80% of the carbon dioxide that was emitted, and it does less than half, I think. Is that a good use of taxpayer money?
Arguably, no, because you could argue that it is another form of a subsidy for fossil fuel companies. These big oil companies get subsidies in the forms of tax breaks and all kinds of stuff. This is another thing where, like, here, we're going to give you all this money to help you find this new business. I mean, you can argue that they're a massive, they're huge in terms of our economy. They hire a lot, they employ a lot of people, they generate a lot of economic activity, so we maybe owe it to them to help them out, give them a hand. And again, we're looking for all the climate solutions we can get, but we do have to make sure that the money's being spent wisely.
40 seconds left, Mark. What is the number one thing we can do for climate solution, in your opinion?
The number one thing is, there is no one number one thing. The number one thing is to in terms of what we can do as people, is make sure that we have decision makers in office that understand this issue and are willing to take chances to fix it, that acknowledge there is a problem and are seeking solutions. So that's the thing that we can do. I mean, obviously we can try to be green, but there's nothing will make as big a difference as, say, what Apple could do or what ExxonMobil could do. And so pushing to use our influence in that way is what we can do.
Did you see the climate-friendly Apple Watches yesterday?
Yeah,
okay.
Yeah, I did see that.
Okay. Hey, Mark, we got to go. We love it when you join us. Mark Ongloff is Bloomberg opinion editor, talking all about and writing a lot about energy and, of course, climate change. Let's get a check now on the latest world and national news. Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Senators have been meeting behind closed doors today with leaders of the big tech companies like Meta, Microsoft, Alphabet, and Tesla. They're seeking input on how to regulate artificial intelligence before it's too late. Elon Musk spoke during a lunch break.
I think the consequences of AI going wrong are severe. So we have to be proactive rather than reactive.
Musk calls AI a civilizational risk to humans everywhere. Republican Utah Senator Mitt Romney says he will not run for re-election. He made the announcement in a post today on social media.
I've spent my last 25 years in public service of one kind or another. At the end of another term, I'd be in my mid-80s. Frankly, it's time for a new generation of leaders.
Romney has demonstrated a strong independent streak while serving in the Senate. He was the only Republican to convict former President Trump in both his impeachment trials. Romney has also differed from his colleagues on issues like immigration. He supports a path to citizenship for children brought to the U.S. as children. Aaron Rodgers' season-ending entry for the New York Jets is reviving an age-old debate over artificial grass in NFL stadiums. We get more from Bloomberg's Nathan Hager.
It's not clear whether fake turf led to the Achilles tear that sidelined Rodgers just 4 plays into his season debut with the Jets, but the dots have been connected before. Odell Beckham Jr. busted his knee on SoFi Stadium's artificial surface during last year's Super Bowl in Los Angeles. About 14 of the NFL's 32 teams use fake grass. Replacing it would cost just $12 million, but maintaining a high-quality natural field can bring that price tag much higher. Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
When you get your news from Bloomberg, you don't just get the story. You get the story behind the story. How your EV's battery may not be as green as it seems. Why a decrease in global birth rates could send countries scrambling to increase immigration. You get context, and context changes how you see things, how you change things, because context changes everything. Go to Bloomberg.com to get context.
Neil Armstrong waited 6 hours and 39 minutes to step onto the surface of the moon. Jackie Robinson waited 20 months to play his first game with the Brooklyn Dodgers. And even DiCaprio had to wait 22 years to win an Oscar. You can wait until your destination. Don't text and drive.
Visit StopTextStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
News when you want it. Get the latest headlines with Bloomberg News Now.
Big job cuts are coming to the banking sector.
S&P 500 winners were outnumbered.
The top stories from our global team of reporters at the click of a button.
The deepening real estate slump in China.
U.S. officials pushing to help Ukraine.
Get the latest news when you want it with Bloomberg News Now.
One of the biggest public offerings of the year.
Listen on Bloomberg.com, the Bloomberg Business app, and anywhere you get your podcasts. Bloomberg. Context changes everything.
I learned patience from my adoptive dad. All he had to say was,
"Hey, you got this. Just breathe." Hey, we're pretty good.
Yeah.
Might have to start a band.
I got it.
Learn about adopting a teen from foster care. You can't imagine the reward. Visit adoptuskids.org to find out more. This message is brought to you by Adopt US Kids, the U.S. Department of Health and Human Services.
Oh, baby. These Bears
Get
are
the news
doomed.
you need to start your day in just 15 minutes.
We begin with the G20 summit in India.
Apple's looking to stave off a crisis in China.
Wake up with Bloomberg.
All these Bears getting all bared up. All these Bears getting bared up right now to the doom side. They should be buying dips down here. Y'all crazy? You got to get closing bars. Closing half-hour bars. Closing half-hour bars down here. You need this to do that to go down. You guys understand? You need this to do this. Well, another thing you could do is this. If you get a nice fat rejection down here, but you still wouldn't take the short right there, you'd take it down here. You only take the short down here. I don't know if they all know that yet, but yeah, they'll find out. They'll fuck around and find out, I guarantee it. Give me a squeeze under the bell, dog. It looks like a pin right here. There's an SPX pin somewhere in here. So likely got to get pinned, but that Bears are crazy, man. Yeah, you can if you're long calls, take the money right up in here. You can re-enter calls again above, but you take the money right here, like we're slap up into it. Take the money and then jump back on the train again above 446 and 60.
354 million to the buy side.
But it's gonna rip. So, well, the deal. I shouldn't say it's gonna rip.
This stream is sponsored by To The Tick. Get
Dealers are
3
gonna
days of
stop
points,
buying this
Fibonacci,
shit
and
as soon as we
market
get right
profile
here.
levels by signing up at tothetick.com.
They're parking the bus right now for you. Bulls still alive on a Wednesday. Still alive. How do you know if you can take a long, though? You want to be above here. This is kind of like the spot, right? Bullish above that green line. And you'll see that cross right there will happen. That's where you start getting long. Well, you got dealers are like, dude, like dealers are like, we're gonna park this bitch until we get some real money buying and real money selling. I need to turn on the reverb. It was a pretty good day today, though. This is a good day. Nice squeeze higher. Nice sell down. Just nice intraday. No big deals today. Just nice and easy. Parking the bus. Keep on squeezing right about here. If you're long calls, if you're making money, it's kind of the place. Can you get a squeeze up higher here? Yes, you can. But it gets dangerous as you get up there. It does get dangerous up there. Will I be on tomorrow? I'm going to try to be. I had some issues today getting into some of my files live streaming. I was afraid they'd pop up on screen here. And so, yeah, will I stream tomorrow? Yeah. Yeah, I'll stream tomorrow. I'll be on tomorrow, and I'll be on Friday for you as well. But I'll be more in this kind of a format until I'm done with what we're doing. You know, I want to tell you guys something. I know this is going to sound crazy to you, but there's always an emergency. There's always an emergency. There's always, one of the great things about the stock market is it's one of the most emotional things out there, right? It's like a soap opera. There's always an event. There's always something coming up. There's always some fire that needs put out, or the point that I make there is there's never a good time to do what we're doing. And so it could be next week, 2 weeks from now, a month from now. There's always going to be. And we always get past whatever that fire was that needed to be put out until the next one, right? So there's never really an opportune time to do this. If I said, I'll put it off until next week or the week after or the week after, there's going to be some new fire, right? We'll get over all of this stuff that's coming out in the next couple weeks, and then there's a whole new setup, right, for stuff that comes out. So just bear with me over the next couple days. I'm trying to get this beta stuff out to the admins and to a few select VIPs. If you're watching right now and you're like, yeah, I'm a VIP, you're likely going to get contacted by me. Do some beta testing as well. And we're getting this stuff launched. So the stream will be up tomorrow, but it'll be in a similar format where I'm not here with you. But you'll see the stream up the rest of the week, and then you'll see me back on stream hopefully by Monday. Hopefully by Monday you guys have like an ability to use this thing. And
330 million to the buy side.
Another month or so, you won't even be thinking about it. You won't even think about me not being here. Hell yeah, brothers. Do I need any help with anything? Right now, it's going so fast that the people that are helping are doing it right now. I appreciate the offer. Just at the moment, the people that are in place doing what they need to do, they're all rock and roll. They're all doing their stuff. It's just a ton of work. It's a massive ton of work. But I do want you guys to know that the next phase is here. And hang around and check it out because it's going to be kind of cool. You guys are going to have an edge. And so that edge is going to make a difference for you. So, yeah, you see how you take that money off that bar right there? See that little bar right there? You can take that money right there. And then your next real entry is above this white line. You could take one. Hold on here. So right here, you could, if this goes above, you could possibly take that line, but you still want it to come down. So you can take that one right there. But you can see the exiting right now. You can see the gamma in the market. Not on this screen, but you guys are getting gamma tools too. Do you guys know that? You guys are going to get some cool ass gamma tools. And one of the cool things is you're going to get written market updates from me in the morning and at nighttime. So you're going to get a bunch of cool stuff. Oh, and I got better news for you. Even better news. You guys ready for all the craziness that's coming? We've got, because we're launching this we now can we can now do the show on Sundays for stock picking. Binky's getting ready for that again because he's got the tool now. And we have someone joining us on the team to do nighttime videos, we think. So you're going to get a nighttime recorded video at nighttime. You're going to get written posts. You're going to get a Sunday stock show. You're going to get the complete package here. So it's pretty cool. That's right. Like, I forgot to tell you guys half the crap that's back there. You got a bunch of crap you guys don't know about. So it's going to be pretty dope. I'm pretty excited about this. All right, I'm going to leave this up until 4 p.m. Remember, today is Wednesday, so I'm not picking up my children today. I have some good news for you, too, though. After the 15th, which is after Friday, I will have an au pair or some shit's going to picking up my kids from beginning on Monday. So I don't have to pick up children or drop off kids at school any longer as of Monday. So you'll have me here at least at all times of the day. Right now with school starting, it's been a disaster. It's been like, all right, pick up the kids, drop off the kids, get the kids ready, put the kids to bed. Even like yesterday I was in a meeting and I had to stop because my youngest daughter is just back into school. I don't know if you got, like, some kids just are like they're on their own, right? They do their own thing. Other kids, you got to help them out, right? It's not that they're can't do the work or anything like that. And especially age matters. My youngest daughter, if you're a parent or if you're a child, if you remember your childhood, if you had a parent that was there for you during your childhood to help you get through school, it makes a difference. And the past couple of weeks, I've been able to spend time with my youngest. They need to know, as like parents, my wife spends tons of time with the kids. And when they're going back to school for a new year, it makes a difference when you're a supportive parent of a child's education. It really does make a difference. If you didn't have a parent that was there for you as a kid, you know what that means to you as a child, right? When your parents are not involved. And I don't mean like yelling at you or getting like when I get a report card and one of my kids doesn't have a great grade, I want to say perfect, but don't get mad at my kids. You have to ask them, right, along the way.
Sitting at 780 million to the sell side, just waiting for the final orders before we call it.
So that you don't wind up there with that low grade.
Market on close.
Before you ever get to getting grades.
45 million to the sell side.
Before you ever get grades from a kid, you should be asking your kid, how you do in school, testing them yourself, spending time with them, learning. It impacts them in their youth, so they don't fall behind as time goes on, right? If you're not checking in on your children, they go from grade to grade, and they begin to fall behind. That stuff collapses on them when they hit their like junior high, they hit high school, and it starts to accumulate, right? And you don't want that to happen to your kids. You want to give your kids you want them to be educated. You want them to, even if they're going to be an electrician or even if they're going to put a roof on a house, even if they're going to be a janitor, there's a great thing in life, whether you're wealthy or poor, that people can't take away from you. And that's education, right? If you get educated, if you become an educated person, that thing knows no class. Do you understand? No socioeconomic class out there can compete with an education. Whether you're poor, middle class, wealthy, does not matter. Being able to think for yourself, being able to be a critical thinker, all that kind of stuff. So this past couple weeks, that's what a lot of this has been. A lot of stuff that I've been doing is with my kids. Getting them readjusted to school. All right, you're welcome, Lead Farmer. Puts or calls overnight. Good question. So let's talk about that. So let's go over there really quick. You guys want to know? Sorry, I'm whacking on gum right now. You guys probably fucking hear it. I sound like a cow or something like that. So I gave you the review for tomorrow. there, you buy this dip right here, right? You know that. We're not below the yellow line. You know that, right? And for you to buy calls here, though, or for me, if I was buying calls here, I'm not going to buy calls here, but if I was going to, I would want to see this cross here, okay? There's always another trade for you. Do you understand? There's always another trade for you. But I would want to see this here, right? That confirmation on the 1 and 5 to take it higher. So like right here is where you feel good. This is also, and I say feel good meaning that, as a matter of fact, specifically right now would be right here. And the reason you want to be confident that we're going up, right? You want that reversal. You have to understand that as I want you to understand that as a seller or buyer of this market, right? So we'll switch to the 1 minute chart right here, and we'll take a look at that as well. So like this is a good sign right here on a 1 minute chart. This looks good too. I like this, but still want to see that reversal. You get what I'm saying? I like seeing this stuff. I like seeing the squeeze higher, right? You squeeze this higher right here. You get above the hourly trigger. This is the hourly trigger right here. I don't want to get underneath the hourly trigger, do I? Because I can get down here next, right? So I don't mind this trade right here. But then when you get, this is the hourly trigger, by the way. So on this turn right here, I want to see the squeeze above the hourly trigger. I want to see it pitter down here and then hit that 1 minute, right? And take it right there in confidence, right? Even if it rolls down on me. This is where, like, this is a form of, I follow rules. Why? Follow the rules because the rules, you can back test them and they print for you. You have an edge. You end up winning more than you lose on those rules. So just in here, what am I looking for to get long? You're on a 1 minute right here, the 466, right in here. So just, this is the green bar right here, right? This is the hourly bar. I really want to see a price up there. I want to see price get up there. I want to see it come back down, tell you, yeah, fuck yeah, we're going higher, and take that trade right there. Get that white line up there, going where the way you want it to go. Does that make sense? So boom, boom, you're off and running to the upside. The more you do that, the more successful you're going to be. So is that happening right now at this moment? No, right? We're not there yet. So let's just take a peek at it. We're squeezing up into it right now. See if I can get an exact target on this down here. So this HT right now is at, HT is, hold on here, 446.66 right here, right? So, I want to be above that right there. If you want to put your finger, like your trigger finger on the buy button above there for the initial squeeze, you can do that. I'm bullish here, though, by the way. We didn't break daily trigger. As long as we stay up here, this is the place to buy the dip. You can see it, right? If you're a buyer, where are you jumping in, right? You're jumping in down here, right? You're jumping in down here. Everybody tells you, I wouldn't buy that, right? I wouldn't buy that. I wouldn't buy that. Make sense? I wouldn't buy that. 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 Maybe not this here, but you know what I'm saying. You're down here. You were following trend right here. You're following trend now right here. And you're going to be buying this dip. You're going to buy this dip until it fails, right? Until this dip fails, you're going to buy that one too. So we're still bullish here. I guess we're still bullish into Friday, I should say. It's like your midterm 5-day outlook. We're bullish, right? Would I buy this? Would I buy this right here? Fuck no. I want to buy it above, right? I want that right there. I want to take that money. It's a nice, clean, easy trade. And I know the buyers are still here. And you do know today the buyers are there. They were there. They were there. They're right here. They're just parked right here. These buyers are likely dealers, just so you know. Okay? They just keep buying it up, sending it up. They're on your side. Looks good. You know my take on rest of Friday. You know, and I want you to know something here. Maybe you don't know this. So I'm bullish here. I know that I am in the minority. I realize. Let me see if I can put my screen up here. Hold on. I realize right now that what's going on here. There we go. So I realize that look at my hair; it's all fucked up. I look like I'm bald or some shit. So, where's the chat box at? Okay. Oh, nope, chat box. Make that smaller. So I want you to know that. Oh, look at that nice squeeze right there, baby. Just keep on fucking squeezing. So, you're like, I want you to know something. Like people are asked, I get asked a lot. Like, are you bearish, or what time frame are you bearish on? You know, on a higher time frame, like if I'm looking at a 1-day chart into end of year, I see the roll. Like I see it. I don't know that. I don't believe that it's right now just yet. I do see the roll though. I see the pause roll. I see all of it. Do I think it's right now? No. I'm going to give the benefit of the doubt to the bulls until trend is broken. I have to. And you should too. Even if you're a seller, you have to give the bulls to like the last fucking note. And I know it sucks to say that, but you do. And the reason you do is because you know what happens. You know what happened in 2020. You know what happened in 2021. You know what happened in 2023. You will be wrong 10 times, 20 times. I was talking to a friend yesterday about a famous seller. And this famous seller was assigned fame for a major market role. And he had other Twitter accounts. And he had been calling for it all of 2020 and all of 2021. Another roll down. And he was wrong like 30 fucking times. And he made another account under another name, and he got it right. You know, you're not him. I'm not him. You're not him. What you want is not what he wants. Does that make sense to you? So if he's just looking for a little bit of internet fame, that's different than you. If you're a seller, you got to see some shit. Like you have to see trend get broken to a major trend to the downside. Like you need to see. Let me see if I can come over here and show you something. Hang tight for a second here. Sorry about that right there. So hold on a second here. I want to show you guys something. So this is the we're going to go to the trigger screen here, okay? And we're going to switch to a day chart. And I got you got to know this. If you're a bear, you got to know this. And you got to trust me on this. You can backtest this to the beginning of time, okay? Like literally the beginning of the stock market. The beginning of the stock market. The beginning. Listen to me closely. Okay? Think about that guy. Watch this orange right here. Until we get a confirmed break of that orange with this yellow right here. Right? We are not in any kind of risk off. Any. None. None. I don't care how many times they call it. They can call it and call it and call it until they're fucking red in the face. Can't call that shit until price begins, or until the yellow line begins to break down underneath here. I can't count the number of times that this has not happened, okay? And it's like hundreds over the past couple of years, like 2-3 years, even with the down year last year. If you look at it over like 10 years or 30 years or 100 years, it's thousands of times. Thousands. So the chance for you calling it is not on your side. Does that make sense? It's not on your side. It never has been. It never will be. So if you want to be that top caller, you wait until that happens, and you call the top and say, hey, we crossed the yellow line. Is over. Not even that. You can, the moment that happens, you can say we're in crash risk warning here. Okay? And then when you start to call the actual crash, when you start to call that actual crash, you actually break trend, and that's below that monthly right there. See that big month right here? This is when you get an actual cross. Watch me closely here. When you get that cross right there, right? You get that crossing down right there, and you break that blue line right there. This is, so you've got, I'm going to give you 3 examples here. This is for any time, okay? You get the pullback, right? So this is I'm going to show you the pullback. So here's the pullback, right? Here's the correction, right? Here's the crash warning, right? Crash warning. And this is the actual crash right here. So this is where you start saying we are crashing. This is where you start saying we are in a crash warning, right? And when you see this cross here, right? See that cross, that orange line? That's really bad. But if that yellow line, even if price goes down there, listen to me closely too. So let's say you have price go down here, but the yellow line does not cross. That's not a crash warning. That's just a correction, okay? And we've been buying time in this market over the past 4 or 5 weeks, right? Where instead of getting your big old move down to the downside for a correction, you didn't get it. You didn't get it back here. And as time is passing, the bite in your correction is becoming less and less, right? Time passes, and the toothiness of your downside expectation is very low. So when you get this, you'll be able to see it and understand the concepts that I'm telling you. So, like, I have to give the bull the last benefit of the doubt is the point that I'm making to you. I don't want to give it to the fucking bulls because the bulls are on fucking page 10 or like the last fucking chapter, the last few pages of their book. They don't have a lot of time left and a lot of pages left in their narrative. But until that happens, right, I'm not going to give the narrative to a bear until that happens. If and when that happens, it's the fucking bear's book. They're going to start writing a book. You're going to write 10 chapters. And from that point, you're going to then get bearish. You know, and if you want to get bearish, like truly bearish, you have so much time after this all happens here. You know, you didn't need any of this to take on that narrative, and you didn't need any of this to make money because the big money is down here. And they're wrong so fucking much. It's so fucked up. It's not fucked up. It's that you don't know what everyone else's motivation is, or why they're saying it, or what they're looking for, and that kind of stuff. So, if you want to know if I'm bearish on like a higher time frame, much higher, sure, I see the market slowing down. I see this happening right here. I know that we're coming into volatility, good and bad, as we reach up into those previous highs back from January of 2022. So I get that. I get it's going to be volatile. Do I think that this is the top? I don't yet. So the bulls have not given up that narrative yet. Will they? I don't know. If they do, I'll know what to do, though. If they give up that narrative, we start breaking through. That yellow line breaks through the orange line line breaks through the blue line, and price is heading down with it. Yeah, fuck yeah, I'll get bearish. But I warn you, man. Some of you guys are new traders and new investors. This is a fair fucking warning to you. They are wrong. Dude, these people are wrong. Like hundreds of times. Hundreds. Don't get caught. Don't drink that Kool-Aid. I've been there. I've drank that Kool-Aid. Don't fucking do it. Don't fucking do it until it happens. You can slam the sell button afterwards, but do not slam that sell button before on that big macro picture. If they're gonna bullshit us with that scam like higher for longer, I heard that on that Bloomberg radio today. Those numbers couldn't be any better for the market to go higher. Trust me, any better. The more they make you believe that they're going to continue to make or raise rates, right, and do what they're supposed to do, this market will trade sideways and up through that whole, not that whole, but a whole bunch of that process. So I know that I know that you want to hear like, I know you want to hear like this is bad news today, this morning, but it really isn't. Your bad news is when we're down into that 2% inflation. That's when the bad news comes, historically, and the unemployment rate will be higher at that point as well. So when that happens, I'd be getting fucking bearish. I'd be getting really fucking bearish. And I realize people want to front run it too. I realize that a seller can begin to front run this news, and they'll eventually be right in 6 months. I realize that we're coming into traditionally weak part of the year. It's like time for a dance and all that kind of stuff. But you as a market participant, I want you to just not drink that fucking Kool-Aid yet. Please don't drink that Kool-Aid yet. There is a time to drink that Kool-Aid. When that time comes, when that roll happens, you're a fucking bull, get your fucking bear suits on. I warn you of that too. When that happens, when you see that, what I drew for you, when you see that happen, I don't want to listen to a bull. I'll listen to you for like a squeeze or something. But as far as us going down or selling down, or that's the big roll we're looking for, I'm not going to want to hear it from a fucking bull. I will fucking ban you if you're a bull doing that shit in my stream. Like I banned the bears, I will come after you. I'll be like, fuck you, you're out, right? Not on a squeeze or anything, but like if you're trying to tell me we're going to flip back around, that kind of shit, we usually go down, right? But like 90% of the time we go down if that happens. So, so I don't know what to say on that topic, on that topic of like time frames for bullish bearishness. So I see it down the road. I see what you're saying if you're a bear. On a shorter time frame, I have to give that narrative to the bulls, right? That they're still alive. That sucks, but they're still alive. And I told sellers already this morning, I said, do not get caught. These fucking dealers will pin this shit, accumulate all that news, and then maybe roll it afterwards. And another scary part of that is if any of that news as a whole begins to make this shit squeeze, and we're heading into the end of the month, they will run this shit right up into that trigger. They will pin that shit right into the end of the month. It'll make your head spin if you're a seller. So just be sober as a seller. I get what you're looking for as a seller. I know you're looking for the rollover. I understand. You're getting there. You are getting there, but you're not there yet, are you? You're not there yet. Okay. I want you all to have a great day. I will see you all tomorrow morning. I even look like I got a V in my hairline, but I actually don't. I don't know why that looks like that on. So I'll see all of you guys tomorrow at 9:30 in the morning. No fucking 8 a.m. That shit ain't happening. I got a wife and kids, man. I get laid in the morning, dude. My wife loves me. Then my kids wake up in the morning. They love on me. Wake up, give me hugs, give me kisses, have breakfast with them. You guys want me here at 8 a.m. You guys are savages out there. I'll see you all tomorrow. But I will try to have it up by 9:30 at least for you. So I will work on that for you, and I'll see you guys tomorrow at 9:30 in the morning. Look forward to this launch with you guys. Stick around, man. Any of you guys that have been here since day one, I want to tell you guys something. One last thing before I get out of here. Any of you guys, right? There's some people freaking out in the background. I see people like having panic attacks and stuff. I don't know why. You've been sticking around here for 2-3 years and then you implode with stress. Just hang out. We're almost there. Like, see shit through to the end. And we'll get there. I promise you. I will lead you there. I assure you we're going to get there. So hang tight. I'll see all of you guys tomorrow. 9:30 in the morning. Hell yeah, babies. I love you. See you guys all tomorrow. Yeah, man, just chill. If you want to abandon ship, abandon it after we launch and get where we need to be. I'm shocked that people have stuck around for 2-3 years and then now they're all of a sudden out. So they're either fucking freeloaders or they want everything free. It's all fucked up. But my mind is blown. Stick around until afterwards. And if you don't like it, then bounce. I get that. I actually understand that. If you're like, hey, I liked being here for when everything was fucking free for fucking 3 years and I can't do it, I'm fine with that. And there'll always be an option for a free person around here. Always be a free option. So if you're like, hey, I can't get by without you, there'll always be a stream up during the day for you. I'll always be here for you. So we're just expanding. That's all we're doing. And there are people that want to support what we're doing. Understand that. And this has to be sustainable. I need you guys to understand something, that there are people out there, right, that are freeloaders, and they could give a flying fuck about if this is sustainable or not. As soon as it can't be, or as soon as it's unsustainable, they move on to the next thing. And as soon as that's unsustainable, they move on to the next thing. So I need you guys out there to understand that this will go away if it's not sustainable. If this does not stay sustainable, I turn it off, all of it, because I can't do it anymore. So I need it to become sustainable. And there are admins out there. There are moderators. There are people that provide alpha all over the place. They provide it inside the posts that we make on Twitter. They provide it in the Discord. They provide education. I mean, you're talking about a ton of fucking people that work their asses off, spend money and time making sure that this is something for retailers. So it has to become sustainable, you know. And if you're like, hey, I can't do this in a month or two or whenever this happens, I understand and respect that. But don't get in the way, because we're going forward with you or without you, one of the way or the other. Okay? So I'll talk to you guys soon, and I can't wait to see you tomorrow at 9:30 in the morning. Have a great night, guys, and I'll look forward to seeing you in the morning. If you guys have any questions you want to ask, anything like that, let me know. I'll here for another minute or two to answer questions if you have them. I love all you guys. Dude, we're here because of all of you. Like, this is all due to what you guys want, have, and need. So that's what we're here for. Dude, wait until you see this tool, man. It's so badass, dude. It is so badass. And, dude, we have better than this tool that's done and ready to go. I just can't release it yet. I'm afraid to. It might just have to be, like, handed off to you guys, like, short the fuck out of this company for, like, 6 months, or long this fucking company for, like, 6 months, any of that kind of stuff. So we got some really cool stuff coming to you. Has to be sustainable, guys. Dude, I didn't realize a lot of this. I used to be that guy. Be like, this is free. I can use it and use it and use it. And then I was never on the other side of it. And then when stuff would go away, I was without a lot. I was lost, and then I would have to go find something else that was new, that was free. So I understand. I've been there. I've been on your side of it, so I get it. Yeah, it has to be sustainable. I can't do this anymore. Like, the time, energy, it's just it's overwhelming. It's mind-boggling. So I need to be able to bring on some help. I need to bring on some other talent. I need to bring on some other content creators. I need to bring on some better alpha people, all that kind of stuff. So, and you guys will get that from that. So there's a benefit to this.
But refrain from calling the end of its tightening cycle.
All right, I love all you guys. I will see you guys.
500 was little changed. The Dow Jones Industrial Average underperformed. American Airlines led industry losses after cutting its earnings outlook amid a jump in jet.
So now there's not many of you here anymore. I can say this. So let me ask you guys a question really quick before I go.
Biggest US companies
hold on here. Hold on. Let me ask you guys a question. Are any of you? I don't want to get killed somewhere. That's why I'm asking quietly right now. Are any of you planning on going to TwitchCon? Is anybody out there planning on going to TwitchCon in Las Vegas? Because I have a ticket to it. I don't know if I'm going right now, but I'm interested in going. So I have a ticket to go. Are any of you planning? Do any of you live in Vegas or near Vegas? Does anybody live in California, Utah, New Mexico, Arizona? Any of you guys like 3, 4, 5? I lived out west. You guys like 3 hours is nothing for you guys. I'm wondering if any of you are going. Because if any of you are going, I know it's a disaster too, but if you are going, I'd be interested in possibly going. Yeah, I don't know. It seems like it's a lot of gamer kids, or not kids, but just gamers. I shouldn't say kids because like the people are all different ages. But you live in Switzerland. I should have went to the Euro I should have went to the Euro TwitchCon. I'd like to go because I don't know what I'm doing on Twitch, and I need to learn. Like, so if I went, I feel like if I went, I would at least get like 3 or 4 days to get some better like education and stuff on what I need to know about Twitch. So you're across the pond. Oh, dude, you know what we should do? We should go to I would love to go to Davos, and I would like to go to out to Nebraska to what do you call it? The Vanguard Buffett shit. I'd like to go to that. I'd be interested in that too. That trip with you guys. So, anyways, I'll see all of you guys tomorrow. No kidding. Hold on. Let me write you down there. Bella Gendry. Hold on. Bella Gendry. Fitness does it. Or his friend does it. Twitch for a mentor. Yeah, I've got no idea what I'm doing. I'm lost. And the one thing I would say, though, is I don't want to give up who I am either. There's a part of, like, I want all the training, but I don't want to give up who I am. I don't want to be a fucking furry with the t-shirt, the button-up shirt and the parted hair, cut my hair and never swear and all that kind of stuff. It's just not who I am. I mean, I can be that person. I'm that person in business, but I'm not that person. And I don't like the ingenuineness of it. I can pick it out in people, and I don't like it. So this is me. I wrote down your name, brother. I'm going to send you a DM. Yeah, I'll see all of you guys tomorrow. Be Legendary Fitness. I appreciate it. Yeah, exactly. Exactly. Be Legendary. That's exactly what I'm talking about, brother. Or sister, if you're, I don't know who you are. He, she, them, or whatever. Yeah, I'll see all of you guys tomorrow. I'll see you guys tomorrow at